Yes,
Alex Carr. Not far from the headlines quite often.
He made some very interesting comments about the West being the best, with the exception of our universities, which he has a very negative opinion of. We don't need to get into that. Obviously, this is all techie stuff, software stuff that we've been talking about. But I noticed John Deere is another stock that you like. It goes the other way, and they've had real problems with grain prices last year coming down substantially. Farmers have taken a real hit.
Yeah, they have. Look, anytime you've got the kind of commodity exposure that John Deere has, it's never going to be an easy ride. It's going to be bumpy. But if you take a big step back on this one, and I look at this truly over a 10-year view, not a near-term view, I say here is an absolute titan in the ag hardware business and the machinery business. You mentioned earlier, Matt, the Apple iPhone replacement cycle, right? There is going to be an agricultural equipment replacement cycle. It's going to get more pressing. It's going to be more data-driven. And John Deere is the tip of the spear on precision ag. And I think as AI gets infused into that, this is one where you've got a manufacturing business that really stands to gain from it in a very specific and tangible way.
And a stock that's actually fallen as well. Again, a stock that's fallen. This one down almost 6% year to date. So you think it's a good entry point?
It's a good entry point, I think. But again, it's a long-term hold if you're really willing to ride out the commodity cycle with it.
All right, Ann, great to get your picks. Thanks so much for joining us. Ann Barry there of Threadneedle Ventures. Coming up, investors weighing political risks this week.
The stakes here, I think, are very high, not only politically, which is obvious, but I think also for markets. You know, you all talked about, sadly, it's politics, but, you know, politics and U.S. political stability, you know, is an underpinning of the market that's been taken for granted so long that most investors don't even think about it.
That conversation next, with so many elections and a big debate coming up this week. This is Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
Northern Trust has the expertise that I need.
Deep expertise.
They give me access to experts with the exact skill set I need.
So I can meet the ambitions I have for my wealth.
That's why I work with Northern Trust.
Northern Trust, for where wealth goes next.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Outside your control. How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
The stakes here, I think, are very high, not only politically, which is obvious, but I think also for markets. You know, you all talked about, sadly, it's politics, but, you know, politics and U.S. political stability, you know, is an underpinning of the market that's been taken for granted so long that most investors don't even think about it. That's starting to be tested now, not just in the United States, but the UK, France, and beyond.
That was Terry Haynes of Pangea Policy speaking earlier on Bloomberg Surveillance. The first presidential debate between President Biden and former President Trump is scheduled for Thursday night in Atlanta. Joining us now with more on the political risk this week is Anne-Marie Horton, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. So it's going to be something everyone will want to tune in for, although it's past our bedtimes, and I would think past theirs as well. Do they make that 9 p.m. start so that people on the West Coast can still watch it at a decent time?
I think so. Also, it's prime time. But I think you're alluding to the fact that it's the first time in U.S. history that the two major candidates for the major political parties are the oldest we've ever seen. So there's a lot of firsts in this debate. Also, the fact
they were the oldest last time, too.
Also, for the fact that this is the first presidential debate that's this early on in the cycle. So this is really going to kickstart all the noise we're going to hear and trying to separate, at least from a market's perspective, what Terry Haynes was talking about there, some of the rhetoric from the policy as we gear up for November 2025.
So what will we see in terms of the major differences? Because a lot of the policies that President Biden has pushed forward, I think of the most recent tariffs, right, or trying to bring production, manufacturing back to the U.S. have been a continuation almost of Trump policies.
Yes, there are some policies where we have seen this administration continue on from what we saw from Trump, basically a handoff when it comes to things like tariffs, or we've seen this administration actually take a step forward when it comes to export controls on China, and when it comes to tariffs. We just had the release of e-tariffs of Chinese imports coming in, EV imports coming to the United States, 100% on those tariffs now. So you'll hear a lot of the same rhetoric potentially on China, but there will be vast differences when it comes to things like inflation, at least from the noise. Former President Trump is really going to want to paint Biden as destroying the U.S. consumer when it comes to inflation. Over the weekend, he pulled out this prop, which you're not going to be able to do at the CNN debate, of a little miniature Tik Tok and saying this is what it's like living under Bidenomics. And he said he's going to have Maganomics on day one. So he's trying to really tap into what we see in polls, this concern over the economy and inflation. And for Biden, I think one key thing that's likely going to come up, and he put out a new TV ad today about it, is abortion. Today marks 2 years since the Supreme Court decided to strike down Roe v. Wade. And this is something that the Democratic Party really wants to try to instill this concern, especially for women and especially in those swing states.
But at the end of the day, for most voters, it's all about the economy. It's all about taxes, what they actually have to pay out of their pockets, right? How will they differ in that term, in that sense?
Well, when it comes to the economy, this still remains to be the number one issue, and inflation still remains to be the number one issue when you ask people their concerns about the economy. And this is something the Biden camp has been trying to explain. Maybe the PCE deflator on Friday will help them. But it's really the issue with the inflation is it's hard to explain that the rate inflation is coming down. People want to see prices come down, and that's not going to happen. Biden is going to come out and call for an increase, likely, he'll say this in the debate, on taxes of those in the millionaire class or the 1%ers, and also raising of corporate tax rate. Trump is going to do the opposite. He wants more tax cuts. 2025, Wall Street Journal editorial is a great op-ed today, actually taking a quote from what Senator Warren told Bloomberg, which is 2025 is tax Armageddon. Tax policy is going to be huge next year because this is when the Trump-era tax cuts, there's a decision that Congress needs to make whether or not they're going to continue them or not. But Biden has said he will not increase taxes on anyone that's making less than $400,000 a year. But these are some of the policy rhetoric we're going to be on lookout for.
Right. The state and local tax deduction is supposed to sunset in 2025, so that's an important issue.
I know you're looking forward to
Well, I think, a lot of people are paying more taxes because of that, certainly in New York. Immigration is still a big issue as well, right? And we saw a flood of immigration throughout the Biden presidency. He didn't really try to make any changes until at the last few months. How is he going to win on that issue?
Well, he's going to try to talk about the fact that he thinks what Trump wants to do in terms of immigration. Trump has even talked about deportations. He's going to try to paint that as inhumane. And he wants to remind Americans of potentially some of the rhetoric that unnerves some of the middle of America when it comes to Trump's policies. But what's going to be difficult about this debate is that, of course, it's going to be a lot of noise. You're going to have to really sift through to try to get the policy differences.
Just back from the G7 in Italy, right? You saw how Meloni, I guess, led that. What do you think about the possibility of the far right winning in France? Because it seems like she's doing an all right job in Italy.
Well, I think what Marine Le Pen is trying to do is basically use the blueprint that Giorgia Meloni has set out. Basically throw enough red meat in this rhetoric domestically, but she's not a Eurosceptic, and be able to, on the international stage, work with all the players. And at this point, it's the people who were saying that Giorgia Meloni, they were trying to outcast her, saying that she's huge Eurosceptic. She's actually now the queen maker when it comes to what's going on in Brussels. So this is something you see Le Pen trying to do, but what happens in France, of course, you know that President Macron is still going to be the president. So what you're going to have to see here is cohabitation if we were to see the right do well, which polling shows it looks like they're going to.
I have to say, it's one of the most fascinating stories, for sure. Anne-Marie, thanks very much. Anne-Marie Horton, they are co-host of Bloomberg Surveillance and our chief political correspondent. Let's get back to the markets now for some of the price action this morning. We go to Bloomberg's Abigail Doolittle. Abby, what do you see?
Speaking of fascinating, let's take a look at the sector action, because right now we have the S&P 500 up ever so slightly. Moments ago, it was down. The reason this is fascinating, 10 of the 11 S&P 500 sectors are higher, but it's tech that's down 0.9%. A moment ago, down 1%. That's why you had the index down just a little bit. This speaks to that importance of that rotation everybody's speaking to. Because of the weighting of tech to the index, you can have all 10 sectors higher, but if you have tech down, you can have the S&P 500 up just slightly or down. Speaking of down, we do have the Bloomberg crypto index down in a significant way over the last, let's call it 2 weeks or so, nearly in a correction. Again, perhaps a tell on a risk on, risk off, or as you were making the point, Matt, perhaps around the Fed.
All right, Abigail, thanks very much. Coming up, the market moving event you need to be watching this week. That's next in our trading diary. This is Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories, and bring your truck to life. Real truck.
At AbbVie, we're driven by people, passion, possibilities. We care about delivering what you need, because your best life is our life's work. That's why we create medicines and solutions that put impact first, and why we find answers that make lives better. Relentlessly helping over 60 million people, and counting, to live their best lives. People, passion, possibilities. AbbVie.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY. The symbol of high yield done right.
Investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Time now for the trading diary, what you need to be watching today and this week. We get the June Dallas Fed manufacturing data in just about 30 minutes time. Tomorrow, the Bloomberg Invest Conference kicks off here in New York City. And on Wednesday, we get May new home sales data. Thursday brings the first debate between President Joe Biden and challenger former President Donald Trump. We round out the week with PCE on Friday. This was the countdown to the open. I'm Matt Miller. This is Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Saturday mornings, I understand you have off.
Yeah, Saturdays is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm onto a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
All right, we are 30 minutes into the U.S. trading day on this Monday, June 24th. Here are the top stories we're following. Keeping up with Nvidia is getting harder to do. Wall Street analysts struggling to figure out the chipmaker's revenues in the age of AI. Vera Bradley's brand refresh, the 40-year-old company planning a full 360 brand transformation coming in mid-July. Will that be enough to bring shoppers back to Vera Bradley? CEO Jacqueline Audrey joins in just a bit. And Trump's VP pick has turned into a public contest. From Marco Rubio to J.D. Vance to Tim Scott, we'll preview the potential picks for Donald Trump's running mate. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets on this Monday. There is a little bit of green on the screen behind me. If you take a look at the S&P 500, currently up by about 0.3%. Of course, building on a 3-week rally, you can see. It's a different story if you take a look over at big tech. Of course, the NASDAQ 100 down by about 0.1%. And then you take a look at the Philadelphia Semiconductor Index, even more, down 1%. And that's all because of Nvidia right now, extending losses down about 3%, with the chipmaker on track to wipe out nearly $300 billion in market cap. Bloomberg Technology co-host Ed Ludlow joins us now from San Francisco. So we're seeing a little bit of a breather when it comes to Nvidia, but I actually want to go back to the company's fundamentals. It's really striking. If you take a look since April 2023, the company has managed to beat even its own forecasts by about 13% on average. And when you think about what that means for Wall Street strategists, it just feels like this is one company in particular that's very, very hard to forecast.
Yeah, it's about the predictability of top-line growth, and not from a sort of surprise or negative standpoint. The idea that Nvidia's just had, incredible growth. I don't know whether you use MODL on the Bloomberg terminal or EEO, whatever function you do, but if you change the periodicity to just quarterly, had this bizarre situation where, and remember the fiscal years for Nvidia don't line up with the calendar year, but if you go back to the fourth quarter of fiscal 23, you had sort of negative year-on-year growth. Going into fiscal 24, you then jump, therefore, to more than 200% top-line growth. And referencing the data point that you just mentioned, what tends to happen is that on average, in that time period, revenue comes in on average 13% higher than management forecast. So you have this situation where management doesn't know how much sales is going to grow because they're supply constrained and the demand is so great for AI accelerators. And then you have the sell side and buy side who are trying to fudge the math and also go with their gut.
And then, of course, you have investors trying to decide whether they chase this momentum after, 200% or so. Of course, it just sounds like a wild goose chase. But let's talk about the market share, because this comes from a Nir Kaser Bloomberg Opinion column saying that the market share for AI chips when it comes to Nvidia is around 90%, which is just shocking, Ed.
Yeah, so, chasing momentum, right? This is a stock that's up 156% year to date. But if you believe the thesis that there is this ginormous addressable market for AI accelerators being high-performance GPUs that you can use to train AI models, Nvidia is the only real volume producer. There are two other players, which are AMD and Intel. AMD will likely do $4 billion of sales this year for their AI accelerator, the MI300X. And Intel, if they're lucky, will do $500 million. But it's not just the percentage or share of the market, it's that Nvidia's continued to grow its top line. It's been able to scale its output of its AI accelerators in an environment where there is supply constraints. Supply constraints is a term that I'm used to using in the automotive sense. In other words, demand is greater than the ability to supply. So the interesting factor is that if you believe Nvidia is supply constrained, if they were somehow able to make more supply from TSMC, their contract manufacturer, then top-line growth would be even greater. And this is the chasing momentum versus actually they could do much more argument.
It has just been amazing to follow. I know you're going to be doing more of that at 11 a.m. Eastern. Of course, that is Bloomberg Technology co-host Ed Ludlow in San Francisco. Always appreciate your reporting. And let's bring this conversation to the broader markets, because joining me now, I'm pleased to say, we have Katie Nixon, Northern Trust Wealth Management Chief Investment Officer. And let's stick with this momentum chase that we were just talking about with Mr. Ed Ludlow there. When you think about the market right now, the S&P 500, record high after record high, how much is this just a momentum-driven market, and specifically an Nvidia momentum-driven market?
Well, clearly Nvidia is leading the way, Katie, and thank you for having me this morning. But as you just reported, investors are kind of chasing not just momentum, but fundamentals. The persistent outperformance of Nvidia, along with the attributes that you just referenced, they could be even doing better if they were able to get more chips. So I think there's a fundamental underpinning to what feels like just a momentum-driven market.
And so how does that compare to 2021, say? When I think about real heavy momentum chasing markets, 2021 comes to mind. But it does feel, to your point, like things are a bit different now. Of course, you have the fundamentals to match it. Some of those chief bubble features, you think about that IPO rush that we had, that M&A rush, not really in this market right now. Should that give investors a little bit of comfort here?
I think so, Katie. I mean, look, the fundamentals are very strong across these large, very dominant tech companies. And if you look back to prior periods where we worried about momentum becoming too optimistic and maybe irrationally exuberant, you can look at some fundamental valuation measures which would give you comfort. For instance, price to cash flow is nothing close to what it was at prior bubble levels. And you referenced 2021, and some of those momentum stocks then didn't even have cash flow, had very low earnings growth. So I don't think it's like 2021. I certainly don't think it's like a bubble that we've seen in the past with 1999 and 2000. But what I will say is a concentrated market is just more fragile. Right? There's just more opportunities for something to go wrong when you're so overweighted in those top stocks.
Well, let's talk about another potential source of fragility, because it's interesting. You take a look in ETF land, specifically at SPY, at the Qs, short interest, near record lows. It feels like everyone has rushed to one side of the boat. And even with that strong fundamental underpinning, of course, it seems like it's the companies that actually can back it up that are getting rewarded. But with that type of top-heavy positioning, what does that mean?
Well, it's really interesting. There is certainly some complacency in the market now. You can look at the VIX, you can look at short interest. But what I will say is, as we get further along in this calendar year, we anticipate more of the 493 or 495 stocks in the S&P 500 to start carrying their weight a little bit more. As you know, last year was a terrible year for earnings outside of the Mag 7. This year, the first quarter, the Mag 5 really held it on their shoulders, but we anticipate second quarter, third quarter, especially as we get into the fourth quarter, we're going to have a broadening out of earnings participation, and that's going to support the market. So it's not irrational to be relatively constructive now on equities.
But what is the catalyst? That's what I always come back to. People tell me, especially when it comes to that broadening out, it's going to be, of course, the beginning of the rate cutting cycle. But if we're 3 months out from the Fed's first rate cut, shouldn't we be seeing that rally start to begin now?
And we might see it start to happen relatively shortly. I think there's still such strong momentum behind these tech names. But as you've noted last week and certainly today, we're starting to see that wobble just a little bit. But the broader market is still doing okay. So I think you're already sort of starting to see that. And last week, we started to see some more green shoots with value outperforming growth, with small outperforming large. So I actually do think it's starting to happen. But it's not happening consistently. It's happening kind of in fits and starts.
In fits and starts, that's a good way to put it. It feels like it's been in fits and starts really since last October, but maybe we'll get a more sustainable broadening out here. I want to stick on short interest a little bit more, because you mentioned in your notes that you take a look at Nvidia, for example, you are starting to see short interest tick up a little bit. And Katie, in thinking about that, of course, not buying any more Nvidia is one decision to make. Selling Nvidia is another decision. And then outright shorting Nvidia is a different decision entirely. How dangerous is it to short some of these high-flying momentum names right now?
Well, I would say I would go very cautiously in terms of shorting anything that has the combination of momentum, but also very solid, very strong fundamentals. And we're going to continue to hear strength out of AI, out of Nvidia, out of AI adjacent names. So I would be cautious here in betting against those companies.
Would you short at all? Is this a market where you can short, or is it just not the decision to make right now?
Like I said, we're constructive, Katie, on equities here. It's just sort of the combination of this soft landing scenario, which seems to be playing out. We're probably here on Friday that inflation is, after a little tantrum earlier this year, inflation is continuing to disinflate just at a very good pace. We'll probably get a 2.6 core PCE, which is just on the Fed's target, which is going to allow the Fed, not require the Fed, allow the Fed to start cutting rates for the right reason. So I think the setup for equities actually is really, really, really positive. And then again, I refer back to my comment about the broadening out of the earnings. If we're expecting 11 to 12% earnings this year, that should really support stocks here.
All right, Katie, sit tight for just a couple minutes. We're going to come back to you, but let's take a look at what's moving underneath these markets right now with Bloomberg's Isabel Lee. And speaking of momentum, it seems like it's starting to come out of some of these crypto names.
Definitely, but for the worst, because we have crypto-linked shares edging lower. We have MicroStrategy, Marathon, Coinbase, and all of those really going down because Bitcoin just saw its second worst decline this year, and it hit a 1 month low. Remember the days when it was up around 74,000? Well, now it's back to around 61,000. And the thing is, a lot of analysts are citing it to the macro because the Fed isn't sure when it will cut rates, investors are uncertain, and it calls into question whether Bitcoin is still a hedge. Obviously, also, this is a reflection of the cooling demand of the big spot Bitcoin ETF launch we've seen earlier this year. So all that said, shares aren't looking nice today because they're edging down.
They're edging down, of course. Crypto, notoriously volatile. We'll see if it's a different story tomorrow. But tell me about Ferrari. We had a great conversation with CEO Benedetto Vigna on Friday. What's going on with shares today?
So that was a great interview. I watched it. But yes, shares are up. And this is actually, I'm excited about this because on Friday, Ferrari revealed a new factory in Italy. So that's where it will produce its first electric supercars. So the facility is worth around $200 million. It's been built over the past couple of years, and it's shielded from public view, and now they're making their debut. And here's the fun part. Workers there will be dressed in red overalls, and they will be assisted with white, shiny robots. So that's really something that it's exciting to me. And it comes at a time when EV demand is cooling. So this is interesting because it's also a delicate balance for Ferrari, because as we know, younger buyers are more skewing towards the electric vehicle side because of environmental reasons. But we also can't forget about the established clients of Ferrari who loathe to give up the roar of that car. I wouldn't know. I take the subway.
Yeah, that roar of the engine, of course, something Ferrari is going to have to adapt to in EV. It's going to be fascinating to see when that EV finally hits the road. But bring it home. Tell me about what's going on, of course, with RXO.
So RXO shares are up. The company announced that it's acquiring a unit of UPS for more than $1 billion. So the deal obviously adds scale, and this will make RXO the third largest provider of brokered transportation in North America. So the deal ends UPS 9-year involvement with another firm in Chicago, and that deal was around $1.8 billion. And Wall Street analysts like this. We have Barclays saying that the deal looks favorable from a valuation and commercial perspective, and Jefferies also saying it's highly attractive. So good news there. That's why shares are popping around 15%.
All right, there you go. Bloomberg's Isabel Lee. Thank you so much. Now, coming up, as we were just discussing with Katie Nixon, PCE in the spotlight. Investors will be looking for more signs that inflation is falling. We'll have a preview coming up next. This is Bloomberg.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Idris Elba works here?
Yeah, he's super nice.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
Feeling cramped and cluttered? Looking for storage solutions? Mini U Storage has you covered. With over 45 locations, free truck rentals, a variety of unit sizes, and moving and storage supplies, Mini U Storage tailors solutions to fit your unique needs. Mini U Storage is now offering free rent for your first month. That's right, your first month with Mini U Storage is free. Find a location near you at miniustorage.com or scan the QR code to unlock your free month now. miniustorage.com.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Well, this Friday brings even more inflation data for investors to digest. We get the Fed's preferred gauge of consumer costs, and it's expected to confirm easing price pressures. Joining us now with a preview is Michael McKee. He is Bloomberg Chief Economics and Policy Correspondent. So you think about what we learned from CPI in May, really making a big splash with that totally unchanged reading. What are we expected to see this Friday?
An unchanged reading is the forecast for the PCE headline. Economists are able to take the inputs from the PPI and the CPI and put them into their calculations for PCE, and they think we'll see no change for the month of May in the PCE headline, which is enough to bring down the year-over-year number to 2.6%. The core goes down to 2.6% as well, even though the core is going to be up just a tenth, but it was up 0.2 last month. So generally, overall, we continue to see improvement. The underlying question with the PCE, as it is with the CPI each month, is what's housing going to do? We do get some reports on housing this week in terms of housing prices tomorrow. Case Schiller.
And when you think about where we are in the trajectory towards the Fed's first rate cut, of course, Fed speak last week confirming that we need a few more prints like we saw with CPI in May for us to get there, maybe around September. I mean, how disappointing at this stage would be a surprise to the upside?
A surprise to the upside would disappoint the bond market a lot, I think, because at this point they want to just tread water until we get enough data that suggests that their path, which is maybe a good chance for September, and then if not September, definitely November, December, is the right path. Now, we have just released our Bloomberg Economist survey for the economic data for the rest of the year, and when you look at inflation, economists think we're going to get there. PCE inflation is going to continue falling, headline and core, throughout the rest of the year, and CPI is going to continue falling as well. The Fed doesn't target CPI, but the general direction of inflation is going to be the same. We're going to see things move down as the year goes on, and the Fed then would have reason to be able to cut if that's what they want to do.
All right. Well, a lot riding on this Friday. I'm sure we're going to be talking to you much before then. Let's head back now to Katie Nixon, of course, of Northern Trust Wealth Management. And Katie, Mike McKee was just telling us about how it's the bond market that's really going to be the shock absorber when it comes to some of these top-tier data releases. And that's certainly what we've seen over the past couple years. And when you're thinking about the markets as a whole, your different asset classes, your allocations, how are you thinking about the bond market, which really has been, it feels like, the epicenter of volatility?
You're absolutely right there, Katie. And if you look at what asset class has responded to macro surprises, absolutely, it's the rates market, not even the bond market, because spreads have actually have absorbed upside surprises on inflation pretty well, but the rates market has not. So any upside surprise that we get certainly would be a negative surprise for bonds. We're not anticipating an upside surprise. And the 2 and the 10-year Treasury are both well within our 6-month forecasted range. So we're actually really comfortable now holding bonds, holding investment grade securities for our clients, recognizing that once we get through this normalization process, bonds will resume their role in portfolios as risk control and as buffers for overall volatility.
So that's the thing, risk control, because you think about the notion of bonds being back. Sure, they're back in the sense that you actually earn yield, you actually earn income, which is, a nice luxury to have. But when it comes to actually offsetting losses when you have stock market volatility, it feels like we're not quite there, Katie.
We'll get there, though. When we get closer and closer to this Fed cut cycle, we'll get there where bonds will normalize and bond volatility will normalize. And, bonds won't be more volatile than stocks, which is abnormal. So we expect things will normalize over time. It's just going to take some time. And right now, what we're telling our clients is to redefine risk in a way, to say risk is not necessarily volatility for a person who's using bonds in their portfolio to fund their lifestyle. Risk is really goal relative. So you want to just duration match your bond portfolio to when you're going to need the money. And that kind of takes bond volatility off the table because you don't really care how volatile the actual bond is so long as you know you're going to get those interest payments and you're going to get that 100 cents on the dollar at the end of the day when you need it. So you have to kind of reframe risk during periods like this when things seem to be quite abnormal.
And it's a good point. Of course, there's ways around that bond market volatility to get that safety that you need. But Katie, even with all of that in mind, where is the haven in this market? Where are you finding that?
Well, the haven so far has been equities. I mean, it's been low volatility, reaching new highs on a very, very regular basis. So there's been a lot of comfort. And you and I chatted about that earlier, Katie, where, you can look at all these different metrics to show you that investors are pretty comfortable and confident and feel very safe and secure sitting in their equities. So we certainly are still very constructive on that. And I would say cash. I mean, you're still earning a very nice yield on cash. And, money markets don't tend to react to Fed rate cuts until they happen. So you're going to be able to keep that 5%-ish cash return from now probably until September. So that's not a bad play. That's not a bad play right now.
Yeah, certainly a lot of investors agree with you with still $6 trillion in money market funds. It's just been amazing to watch. But let's talk about some risks that we know are coming up. And that's, of course, the presidential cycle. You think about what we're seeing in France right now and really the upheaval that's caused in some of those European markets. Is there anything that we can extrapolate out of what we're seeing in France, in Europe right now, into the U.S. presidential cycle?
I don't think so. But what I will say is, looking back at prior presidential cycles, there are some patterns that we think investors should be aware of as we head to the fall. Primarily, it's that, volatility hides in the tall grass until we start getting kind of through the summer. So we do anticipate that markets might be more volatile as we head towards November. Of course, as you noted, we have a presidential debate this week. We'll have lots and lots of election news to digest between now and November. The polls are pretty close. That creates an aura of uncertainty as well. So we are cautioning our clients, expect there to be some volatility as we get towards November. And that would be really in keeping with the historical pattern here in the U.S.
Yeah, some volatility, of course, expected there. But to wrap all of this together, I mean, Katie, it sounds like you're constructive on equities. You're comfortable in bonds right now. What could go wrong? What risks keep you up at night?
The biggest risk right now, Katie, is that we don't have inflation cooperating and that we do see a resurgence in inflation, and that's going to keep the Fed on hold. We are not anticipating this, but there was a risk earlier this year with inflation running hot that the Fed may actually hike rates again. Again, not our base case. But I think in terms of risk cases, inflation reflating would be a key risk because, again, that would keep rates high for longer. And the longer we are in this tightening cycle, the more apt the economy is to show some more signs of fragility and maybe undermine that soft landing scenario, which is so important to being constructive on the market right now.
Well, we will certainly get more information on Friday at 8:30 with, of course, that PCE release. Katie, really enjoyed this conversation. Have a great week. That is Katie Nixon of Northern Trust Wealth Management. Now, still ahead, we're going to take a look at the companies making the most social buzz today in our Social Climbers segment. Up next, this is Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
All right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, 2 astronauts are stranded in space thanks to issues with Boeing's Starliner spacecraft. The astronauts were originally scheduled to return to Earth on June 13th after a week on the International Space Station, but their stay has been extended for a 3rd time. Now, that is the latest in a long list of setbacks and headaches for Boeing's spacecraft. Next up, we have Jollibee, anything but jolly these days. It's the largest restaurant chain in the Philippines, known for its fried Fried Chicken, is investigating an alleged data breach that could affect millions of its customers. Now, that breach also impacts other brands under Jollibee Group, which include Burger King and Panda Express. And finally, the hot weather is paying off for Disney. The Pixar sequel Inside Out 2 dominated the box office for the second weekend in a row, bringing in over $100 million in ticket sales. Of course, a much-needed blockbuster for Pixar. And of course, you can follow all the latest company buzz on TRE and Go on your Bloomberg terminal. All right, now coming up, Vera Bradley is set for a full makeover. We'll be speaking to the company's president and CEO next. This is Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
We need sustainable solutions, and the world's most innovative companies are taking up the challenge.
我认为这个趋势是不可逆的，未来新能源的发展只会越来越快。
This can only be possible if we work as an ecosystem.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships. And you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Well, 2024 so far hasn't been kind to bag maker Vera Bradley, but now the company is getting ready for a refresh as we head into the second half of the year. Joining us now with a setup is Bloomberg's Abigail Doolittle.
It has been a little bit of a rough year here, Katie, for Vera Bradley, but it has been for some of its competitors as well. Take a look at this board. So you can see the shares of Vera Bradley down about 26% year to date, but Buckle and some of these other names are also down on the year. So in terms of this sector, it's in line to some degree with what's happening. Now, relative to what could be a bright spot ahead in terms of that revamp that you're talking about, keeping it away at least from products and beneath the surface, if we take a look at revenues, we can see one reason that the stock is down this year is that in the last quarter that was reported, there was a bit of a drop on a sequential basis, a year-over-year basis, but in the upcoming quarter, the second quarter of fiscal year 2025, we're going to see a sequential increase. This is actually still a year-over-year drop of a little bit less than 10%. 10%. But for the third quarter, not only is this a sequential increase, but it's also a year-over-year increase. So this is something that investors are probably looking forward to, that possibility of growth returning. And then just to put it into greater context of, it's not just Vera Bradley, it's the sector. Let's take a look at the S&P 500 here over the last year, up a very healthy, let's call it 26-27%, whereas the S&P 500 retailing and apparel index, well, it is down about 8%. So there's a wide divide there and bigger questions in terms of what's pressing on retail.
All right, Abigail, great setup as always. Really appreciate that. Let's keep this conversation going now with Jacqueline Ardrey. She is Vera Bradley President and CEO, with me in person. It's great to see you.
Yeah, thanks, Katie. Great for having me.
So let's look ahead to the future. Tell us about Project Restoration. It's billed as this full 360 brand transformation. What does that look like in practice?
It's such an exciting transition for us as a brand. We really, 18 months ago when I joined, we started this really comprehensive analysis of the business and looking at everything from our store experience, our website experience, our products, everything that we could affect, and came up with this plan that is really a 4-pillar plan. I've talked about this a lot. That's what Project Restoration is. It's addressing the consumer, it's addressing product, it's addressing our channels of distribution, and then it's also addressing the brand. So this is a really, again, as you said, 360-degree transformation. And it is so important, I think, for a brand transformation to look at the kind of size and what we need to deliver to change our results, is you have to look at everything. So we went back, a lot of sales data, we looked at our history, but also looked at current competitors. We looked at the market and said, what is the customer looking for? What does she need now? And a big trend in accessories is around customization and personalization. So we really set out to do something brand new in the accessories space, keeping our colorful heritage, which is, many people, as we talked just earlier, know this brand and love this brand. We have a lot of brand recognition for the size of our company. And we just wanted to make it fresh and relevant and modern. So I am so excited with what the team has delivered here. Everything from all of our product is really transformed. It's all new, but you'll recognize it as Vera Bradley. Like when you walk into the room and you see everything, and you walk into a retail store, experience our new updated website, it feels like Vera Bradley, but it's very modern and it's still colorful. It's a nod to the heritage that the brand started with, but it's just, all I can say is that it's all new and exciting.
Well, let's talk a little bit more in detail about what to expect, because of course I think Vera Bradley, I think those paisley wristlets and wallets that everyone in high school and college had. So it sounds like you're still going to be colorful, but more solids, for example. Are you introducing new items actually, such as items of clothing, or are you sticking to bags here? We
really are focusing more on our key heritage, which is travel and handbags, and we still will have clothing. Some of the things we're de-emphasizing that a little bit to really return to our core. And it's colorful. There's still paisleys in the line. There's still things, but again, it's a modern and fresh take. Because if you really look at the retailers who are doing well now, you've got two segments. You've got the value segment, and you've got brands who are transformed or are really innovative, and that's really what we're going for. We're really going for this innovative solution. And when you look at how the line all works together, we believe a trend right now in accessories is around, again, customization. Like this, the modern woman she's doing so much. There's this whole phenomenon around a bag within a bag. So you have a tote bag, and then you have your wristlet, or you have other small things that you want to tuck in there. We've provided these really thoughtful solutions for her, which is a hallmark of the brand as well.
Well, let's talk about who she is, because reading through your most recent earnings release, your earnings call, it seems like you're targeting that 35 to 55-year-old woman, so not exactly high schoolers. And I mean, thinking about that, it reminds me a bit of what Abercrombie and Fitch is doing, that reimagination that they've had of their brand and focusing on a slightly older client. What was the thought process and the decision tree that led you to that specific specific age group?
Yeah, great question. We're very fortunate in that we have a multi-generational customer. So if you look at where, in our different age ranges, where we have customers and where we've always had customers, we're very fortunate in that we're anywhere from 18 to 65. So we want to keep that. The reason for the focus on that 35 to 54-year-old is really that's, when the brand was really successful, that's really where we had many more customers than we do today. So that was one reason. The second reason is that generation influences both her kids and her mom. And that is really what is so special about this brand, is that the stories that I hear from customers about their first Vera Bradley bag, and it's almost always connected to somebody else in their household, which is really special. So, but the 35 to 54-year-olds also, they have more money to spend as well. So that was another more practical reason. So for all those reasons, that's why we refocused there.
Well, let's talk about when this could start to bear fruit. Of course, you're expecting a stronger back half of the year, but is that enough time for that turnaround to really take root? What gives you the confidence that the second half of 2024 is when we'll start seeing this pick up?
Yeah, I mean, the one thing that we did that I think we did really well last year was reposition our cost structure so that we could afford to invest in the marketing that we needed to actually launch this transformation, and that is really what you'll see. You'll see a lot of marketing from the minute we launched this in a couple of weeks through the rest of the year. So we were able to really reinvest in marketing to kind of get the word out there for our existing customers are extremely loyal, and we think that they're going to be delighted by some of the changes that we've made. But we also need new customers and new people to interact with the brand. So that's where our marketing, our new marketing plans come in.
Well, I only have about a minute left with you, but where within that marketing trajectory are you investing? Are we talking, bottom of the funnel sort of social media sort of type initiatives, or what are you actually investing in? It's really all through the funnel. So you'll see a lot more top of funnel than we've done. We have a celebrity partner who we'll be introducing in a short time here, which we're really excited about, and just all through the funnel we'll be spending our marketing investments. Well, really excited to see this turnaround get off the ground. Of course, coming in mid-July. Jacqueline, Audrey, it's great to see you. Thank you so much.
Thank you, Katie.
All right, and let's get a check on these markets. About an hour into the U.S. trading day, we're going to do that again with Abigail Doolittle.
So we're looking at a nice little pop for the S&P 500, especially given the fact that the futures had been just ever so slightly lower, and then also on the open down just modestly. But right now up about 0.3% after the triple witching of Monday. Still not much of a storm on the surface here, Katie. If we go beneath the surface, though, lots of movement relative to individual stocks. We do have the shares of Apple trading higher by about 1%. There was some weakness last week, especially technically. It is, though, still well below that 220 level. Above 220, we could see Apple go significantly higher. If back below 200, there's going to be probably a significant move lower back down into the range. Stay tuned there because, of course, as the second largest company of the world, at least right now, because there's this race between Microsoft and Nvidia, an important influence. JP Morgan up 1.2% to the downside, though. We have Nvidia, oh my gosh, down 4% now, down 3 days in a row, down more than, I think, down 6% into the 2 days into today. So let's just call it down about 10% over the last 3 days. Correction territory as investors really rethink whether or not the 180% year-to-date rally into Thursday, if they deserve that. There's big growth there, but a parabolic uptrend. So some healthy consolidation here. And then MicroStrategy down 4.4% with Bitcoin. We do have Bitcoin down on the day last week, down about 4%, more than 4%, the second worst week of the year. So if we take a look at Bitcoin relative to the chart, Katie, we can see that over the last few months for much of this year, and it's not so dissimilar from stocks, although it's a different range, we're looking at this range for Bitcoin between, let's call it 60,000 and just above 70,000. If below 60,000, we could see Bitcoin drop down toward this level, which let's just call this 56,500. If below that level, you're probably going to see an equal and opposite move to the downside. It's not clear we're going to see that. We could go right back higher and maybe this range breaks out, but the longer term charts probably do suggest some consolidation could be ahead, maybe down toward the long-term uptrend of 30,000. If that's a risk on, risk off tell, that might be a period of risk off.
Yeah, we'll see. Of course, 60,000, a big psychological test for Bitcoin. We'll keep an eye on it. Abigail Doolittle, thank you so much. Now coming up, investors weighing rising political risks. We'll speak with Greg Valliere. He is Chief U.S. Policy Strategist over at AGF Investments next. This is Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
This is Bloomberg.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup.
This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Well, investors, of course, are watching out for rising political risks this week with the first presidential debate between President Biden and Republican challenger Donald Trump scheduled for Thursday in Atlanta. Joining us now to discuss that and more is Greg Valliere. He is Chief U.S. Policy Strategist over at AGF Investments in Washington. And I actually want to talk about the potential VP pick for Trump, because taking a look at your note that you put out just recently, it seems like you've narrowed it down to 3 leaders here.
I think that's right. I think that it's between Marco Rubio, who I would say is the front runner, J.D. Vance, the senator from Ohio, who most people have never heard of, and then the governor of North Dakota, Doug Burgum, who people have really, really never heard of. So you've got those 3, and I think that based on his experience, his knowledge of foreign affairs, the fact that he's Hispanic, I think that Rubio is in the lead.
So Rubio being in the lead, I mean, you point out that for him to actually become the VP, he would have to change jurisdictions so that him and Trump, of course, can't be from the same state. But, I mean, you think about Marco Rubio, he was born in Miami. It feels like that would be a big change for him to make, Greg.
Yeah, it's complicated. It's unusual, but I would point out that Dick Cheney did this about 20 years ago. He changed jurisdiction because he wanted to be on the ticket. He lived in Texas, and Bush lived in Texas, and Cheney went to Wyoming. So it's been done before.
It's been done before. It's a fair point. But let's say that, I mean, Rubio is the pick and then Trump doesn't win, for example. Now you have Rubio having switched his jurisdiction. What would that mean for his own political future?
He'd probably go back. I think he could. It might raise some eyebrows, but I do think he could. Or he could be in a wide range of other posts. He could wait for the 2028 election. He could wait for a cabinet position in 2028. He would have other options, in my opinion.
Okay, fair points there. Of course, he has a long political career ahead of him. Let's talk, too, though, about J.D. Vance, because you think about a long political career, and he's relatively young compared to some of these other picks out there. Tell us about J.D. Vance. I mean, what would that look like in terms of a Trump presidency?
Well, J.D. Vance, like Marco Rubio, about a decade ago, was ripping into Donald Trump. Rubio called Trump a con artist. J.D. Vance has called Trump equally harsh things, but they've forgotten about that now, and they've become very strong supporters. For Vance in Ohio, I think he probably would guarantee that the Ohio Senate seat would go to.
All right. It seems like we might have lost Greg Valliere there, unfortunately. A really interesting conversation about who Trump's potential VP pick would be. Of course, this as we count down to Thursday's debate in Atlanta, of course, when President Biden and Donald Trump will be squaring off. Going to be following that one closely. Much more ahead. This is Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
At AbbVie, our science never rests. Because breakthroughs don't just happen. They take commitment. From cancer to chronic diseases, we treat over 75 different conditions. People, passion, possibilities. AbbVie.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories, and bring your truck to life. Real truck.
Dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
Well, let's bring you some breaking news from just a couple of minutes ago, and that is that senior Moelis banker Jonathan Kay has resigned from the firm after a widely shared video showed him striking a woman in Brooklyn. Here with more details is Bloomberg's Shanali Basak. Of course, this is breaking news, but what do we know so far?
This was a very serious incident. You may remember back in early June in Park Slope, there was a video that went viral that appeared to have Jonathan Kay striking a woman during Pride Festival celebrations in the Brooklyn neighborhood. Now, media reports subsequently also said that that strike, that punch, followed disagreements between Kay and the people around him, with the people around him having thrown liquids on Kay as a Jewish man who had said that they were on the wrong side of the issue when it came to Israel and Palestine. Now, what do we know now? Moelis, at the time, days later, had started an investigation internally, and we know now that Kay has resigned. Katie, what we do not know is if he resigned voluntarily. We also do not know whether Moelis had asked him to resign. We don't know the outcome of the investigation internally. And the other thing we do know is that, yes, there was a police report that was filed after the incident, the woman who was 38 years old, but there have been no reports of charges pressed or arrests being made around this incident.
So good context there. There's a lot we don't know at this point, but what we do know is that senior Moelis banker Jonathan Kay has resigned from the firm. We're going to continue to follow that story. But let's move to one of the other big stories on Wall Street this morning. That is Bobby Jane raising $5.3 billion. This is the biggest hedge fund debut since about 2018 or so.
Yeah, it's the biggest debut since Exodus Point Capital. Of course, Michael Gelband over there. Bobby Jane was a deputy over to Izzy Englander back at Millennium. So it's the fact that it's Bobby Jane starting this hedge fund, as well as how much he's bringing in, $5.3 billion, as you say, the most since 2018. He will start trading on July 1st, so very soon. He's raised money around the world. It's interesting. Remember, he had tried initially to gather as much as $10 billion. He ended up reducing that target to between $5 and $6 billion. Remember, the fundraising environment, whether you're a hedge fund or a private equity firm, is very tough out there. So even with the reduced target, it's still a monster fund, highly anticipated across all of Wall Street, and of course already ready to go across all of many asset classes. So in addition to that fundraising haul, that day one of trading will be very highly watched across Wall Street as well.
Yeah, it must be nice to be able to sort of reduce your targets and still raise $5.3 billion. But tell us a little bit more about who he's raising from, where he's actually getting these commitments from.
Big institutional investors, sovereign wealth funds, endowments, foundations, family offices, very traditional hedge fund investors here. Now, I've got to say one thing that's interesting about Bobby Jane. Remember, because not only that he worked at Millennium here, he had a former past also at Credit Suisse as well. He has hired already 215 people. Wow. 42 of them portfolio managers. And our own Bloomberg's Hema Parmar has been all over those hires as they have come. They have business in Asia Pacific already. They are also looking at that business that is becoming very hot on Wall Street, which is doing those bank capital relief trades as well. He's been used to, between his time at Millennium and Credit Suisse, learning how to arbitrage very specific parts of the market that have become very, very popular trading strategies that really he had pioneered. Let's see what else he pioneers over at Jane Global.
Yeah, it's pretty interesting. I mean, 250 people hired already, 42 portfolio managers. Like you say, they are ready to go across asset classes. What do we know about the types of strategies that they're going to be pursuing with, of course, these big commitments that they have?
Well, so you were talking about the kinds of investors a little earlier. So when you think about those bank stress relief trades, SRTs as they are known as, or commodities, or even trading in Asia, for example, the moment of the market is not just kind of these arbitrage trading strategies, but the fact that he can go macro at this point in time. We know macro has had a very mixed track record in the last couple of years, but with $5.3 billion, you have certainly investors entrusting him to enter a part of the market that, even if there has been mixed track records across the market, there has certainly been a lot of interest. I would also say anything he does in the world of treasuries will also be fascinating, given the treasury environment we're in and the volatility that people expect. If we get that volatility, especially that post-election volatility, Katie, it is going to be one of the more interesting 6 months we've ever seen for a hedge fund of this size to start out at.
And I mean, just quickly before I let you go, so the fact that he was able to raise this much money, even though he did reduce his expectations, I mean, who else is raising right now? What other hedge funds are debuting right now?
Well, it's interesting. There are some spin-off types of funds that have been raising. Particularly, you have others that have brought in money from former Millennium traders. Think about Diego Maggia. Tsla Capital Management started trading with $5 billion. That came in hot. That was something that was also widely anticipated. Of course, people have been talking a lot about Jane Global, based here in the United States, so had been working with the big prime brokerages. There have also been spin-offs from Citadel as well. People have been watching Freestone Grove. I know you're talking to Freestone Grove tomorrow.
Nice Bloomberg Invest plug.
At Bloomberg Invest, and so that's another hot startup. Of course, Freestone Grove came from Citadel, two longtime money managers at Citadel. So this spin-off moment for these firms are pretty interesting. It's a new generation of hedge funds, really, that are getting started, and not at an easy time, mind you.
No, not at all. Bloomberg Sonali Bassick, really appreciate your reporting, of course. And be sure to tune in to day one of Bloomberg Invest. Sonali, of course, will be speaking to Boaz Weinstein of Saba Capital and Elbridge Industries, a conversation there coming up as well. You can follow all these conversations on Bloomberg TV and Live Go. Meanwhile, you take a look at these markets right now. The S&P 500 holding steady, even though you have a big drawdown underway in Nvidia. It seems like we're seeing some market resilience, at least when it comes to the S&P 500. Can't say the same for some of those other indexes. Now, coming up, the senior portfolio manager of the Wealth Enhancement Group joins BTech next. That does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
From our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's off. This is Bloomberg Technology. Coming up, Nvidia slides for a third consecutive day. Almost $400 billion wiped off its market cap. Full coverage ahead. Plus, Apple facing billions of euros in fines over its App Store rules under the EU's Digital Markets Act. Details to come. And car sellers warn of a possible material hit from the CDK Cyberattack. We have all the latest from one of our big tech editors. This is what financial markets look like to start this week. Happy Monday to all of you watching around the world. The S&P 500 actually modestly higher. We're going to get into this very shortly, but Nvidia, which is the most expensive stock on the S&P 500, is a real drag. The Nasdaq 100 down 0.3%. Yields pushing a little higher, 4.26% on the US 10-year. And Bitcoin's been a real story. Going to dive deep into Bitcoin halfway through the show with our own in-house analyst at Bloomberg Intelligence. But we're coming off one of the worst 7-day stretches of the year so far for many digital assets, but mostly Bitcoin. Let's take a look at Nvidia. Actually, in the last 20 minutes or so, the declines that we opened with in Monday's session have really accelerated. We're down more than 5% in the session. Over 3 days, three straight days of declines, which hasn't happened since early May, we've wiped up more than $380 billion of market cap. As a consequence, Nvidia has gone from being the world's most valuable company briefly, dropping below both Apple and Microsoft. But there's a lot of conversation around valuation. One of the metrics we're looking at is its price to sales ratio. It's trading at more than 20 times the expected sales over the next 12 months. I want to get out to London. And Bloomberg opinions columnist Parmi Olsen. In her column last week, Parmi argued that Nvidia is a classic case of the bigger they are, the harder they fall, and that other tech company leaders should be looking at what's happening with Nvidia and wincing over how rapidly it's taken the AI world. Parmi, good timing to have you on the program. Explain your thesis to me.
Well, I think a lot of people look at Nvidia as this kind of bellwether for AI's success, but it's also a reflection of a lot of the hype in AI. It's kind of profiting from the short-term success of businesses who are buying its chips for their servers, cloud companies like Microsoft and Amazon. But if you look further downstream at the actual businesses who are buying the generative AI tools from the likes of OpenAI or Microsoft Azure, we're seeing signs of discontent. There are businesses who are saying, and I've seen multiple surveys coming out just in the last few months, saying that they are not really getting the productivity they were hoping for. They're not quite sure how to use it. There's been a decline in plans to spend on AI. I think there's been a decline from 93% last year to 63% this year, in spite of the fact that these tools are getting better. So I think a big reason for this is that these generative AI tools from the likes of Microsoft, OpenAI, and Google have been marketed as general purpose tools, like a Swiss Army knife of technology that's going to make your workforce more productive. But of course, these tools aren't necessarily general purposes. They're certainly capable in some areas, but they make mistakes. They make hallucinations. Right. There are issues with data security. Strangely, our whole perception of computers and AI, in how it was kind of marketed to us by science fiction as being these kind of robotic, fact-based machines, isn't really how it is in reality. They're actually very good at artistic endeavors and generating images and poetry and stories. They're actually really not so good at generating facts that you can rely on. And this is something that businesses are realizing, sometimes to their detriment. And so I think there's been this kind of reining in of spending, and I think we're starting to see that reflected potentially in the decline in shares in Nvidia.
A lot of investors, even if they can't do the math on valuation or correctly forecasting or predicting sales, they'll say, oh, well, Nvidia is supply constrained. right? Demand right now for AI accelerators greatly exceeds their ability to supply. There was one other piece of your column that I found so interesting. We've both covered technology for quite a long time, and you make the point that historically, in phases of technological progress, all companies have a very clear North Star, something to work toward. But you also make the point that with AI, it's kind of become such a grand vision led by specific individuals that it's lost all meaning. What do you mean by that?
Well, this whole race, this arms race for AI, was sparked by two men, Sam Altman of OpenAI and Demis Hassabis, the founder of DeepMind, Google DeepMind now. And both guys were trying to create artificial general intelligence, which is this hugely ambitious goal to create a machine that can essentially do everything. It is more knowledgeable than humans. It can surpass our own cognitive abilities, and it has general knowledge, meaning it can do creative things, but it can also do mathematical calculations very well and better than humans. And their objectives were nothing less than curing cancer and solving climate change. There was a sense that if you had this machine, this almost godlike machine that could solve everything in a general capacity, that it could fix all problems. And I think when you have a vision like that, that's just so grand, and then it trickles down into the marketing and sales channels of your tech company, and then they're going out and trying to sell this to businesses, then your end customers have this kind of sense that they're getting this tool that has this general purpose ability. They're almost left with a sense of paralysis. I mean, what do you do with technology that can do everything? Where do you even start? So I think the mistake that some tech companies have made in marketing AI has been not necessarily in saying that the capabilities are too high, because they're very capable, but it's been in marketing them as being general purpose, because they can't do everything everywhere all at once. They can only do a few things very well. And that's why I think businesses need time when they buy these tools to experiment with them. You know, it's a little bit like with the mobile revolution. Individuals who worked for companies brought in their smartphones, and they told the IT people, can you just set up my corporate email to my BlackBerry, to my iPhone? And they were sort of companies were forced to do that because people were doing their own personal experiments with them and using them as productivity tools for themselves. And I think right now this kind of top-down approach to let's force the entire staff to use these tools is just a recipe for failure, because when technology is so new and cutting edge, it really needs time to percolate and for individuals to just sort of find the way and how these tools will work for everybody else.
Parmi Olsen, one of our Bloomberg Opinion columnists, just really fantastic to have you on the show. And I really strongly advise the audience, read Parmi's column from last week. Let's keep the conversation going with Ayako Yoshioka, portfolio manager at Wealth Enhancement Group. This is wonderful. There is the fundamental analysis that you can make, whether you're on the sell side or buy side. There is the technologist or techno-optimist view, and then there's the sort of romantic view of what AI can do for mankind. Very difficult for you, Ayako. Everything that we've just discussed, where do you start? With the fundamentals or what your heart tells you?
Absolutely. We always go back to the fundamentals, I think, when we're looking at a security. And I think we look back at history, too. I think there's a part of us, or some of us, that have witnessed some of this back in the 90s and early 2000 when the tech bubble burst. And so we're well aware of some of the risks that surround names that get hyped up from both the sentiment standpoint, even though the fundamentals may be there in order to support some of the overall enthusiasm around the stock.
The point that the Bloomberg story at the weekend made was that it's really hard to forecast or predict top-line growth for Nvidia right now. If you go back to the August quarter of 2023, which is when this kind of parabolic growth took off, revenue each quarter has come in on average 13% above what management guided. Now, as you know better than anyone, management teams can be a little conservative, even at the midpoint of the ranges when they guide. But it's still the math that you have to do. They point in this piece to the price to sales ratio being above 23, something like that. In any normal circumstance, I think, people would be much more cautious than they are with Nvidia. Why are they not being so cautious, at least until this morning's session?
Absolutely. I think it's really difficult to really ascertain what the total addressable market really is for artificial intelligence. You could say that it continues to be growing, and so really trying to ascertain what that number is going to be in the long term is what is so difficult about valuing Nvidia right now. It used to be sort of a rule of thumb when I was growing up in this business that anything over 10 times price to sales was just too expensive, and at 23 times it's well above that, and so it does become very difficult, and it becomes more of a short-term guessing game in terms of supply and demand. Right now, demand outstrips supply, but as Parmi mentioned, if demand starts to wane a little bit and that equilibrium comes to fruition, I think it could be problematic for Nvidia.
Do investors get distracted from other potential opportunities because of all the sort of myopic focus on one name?
I think, part of the reason why some of the utility companies have done so well recently is just all of the electricity demand that's being forecast for the data centers to really utilize the power that AI brings to all these servers and data centers. And, you've seen sort of that secondary and tertiary derivative plays of artificial intelligence and Nvidia kind of come to the market. So we'll have to see where the true sort of opportunities are going forward now that so many sort of secondary and tertiary effects have really been played out a little bit. We look back at history again with Nvidia, and there have been plenty of times in which the stock has come down over 50%. It's part of the volatility for the stock over the long term.
Ayaka Yoshioka, Portfolio Manager at Wealth Enhancement Group. Great to catch up. Great to have you here on Bloomberg Technology. Thank you. We have some breaking news crossing the Bloomberg terminal, and we have a red headline crossing the Bloomberg terminal. Black suit cybercrime gang is blamed in major CDK ransomware attack. This is a hacking group called Black Suit, and according to Alan Lisker, who is a threat analyst at the cybersecurity firm Recorded Future, they are behind the cyber attack on CDK Global. That is the hack that has basically crippled a number of auto and car retailers, because those names on your screen, some of which are really moving to the upside but recovering from many days of declines, rely on CDK's platform for POS, front office, back office, inventory management. So that's the breaking news that we're getting. We have a name that it is a group called Black Suit, and that the cybercrime group has demanded an extortion fee, which is believed to be in the tens of millions of dollars from CDK. And Bloomberg News reported, if you remember Friday, that CDK would be prepared to make a ransom payment. Later in the program, we're going to go out to Dana Wallman, who's one of our tech editors, who's been leading coverage of this, and we will get a much bigger picture and detailed picture of what's going on after we got that breaking news. Okay, coming up on the show, Apple is risking new fines over its App Store rules in the European Union. We're going to go out to Bloomberg's Mark Gurman. There is a lot of Apple news to discuss. Stay with us. This is Bloomberg Technology.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Sam Adams Summer Ale is back. A citrusy wheat beer perfect for a hot day at the pool.
He popped! Abandoned ship! It's Sam season!
New industrial revolution. This is a tsunami, Ed. This is a tsunami of change. And only the smart ones are going to recognize I have to plant the flag now.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
There's a lot of Apple news to break down today. First, the company risks billions of euros of new fines in the EU after antitrust regulators escalated a conflict over the company's App Store rules. And Apple has added China's two biggest online retailers, Alibaba and JD, to a growing list of apps that will support its mixed reality Vision Pro headset when it goes on sale in that jurisdiction Friday. Who else do we go to? Bloomberg's chief correspondent, Mark Gurman. Let's start with the EU. It's an ongoing and developing issue for Apple, operating in the EU market in the context of the Digital Markets Act. What is the latest and how does it change things?
Yeah, the EU situation had a lot of news over the past few days. Let me take you back to Friday. So a couple weeks ago at WWDC, Apple introduced Apple Intelligence. That's its new AI system for the iPhone, iPad, and Mac. It also introduced a couple sort of hot new features for the iPhone and iPad. One is called iPhone mirroring. That allows you to use your iPhone via your Mac via the new Sequoia update coming in the fall. The other one is called Share Play Screen Sharing, where you can essentially screen share from one iPad to another and control the other iPad. Let's say you want to help your parents with some technical support. Those three features, according to Apple, won't be coming to customers in the 27 countries that make up the EU later this year because of the Digital Markets Act and the interoperability requirements, which means that Apple may have to lower the privacy of those features in order to make them interoperable for third-party developers and meet some of the EU guidelines. This morning, the European Union announced charges against Apple related to its compliance, or according to them, lack of compliance with the Digital Markets Act, relating to steering users to be able to complete app payments outside of the Apple payment system. Long story short, the EU wants Apple to lower the commission significantly, which it did. It broke up the commissions between a technology fee and a revenue share fee. And then at the same time, Apple is still trying to collect that revenue from apps that are sideloaded and not bought through the App Store. And so the European Union doesn't love that.
Mark, let's quickly get to the Vision Pro news in China. So Alibaba and JD, big name, compatible apps, but it's an important launch market as well. What's the latest?
It's an important launch. The Vision Pro goes on sale in China, Hong Kong, Singapore at the end of this week. I don't really think it matters if Alibaba or other applications locally are on there or not. Certainly it helps. But the real story with the Vision Pro is that sales are not going to take off until the company is able to make a version that's about half the price. I reported over the weekend that Apple is still planning to release a cheaper model as early as the end of next year, but they're struggling on how to cost reduce it, given how expensive the components are in the Vision Pro. And if they really start reducing functionality, you're down to something that's on par with a competitor that's still a third of the price in Meta. So Apple has a long way to go on the Vision Pro to make it a success.
Check out Mark's latest Power On from over the weekend. Bloomberg's Mark Gurman, thank you. There is more with Apple, which will be withholding a raft of new technologies from hundreds of millions of consumers in the EU, citing concerns posed by the bloc's regulatory attempts to rein in big tech. At the same time, reports over the weekend that Apple is open-minded about its partners here in the US on AI. Bloomberg Intelligence senior analyst Anna Rana joins me on set in San Francisco. It's great to have you in town. I want to get to this AI report. It's from the Wall Street Journal. And in short, it's that Apple would look at Meta's underlying technology and Google's underlying technology. We already know about OpenAI.
Yeah.
What do you make of that?
No, I really like it because one of the things is they have been criticized for choosing a particular vendor and not, you could say, give users a choice, and that's getting them in some regulatory trouble. Now, if you were to give me a choice, for example, in search, there's a high likelihood I'm going to go with Google. And, you're going to have the same. If you give users the choice, whether it's OpenAI, Meta, or Google, the users will define, where they want to go. And I think that kind of protects Apple, in my view, from a regulatory point of view. And not only that, in the case of Google, for example, it's been criticized for a lot of money that's coming from Google to Apple. I think, there's ways you can redo that deal.
The regulatory compliance observation is really interesting. They probably don't want to make any more trouble for themselves. Yeah. But we've just outlined some of the difficulty they're having, particularly in Europe, whether it's App Store related or it's policy related. And I ask you this probably every 3 months, and I have done for a few years now. I still don't know whether that anxiety of regulatory risk is reflected in the stock or whether investors really have concerns about that.
See, we have a concern about it because, frankly, from a free cash flow point of view, that's a big payment that goes from Google to Apple and has a very high margin to it. But, Apple's always been a closed ecosystem ever since we have known the operating system, which is why they argue that it's a better operating system, it has less attacks, etc. Now, if they're going to open it up, the question is whether you're going to get the same level of safety or not, and that's the argument they're making. But the regulators are saying you're making too much money on the App Store fee. I think there is truth of both sides. The question is how low the fees can get. In one of the conference calls, the CFO said that EU accounts for only 7% of the App Store sales. That was the first time we got that information. So frankly speaking, financially, it's not going to ding them. But only if that kind of ruling comes to the US and China, it's going to be a bigger issue.
Bloomberg Intelligence analyst Anna Rana, thank you so much. We have some more breaking news, this time out of Canada. Canada has announced plans to curb imports of Chinese-made EVs. Canada is considering imposing a surtax on Chinese EVs and also investment restrictions. This comes as we get comments from Canada's Finance Minister, Chrystia Freeland, who's been speaking with reporters. We'll continue to track it, but remember it follows on from the expansion of tariffs on EVs in the US. Only 4 models of Chinese EVs available in the US. We'll bring you more as we get it. This is Bloomberg Technology.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's time for Talking Tech, and first up, a blockbuster hit for Tencent. Its Dungeon and Fighter mobile game brought in $270 million in just 30 days, taking the top spot in downloads and revenue in China. The performance of the game exceeded analyst expectations and marked the biggest debut of the year for Tencent to date. Plus, Amazon and F1 will debut a new AI feature to keep viewers watching. Set to be rolled out during the Spanish Grand Prix, the new feature, dubbed the Stat Bot, aims to provide context and trivia during broadcasts by passing through race archives and real-time racing data. The new tech will be rolled out live during this Sunday's race in Barcelona. And Mitsubishi Heavy Industries says they're nearly done designing a next-gen nuclear reactor as Japan readies a shift to develop more atomic power. Bloomberg spoke with Mitsubishi's president Friday. Here's what he had to say about a nuclear future.
I believe that gas turbines will grow going forward, and they will be combined with carbon capture, hydrogen combustion, and so on. Nuclear power is also a valuable power source in the context of carbon neutrality, so I think it will be necessary to a certain extent as well.
Coming up on Bloomberg Technology, we're going to bring you the latest on Bitcoin after the token suffered one of its worst weeks of the year. This is what markets look like as we start the week this Monday. S&P 500 kind of modestly higher, a few tenths of 1%. Utilities, energy in the green, but it's information technology that is pretty firmly down. The story, well, you see it there on the screen. Nvidia down 5.7%. Over the last 3 sessions, as it stands, we've shed almost $400 billion of market cap, and Nvidia has gone from being the world's most valuable company down 2 places below Apple and Microsoft. And there you see Bitcoin at a more than 1 month low. And coming up, we're going to speak in-house Bloomberg Intelligence's James Seifert about what on earth's going on. Some outflows from key ETFs. Beautiful day here in San Francisco. This is Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That could also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco. I want to check in on the markets, but I'm kind of micro-focused on what's happening with Bitcoin. Actually, remember that this is an asset that trades 24/7, and over the last 7 days or so, we've basically had one of the worst weeks of the year so far. It's interesting, Bitcoin just above $61,000 per token. It's hovering at a more than 1 month low. But the other data set that we look at is the outflows, 6 consecutive days of outflows on dedicated Bitcoin spot ETFs here in the United States. By association, we also go to the equity market. If we change up the boards, you see some of the sort of crypto-related stocks also under pressure. Coinbase, chief among them, down 4%. Actually, Riot, Marathon Digital Holdings have kind of paired some of the losses that we saw. There's a number of things happening in the market, some of it psychological. I was listening to Bloomberg Television earlier, and we're back to that debate of, well, if you think about the bigger picture, well, if Bitcoin is digital gold, why is it not behaving like gold? There's a lot to discuss. Unfortunately for us, we can break it all down with Bloomberg intelligence analyst James Seifert. James, good morning to you. I don't know, where do you want to start? For me, the outflows data is kind of key because, at least for me, that's the very little that I've got to go on.
Yeah, I mean, it's the one area where we can know exactly where money is moving, right? That's one of the benefits of ETFs. We know exactly how much money is going in or going out. And like you said, over the last 10 or so trading days, it's been a significant outflows, net outflows, but it's been about $1 billion in outflows. And that's what ETFs are built to do. They're built to take in money and see money go in and out. And they're basically, overall, they're going to track the underlying asset. That said, these things, since they launched in January, have still taken in about $15 billion. So yes, $1 billion out over the last 10 or so trading days is a big deal, but it's not enough to cause the kind of correction that we're seeing in the market right now with Bitcoin trading under 62,000.
As you know, James, I just got back from a vacation, and while I was away, I was kind of braced for the idea that there might be some more traction or news around ETH spot ETF, Ethereum spot ETF. And I came back and nothing had really happened. And we continue the status quo that we're expecting some movement in the coming weeks. What kind of a consideration is that right now?
Yeah, I mean, obviously, based on what we're seeing in the markets with pricing, I don't think anyone's really paying attention to the fact that we're going to get Ethereum spot ETFs. Our over/under date, if to try and figure out when these things are going to launch right now, is July 2nd. We think the SEC is going to get those filings off their plate before the July 4th weekend. That's just our guess. There's no guarantee. No matter what, they will launch some point this summer. So that is, again, only a matter of time that people are not really kind of focused on the fact that that's happening because Ethereum is also down, as you kind of hinted at. It's any stocks related to Bitcoin or crypto. Ethereum is down, but they are going to launch at some point in the next couple of weeks, and we think it'll happen before July 4th, but there's no guarantee on that front. That said, I would add that all these issuers, they just had to file a whole bunch of amendments to these ETFs. So they had to submit a bunch of new documentation to the SEC, and all of those came in on Friday, right around market close. So the SEC has some new stuff to get through, and it could take a week, maybe 2 weeks, and then we'll know for sure when these things are going to launch.
If we try and marry those 2 points of discussion together, the outflow data we have from Bitcoin, I think you said not paying attention, but let's say lack of activity in gearing up for ETH ETF. Is it a case of like, well, if I'm an investor and I'm open-minded to putting money to work in different places, I'm holding out to wait for ETH? Is there a close relationship between Bitcoin spot ETF flows and I guess the anticipation of a new product to come?
It'll be very interesting to see what people do. Obviously, there's a lot of people that have put money to work in those Bitcoin ETFs. They're the most successful launches in ETF history across the world. So are people going to say, I'd rather have a sort of index exposure to cryptocurrency? Do I believe in Bitcoin more than Ethereum, or Ethereum more than Bitcoin? And we'll see those numbers come out once these things launch. We'll see what the flows do. We were pretty, we had strong convictions that these Bitcoin ETFs were going to be successful. And even still, the numbers that we saw come out in the months since they launched kind of blew our expectations out of the water. Like I said, we're about 15 billion now. We thought 15 billion was going to be the first year of flows for these Bitcoin ETFs, and that was pretty strong indications of what we thought was going to happen. And it looks like we don't know what's going to happen between now and the rest of the year, but it'll be interesting to see what people do with these Ethereum ETFs when they ultimately do launch. I'm more inclined to think that, I don't know, we view these things as kind of satellite positions in portfolios. People, in our minds, we are assuming are not putting significant capital to work, 50% of their portfolios. So if they're doing something like 3 to 5%, like we're hearing from these issuers are getting from their clients, maybe they just add a couple of percentage points onto Ethereum. Maybe they sell a little Bitcoin and buy Ethereum, but we won't know until these things launch. And even then, we won't exactly know what people are doing. We can just kind of read the tea leaves and get kind of an inkling of what's going on.
You're pretty good at reading the tea leaves. Okay, so on the beach, I wasn't talking about Ethereum ETFs. We were talking about interest rates whenever, wherever. When I look at digital assets or crypto as a market broadly, there seems to be, in the pullback of recent weeks, a concern about rates, but just generally this sense that we look at the crypto market as a reflection of risk appetite going forward and whatever the Fed will or won't do. What's your math on that?
Yeah, I mean, the way I look at it is, one, these assets, there's a lot of underlying belief that people have in these assets, right? But also, they are pure momentum. There's a lot of momentum at play behind this. So when we see moves like this, it's pretty standard to see big moves. I was looking at some of the numbers for the 2017 bull market for Bitcoin and crypto and the 2020 bull market for crypto. It's very, very, very common to see many pullbacks of 10% or more. In both cases, we saw pullbacks of 25 to 30% or more before we hit those ultimate all-time highs. So this is a very volatile market. I think the one thing hitting right now is Mt. Gox, which was a crypto exchange that went bankrupt in 2014. We just got announcements that they're going to start releasing those coins. And I think people are worried about the potential of $9 billion worth of Bitcoin hitting the markets and getting sold. I don't think there's a lot of caveats here and there about how much money is actually going to get dumped on the market, but I think that's really kind of like we've already in this kind of sideways to downtrend for Bitcoin, and now we're getting this news of Mt. Gox releasing coins next month potentially, and I think that's just kind of spooking markets here a little bit.
Bloomberg intelligence analyst James Seifert, it's great to have you on the program, and you've been very busy of late. We appreciate it. Okay, coming up on Bloomberg Technology, we're going to be joined by Alexandra Yazdi, co-founder and CEO of Voodoo, to discuss the company's recent acquisition of the social media platform Be Real for 500 million euros. A lot of you on Be Real. I'm not. We'll talk about it. This is Bloomberg Technology.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
Next.
It was going to keep Green World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Leading mobile apps and games publisher Voodoo recently acquired the social media platform BeReal in a €500 million deal. With this acquisition, Voodoo hopes to further its diversification into consumer apps, but it also offers BeReal a platform for growth. Delighted to say that Voodoo's CEO, Alexander Yazdi, joins me now to discuss. And I look at this, I'm so familiar with some of the mobile gaming side of Voodoo. I'm not a BeReal user. I know my producer, John Hyland, was a BeReal user at times. I think Jackie Lopez, who leads our team, also is a user. What was the impetus here? What made you wake up, Alexander, and think, this is the one for us?
Sure. Thanks, Ted. Sorry. So BeReal is amazing. It's the most successful social app created in the past 8 years. And they really created a unique behavior that is to share authentic content with true friends. And also where every single user is posting content and not just a passive consumer. And so unlike other social networks, the users really share their real lives without the fear of being judged and without all the time-consuming effort to craft the perfect facade. And their success really shows the users' crave for this type of content because they grew until to 40 million users, and the majority of them are extremely engaged. So why we acquired BeReal with Voodoo is because we think we can push their vision and mission to create authentic connections to more people everywhere in the world. And Voodoo's mission also, and why we exist, is to help products and great ideas to have the best possible life and scale by leveraging all the growth technologies and the product optimization skills we've developed on the past 10 years. First, as you said, with games, but also then with non-gaming apps, especially social apps, in the past 4 years.
It's an interesting expansion to the portfolio. Really quickly, €500 million in cash. How is the deal structured?
Yeah, so the deal is structured in cash and shares. So there is a portion in cash and a portion in Voodoo shares. And there is a part of the 500 million, which is an upfront consideration, and another part which is based on performance. So it's not the full 500 is not just a 500 upfront.
Alexander, the reason I ask is I kind of do the math on Voodoo plus BeReal. So you guys have 150 million active users monthly across basically the entire portfolio. But with Be Real, you're like instantly added 40 million more. It's an interesting use of capital. But you've been talking about how you think you can help Be Real scale, find growth. They also help you find growth pretty quickly as well.
Yeah, so we don't aim at using Be Real or games to do massive cross promotion. We like to have our apps be standalone, driven by leaders that have full ownership on their product. So we will more leverage our know-how, our technology, and our skills to grow Be Real into what it should be, which is like an iconic global social network, because the need they answer is really global, and it's a daily universal need to share content with friends. So we will just take this gem and invest all our infrastructure to grow Be Real. But it's not like using our games to take their users into Be Real or vice versa.
I think we should talk about the social media landscape and the opportunity before you. You'll be aware of what's happening with TikTok in this country, in the United States, particularly when it comes to image or video-based content, right? The competition between TikTok, Instagram Reels. In Europe, Snapchat still has a strong presence. My question for you is whether you feel that there is a demand right now for something different, new, and that Be Real is kind of reflective of that.
Definitely. I really think like social media is great, and there is a lot of social media that promotes a part of your life, which is the one you want to share, the one which is like crafted, modified, improved. But also at the same time, the users need also to have a social network that makes them able to share like their authentic lives, right? So it's two different purposes, and Be Real answered the second one, which is to share their authentic life without any filter to their small circle of true friends. So until now, no social media actually answered that need, and Be Real really grew so much without any marketing strategies to these 40 million monthly active users, because there is a need, and there is also a hole in this specific need.
Alexander, when you think about your strategy to grow Be Real, its user base and its engagement, where do you think that comes from? I mean, do you specifically say, okay, this is analogous with Snapchat or Snap, we go after those users, or we think this is analogous with current Facebook users? What are your target audiences?
So, our target audience is like everyone having a smartphone, because as I said before, really like everyone on the planet really needs to have authentic connection with their friends. So that's our target audience. Today, it's more for the Generation Z, which are using the product. And that's great, because usually the social networks can grow with this generation. And I think if we do a good job, then if we do a good job on the product side, meaning adding the right features to conquer again the users who churn and also conquer new users on Be Real, then we can grow to more users in more countries, and also targeting maybe people at later ages, like 40 plus, etc. Because Be Real didn't move that fast in adding new features to create newness and life in the product. So that's our job. We want to grow Be Real by giving the users more opportunities to share authentic content. And if we think that if we do the right job, then people will come back and we will get more users.
Voodoo's Alexander Yazdi. It's great to have you in the program. I know a lot of Be Real users watch this show. So if you're a Be Real user and you have a thought on Voodoo buying the platform, please reach out to us, and Alexander, come back on the show soon. I want to stick in other media news. BuzzFeed is looking to sell First We Feast, the media company best known for its hit YouTube show Hot Ones, which invites celebrities to eat spicy chicken wings with its host, Sean Evans. Several parties have shown interest, but so far unwilling to meet the asking price of over $70 million. Selling First We Feast could net BuzzFeed money to help pay off its debt, which has now reached more than $100 million. Let's also stick with the world of video games for a second. Actually, coming up on the show, the cyber attack crippling the auto industry is continuing. We're going to talk about that with our editor, Dana Wallman. Sorry, I got so excited because there was something that caught my eye this morning in the world of video games. This is big. Look at shares of CD Projekt. This is the Polish video games maker. It's had a bit of a tough time of it of late, but it's up more than 5%. There is a note out from HSBC, which has changed its call on the stock to hold from reduce. But actually, the headline is around the Polaris project. This is the next-gen Witcher game. For those of you out there that have played Witcher, yes, it's not just a Netflix series. Witcher's a video game. That's where it all began. And they think that the new Witcher title will come out 2027 and sell 14 million units. I've seen a lot of people talking about this on social media this morning, and there's a lot of excitement. In the short term, it was a real boost to the stock in those European listed shares. Stay with us. We will be right back. This is Bloomberg Technology.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Is your elbow working?
Yeah, he's super nice.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
Recipes written by hand and lost to time are now being analyzed and restored using the power of Dell AI.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
A hacking group called Blacksuit is believed to be behind the cyber attack on CDK Global that's paralyzed car sales across the US. That's according to a threat analyst at the security firm Recorded Future. For more, let's bring in our technology editor, Bloomberg's Dana Wallman. Tell me about Blacksuit and what we know.
Blacksuit is a known group comprised of hackers based in both Russia and other parts of Eastern Europe. And interestingly, they have not named CDK as a victim on their website. And that could mean a couple things. It could mean that CDK paid a ransom, which we don't know if they did or not. Or it could mean that they are still in active negotiations with CDK. So worth noting, and you said Bloomberg's source on this was not Blacksuit itself, but a security researcher.
I think that Bloomberg reported on Friday that in terms of an extortion fee, CDK was planning to make a payment. That's kind of like the tech side of it, right? It was CDK's platform that was compromised and them that was compromised. One of the things you've been writing about even this morning, right, it's been 5 days or so now, is that this is actually materially really impacting some of the auto and car retailers. What have you learned?
Yes, so far, by my count, at least 5 publicly traded auto dealerships have filed with the SEC, warning investors of a possible financial impact. And the wording has varied from one company to another. Some of them have said, it's a little too early to gauge the exact impact. One of them said it's reasonably likely that the impact was material. The company that so far seems the least affected of the ones that posted filings was Penske. Only because its auto dealership division does not use CDK software. It does use CDK, but in a more specialized business-facing division. And of those companies, Penske is the only one whose stock seems to be up since this hack broke on Wednesday.
So never before have many of our audience stopped to think about the software management platform that any given car retailer uses. But we learned quite a lot about CDK. Just explain its place in that industry. Because if you went to try and buy a car this past weekend, which is end of the quarter, you might have struggled.
You and me both, Ed. I had not heard of CDK before this story broke, and I certainly didn't know that one company had a really strong grip on the entire market for dealership software. I don't think anyone has really thought much about the kind of software that dealerships use, but in fact, many tens of thousands, by our count, around 15,000 dealerships in the US and Canada use CDK software, and they use it for almost everything that they do. That includes scheduling appointments, tracking repairs on cars, and closing transactions. Without this software, with the software being down, as it has been since this series of attacks, dealerships either aren't serving customers or they're resorting to good old-fashioned pen and paper when possible. And it's not even always possible to do things using pen and paper.
Dana, really quick, we just have 30 seconds, but what's the next thing that the tech and autos teams are watching for in this story?
So aside from looking to see if Black Suit takes exact responsibility, we are looking for a couple things. We would really love to know the exact amount of the ransom. We've reported so far that it's in the tens of millions. Obviously, we're looking for a more specific number than that. And we're waiting for CDK software to go back online, which of course the 15,000 dealers are as well. Every day that the software is down, these companies are, of course, losing money.
Bloomberg's Dana Wollman. It's been so busy for you and the Autos team trying to get to the bottom of this story, which we'll continue to cover. Thank you so much. That does it for this edition of Bloomberg Technology. Fast start to the week, and there's a lot to recap on the podcast. You know where to find the pod. It's on Apple, it's on Spotify, it's on iHeart, and it's on all of the Bloomberg platforms. From San Francisco, happy Monday. This is Bloomberg Technology.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
This is Bloomberg.
world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
Morning from our world headquarters in New York. I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. And sources say Eric Balchunas is back.
Just in time for the hot weather and maybe hot inflows.
Yeah, well, let's talk about some of that right now. The biggest stories right now in the nearly $13 trillion global ETF industry. First half of 2024 has flown by with stocks really sustaining that record rally. We're going to discuss what, if anything, can slow down this bullish run.
Funds have been flowing into India and Japan. We speak about any potential risks investing in those countries with Jeremy Schwartz, Global CIO at WisdomTree.
And BlackRock strengthens its active ETF platform with 2 new active funds. We'll discuss them with Jay Jacobs, the firm's head of thematic and active equity ETFs. But as promised, Eric Balchunas from Bloomberg Intelligence back with us now, and he's taking a look at those flows. Eric, welcome back.
Oh, it's great to be back, Katie. Thank you for that nice intro, and Scarlett as well. So let's look at the flows. There is a lot of hotness in the flows to speak. ETFs, we think, might even break their all-time record this year. If you look, IVV with $9 billion, that is a ton. Now, I will say there's some tax rebalancing going on this week. So some of this stuff, like cows, for example, that's not real. That'll come out probably tomorrow. But in general, we do see a lot of the Vanguard bid in particular coming in as usual. Let's look at the outflows, though. And you can see some of the trading crowd money got a little spooked by Nvidia getting sold off. Like money coming out of SPY and the Qs. Again, I think it's probably Nvidia related. XLV Healthcare, and then Soxel again. That's semis, and XBI is biotech. So clearly a little trading crowd spook, but largely everything is still relatively bullish as usual. Let's look at the international markets. We rarely talk about what's going on because we're so focused on the US, but if we look at the top single country ETF categories by flows this year, India is at the top. And then Japan, South Korea, Taiwan, and Argentina. Now, if you look at the net flow numbers, 4 billion, 4 billion, 1 billion, they're not massive, right? You know, overall, ETFs have taken in 390 billion, so these are small numbers, but these represent like 20, 25% jumps in the assets of these categories. So for these categories, these are big. Argentina in particular, that's a 100% jump, believe it or not. A lot of it is based on new elected leaders and whatnot. So some of these areas are definitely doing pretty well. I mean, obviously the US dominates, Katie, but there's definitely some hot spots elsewhere.
All right, Eric, thank you. And joining our conversation now is Jeremy Schwartz. He is Global CIO of WisdomTree. And it's hard to know where to start, whether we're talking about India or Japan, but let's start with Japan, because I take a look at your product lineup. DXJ has taken in nearly $1.3 billion so far this year. And DXJ, of course, it hedges the currency risk. So how much of that inflow is just people hiding from what we're seeing when it comes to yen volatility?
It's interesting, because I think this has been one of the biggest mistakes investors have made over the last decade. You know, the yen's at 160. It's down considerably from where it was 10 years ago. Even just 3 years ago, it's down. It's had a big move. And still, there's probably 4 times as much in unhedged ETFs. And I keep telling people, why are you betting on these currencies? The stocks are cheap. This is the classic Buffett trade. He's been buying all these trading companies, and he's issuing yen bonds, so he doesn't have any of this currency volatility. You get paid 5% to hedge. people thought it was expensive. You're getting paid 5%. And so it's been a great place, but still people have been betting too much on these currencies.
Can you talk a little bit about the costs to hedge the currency from your end as it moves in large measures? And of course, as we talk about, it's been weakening quite a bit. How much does that cost for you, and at the end of the day, for the investor who might pay for it through fees?
Well, this is a very interesting thing. I call it a better than free proposition in a sense that you're paid. So when the U.S. has a 5% interest rate and their Bank of Japan went off of negative to zero, that spread between the foreign interest rate and our interest rate is how much you're paid. So in India, it would cost you 2% because their interest rates are higher. But in Japan, you're paid 5%, So I think it's one of the big misperceptions that it's costly. It's costly for Brazil. It's costly for high interest rate countries, but you're paid this extra carry to neutralize it in the developed world.
So it's the carry trade built into the ETF, essentially.
Yes. You guys getting deja vu because
the first show.
This guy was the first guest on the first ever ETF IQ. Must have been 6 years ago, talking about the same thing. Back then, currency hedging was like all the rage. It was like a craze. Then it kind of underperformed. A lot of people left. And now it's come back and it's outperforming. But we have this phrase called, do you get a second bite at the apple? Has it been hard to get investors back in? Ones who were in the trade, went down, they got out, now you want to get them back on the ride. Has that been tough?
Well, I think people are using it more strategically. Like we still have about 10 billion in the category from our broad international quality dividend growth, which is now bigger than our European product. And we're seeing it in model portfolios. People are adding it as a strategic position. We've been starting to think about it that way. So I think people are starting to say, well, why am I taking this currency volatility? Do I really get paid to do it? And yeah, it was certainly a hot place 10 years ago, but people are rethinking about it strategically.
How much education do you have to do? What you're describing, like you say, this is such a big mistake that people make all the time, but you take a look at DXJ and you read the description, and that might not be so intuitive to maybe just the casual observer who comes across this ETF. How much time do you have to spend on education in conversations with investors and financial advisors?
Oh, for sure. It's a big educational thing. And part of it is benchmarks. People say, well, my benchmark has dollars. Am I making a call on the dollar? And so it's a circular conversation of like, what is your benchmark to say what is default strategically your baseline? So there is some education, but I think as people see the history that you lower volatility, it really has been a helpful thing to do.
Okay, remove the yen's weakness from the equation, which is essentially what DXJ does. What do the corporate fundamentals of Japan look like right now?
To me, I've been saying Japan could outperform the U.S. because you're starting with this 5% how much you're paid. They've got 2.5% dividend yield, so twice the S&P 500. 14 PEs versus 21 PEs for the S&P. They're growing dividends because of the corporate governance reform. So the fundamental case is actually very, very strong. You've got people moving away from China strategically with all the geopolitical. India, you talked about, was a benefit. Japan's a benefit. And so the fundamentals are there. Very attractive, growing the dividends, plus the 5% carry.
I get all that. It resonates with me. But I feel like people say that all the time about international. The fundamentals always look good. And yet the Qs just plows over them year after year. And it just seems like people are like, it's going to take a couple years of outperformance for people to get off the Qs and move money internationally. Do you disagree?
Well, they always say it's cheap for a good reason because there's sort of these value traps where you get a lot of, when you think about the international markets versus the US, you have the big tech stars and then you don't have any of that internationally. Right. Japan actually outperformed the NASDAQ during much of the last few years. It's been like trading like an AI stock, and they do have semiconductors. And now they were in a bear market for 30 years as the Nikkei deflated from like the biggest bubble of all time. So they're even trying to, all their investors, their local investors were in cash. They're now trying to reinvigorate them with equities. So there's still, I think, a long runway ahead of that type of market.
Well, let's talk about another market outside the US that investors are very excited about, and that, of course, is India. You take a look at EPI, for example. That's your India ETF. Big inflows year to date, over $1 billion. The performance, not too shabby either, almost 16%. You think about the political turmoil that we've seen there, the volatility that maybe certainly doesn't seem like markets were expecting. Do you think that could sort of cool some of the big inflows that we've seen?
I think this is a multi-decade story. So India has got the best demographics of the world. It's got some of the best GDP growth, per capita income that should rise. They're trying to bring people out of the countryside into sort of the traditional, what China did 30 years ago, is sort of the development prospects of that. So this is not just a short-term thing. We think that this is one of the best long-term stories. And now when you got a market like that gets so hot, you got to think about how you weight it. You don't want to just be in the most expensive stocks. It's a valuation-sensitive approach that we've done. We're also the broadest. When you look at it through the MSCI, it's 125 companies. We have close to 400 to 500 companies in our basket. So it's sort of interesting as it's most representative. That's what's been leading to the performance. The mid and small caps, actually value has worked quite well there. And so it's a long-term, multi-decade story.
We keep talking about India vis-a-vis China. How much of the inflows into India is driven by the fact that it is not China, in that investors need to replace China in their portfolio because they see it as uninvestable, and India serves as the next big anchor EM country?
You do see that in the diversified emerging market flows. EM ex China has definitely resonated and been the leader for even the broad diversified funds. And I think this Japan and India together are people viewing this as the Asia pivot. So I do think there is some of that, but it's the growth story. People are saying this is the fastest GDP. They want exposure to the consumers. So it's as much about China pivots as well as the local growth story of India.
Yeah, but isn't now the time to go into China? Because the Chinese government's not going to do a bunch of QE, and the market's been beaten up. It almost seems like your fundamental story would apply to China more than the other countries.
People keep trying to time the bottom of this China market and say, does it become so beaten down? And I'm sympathetic. The tech stocks are trading like value stocks of the lowest valuation they've had. But it is a challenge. The tensions with China don't seem to be going away. It's the only thing that unites the politicians is who can be tougher on China. And so you're going to see more trade back and forth. And maybe we'll see if we have any of that news at the debate this week. But it's just a very tough place to be strategically allocating.
All right, Jeremy, great conversation. That's a good place to leave it. Hope to see you back again soon. Our thanks, of course, to Jeremy Schwartz of WisdomTree. Now, coming up, it's a hot ETF summer. I think that's a Megan Thee Stallion reference. U.S. funds on track to set a new flow record, and there is potentially no end in sight. We'll discuss next. This is ETF IQ on Bloomberg.
The biggest ideas inspire new ones. What can you do with SPY?
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Idris Elba works here?
Yeah, he's super nice.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. It's time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with shorts fleeing the market. You take a look at SPY right now. You're taking a look at the percentage of shares of its free float that have been shorted, and that number has dipped below 10%. That is close to a record low here, as you can see in data going back to 2018 or so. So a lot of people rushing to one side of the boat. We'll see whether that works out for them. But let's talk about active managers, because they haven't exactly been performing all that well. You take a look at equity ETFs that have been outperforming the S&P 500. Just 23% so far in 2024 have managed to best the benchmark. As you can see, 2022 was a pretty good year. That, of course, was a down year for the S&P 500. It's a lot harder to beat the benchmark in a year when it's rising, and it's all been driven by one stock. And let's end, though, with U.S. inflows, because they've been pretty spicy. You take a look in orange, these orange bars that you have, so that is the average, and then you take a look at those blue dots, if you can see them, those are the 2024 dots. So, so far in 2024, of course, the flows into ETFs on a monthly basis have beaten the long-term average, Scarlett.
Yeah, but you look at that chart a little more carefully. What's interesting is there is no dot there for March and May, because they're off the charts. I mean, we couldn't even fit them in because they're so much higher than the long-term average.
Yeah, couldn't shrink the y-axis enough to get those in there. And that really just speaks to how people have been happy to shovel their money into the stock market, into these big benchmarks that have continued to power higher, with the likes of Nvidia just on a tear. Yeah, Nvidia boosting the index overall. You know, according to Goldman Sachs' trading desk, there's a wall of money coming in July. You know, that would be at the start of a new second half and the start of a new third quarter, that they see fueling the continuing rally in U.S. equities. They also see a reemergence in retail traders during the summer, and they tend to usually come in around July. So we'll see if that all plays out. July is just a couple days away, so we'll have to see.
All right, coming up, we drill down into new active ETFs, speaking of which, from BlackRock with Jay Jacobs. He is coming up next. This is ETF IQ on Bloomberg.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories, and bring your truck to life. Real truck.
AI can help your customer service people resolve issues faster, so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
This is Bloomberg ETF IQ. I'm Scarlett Fu, along with Katie Greifeld.
And Eric Balchunas from Bloomberg Intelligence. Back with us now for today's drill down, where we focus on one ETF. Eric, hit it.
Katie, today we're looking at BELT, which is an intriguing new ETF from BlackRock. A little out of their comfort zone. BlackRock brand is where their active brand. So it's long-term U.S. equity. It looks like an average active fund. It is different. I'll explain in a minute why. The fee is 75 basis points. As you can see, it just came out in June. Boom, it's actively managed. That's important to know. Basically, this is looking through stocks. You can do international as well. Looking for fundamentals. It says here, franchise strength and reinvestment opportunity. It's an active stock picker trying to beat the market. Let's look at the cross-section of the portfolio in the top 10 holdings. And the first thing that sticks out is how big the weightings are. Look, Microsoft's 12%, 7%, right? You look, here's the stocks you own. You don't own much more because it only owns 25 stocks. That is highly concentrated. And this is important for that 75 basis point fee because it really hits on something we call beta adjusted fees. Let's look at this chart that we use in BI all the time, where we look at active share in one grid, which is how different are you from the benchmark, and then fee over here. And we looked at the top 10 most successful active equity ETFs. And you can see they're all sort of above this 45-degree angle, meaning that if they're low active share, meaning not different from the benchmark, they got to be low fee. People only want to pay for the active, not the beta, because beta is now free. Well, ARK is a great example of being high active share but charging a lot. But as long as you're above the line, you have a good shot. It flows. Belt is right there. So Belt is a little like ARK in that regard. And people are a little more willing to pay when it's a small allocation. So, Katie, it's in good shape, but it's got to deliver the returns now, and that's the hard part.
All right, Eric, thank you so much. And joining us to talk about this ETF, I am thrilled to say, is Jay Jacobs. He is U.S. head of thematic and active ETFs over at BlackRock. So let's talk about Belt. You take a look at the portfolio managers. One of them is Alistair Hibbert, who, if I remember correctly, he manages one of BlackRock's largest hedge funds. So what does it say that you have one of your hedge fund guys managing an ETF over, in the iShares franchise?
It's really about taking our world-class managers and bringing them into the structure that is increasingly the vehicle of choice, particularly among advisors, amongst RIAs, and even more narrowly amongst model managers that are building ETF models that they can scale and make repeatable to their clients. So this is just about matching great managers with a great vehicle.
Sounds like BlackRock believes that in the whole star fund manager idea.
Absolutely. I mean, we have plenty of great managers across our platform. We brought out a Rick Reeder ETF Bank last year, which has brought in $3 billion in assets. We're bringing out the Alistair Hibbert product. We've brought out a Tony DeSpirito product, investing in value stocks. So it's really about taking those managers that, in many cases, they've established great funds and great performance in the mutual fund structure, now bringing them into the ETF.
Now, obviously, we come up with that beta-adjusted fee demarcation line, which is a little like my equals MC squared. Do you guys find the same thing when you talk to people that you either have to be cheap or shiny, whether you're active or passive?
What we want is differentiated alpha, that if you are going to go into an active manager, you want to be getting something different and you want to have a real edge within that difference. So when we look at Belt, really we see clients using this as a barbell approach. Get your low cost, broad, tax efficient, super liquid IVV exposure in your core, and then barbell that with something that's going to give you a little more alpha on the side.
So yes.
Yes, I mean, in the sense that we want to have that active share, absolutely.
Did you get the idea from my chart?
No. Okay. No. This is about bringing out alpha strategies into an ETF.
Could you just tell them yes? I feel like that would really...
I do think an important thing
page.
here...
We're just saying it
No,
differently.
and I think an important thing, what we do look at is active share. And so what we look at with Belt is that this is 80% active share. This is very different from the S&P 500, and that's important to us. We believe if you're going to create this barbell, you can get that cheap IVV exposure, but you want something different.
I think that's so interesting, that high active share, because if you take a look at recent launches across the industry, not just BlackRock, it feels like ETFs, the active equity ETFs, have been getting more and more concentrated, that if you're going to take a swing, it might as well be a big swing. And with that in mind, you think about a product such as Belt. I mean, how much of an allocation makes sense when you think about a holistic portfolio?
Oh, we've seen 10, 15, 20%. And the reason I can say this is there's another fund. This is a little bit differentiated, but Alistair Hibbert also runs a mutual fund, the BlackRock Unconstrained Equity Fund. And we've seen people allocating at that 10, 15, 20% level in their equities. So people get really comfortable with this barbell. What it really comes down to is how do you want to manage tracking error? This is a high tracking error strategy. IVV is basically zero tracking error. It's tracking the S&P 500. So how do you want to kind of control those two levers to manage your active risk?
If this were a passive fund, you'd have a rebalancing frequency of probably once a quarter or maybe once every 6 months. often does Alastair Hibbert change up the stocks in the portfolio, given that it's a pretty small holding in terms of 20, 25 names?
Yeah, very infrequently. So turnover is less than 20% annually in this portfolio. We expect that your average position is going to be held for over 5 years. It really is a long-term unconstrained equity fund. The idea is, how do you pick stocks today that have powerful moats around them with established businesses that are going to compound earnings, have structural tailwinds behind them, and fiscally conservative management teams to really compound and grow those earnings over the long term?
All right, and let's look at another one you launched, which is BRHY, which is an active high yield bond ETF. This makes a lot of sense to me. If you look at the numbers, high yield managers really do a lot better beating the benchmark than active equity managers on the whole. So I see that this one's a little less active share, right? You hold 800 high yield bonds, HYG holds 1,200. So you're not that concentrated, but your fees lower at 40 basis points. So that sounds also like it's similarly looking at that line that we just showed.
Yeah, and this is an example of taking a strategy that exists very substantially similar in the mutual fund structure today, which is the BlackRock High Yield Fund, and bringing it out in an ETF. It's the same portfolio manager, same objective. So it's really bringing that strategy into the ETF structure. Eric, what I think you'll appreciate is just how much a lot of our active strategy is driven by models. So if we look at the last few years, from 2021, about 1 in 5 models allocated to active ETFs. Now it's 1 in 3. So you're seeing a lot more models allocating to active ETFs. And the average position to active ETFs in those models has grown from about 2.5% to over 6%. So more models allocating to active and bigger positions in active going forward.
Well, I want to talk a little bit more about BlackRock's overall active strategy. Of course, we're talking about these 2 recent launches. BlackRock has been more actively launching active funds. But if you think about the universe overall, I mean, active ETFs are so far dominated by JP Morgan, Dimensional, Capital Group. It's not an area which BlackRock dominates, which is pretty rare in the ETF world. So what are BlackRock's ambitions in this space? Do you want to be number 1?
Absolutely. And this is really about building our active offering in the ETF structure to complement our active offering that exists in mutual funds and SMAs and CITs. So really, when we go to clients, we have a full complement of strategies across different vehicles. We've grown it substantially. Just over the last year, we've about doubled our active ETF offering from around 20 funds to now 40 funds, and we're at $25 billion in assets. So we are really investing in this space to bring out the right vehicle for our clients.
Are you seeing the growth in active ETFs come in any way at the expense of your passive products?
No. The passive products continue to grow. Well, the asset management space generally continues to benefit from new money flowing into it. I think what's great is you see investors shifting from picking individual stocks to buying ETFs. So that's people going into passive and active. You see the growth of models, which is really systematizing exposure to ETFs, whether it's index and active. So this isn't either or. This is really both passive and active growing together.
Okay, 60 seconds. Ether spot ETFs are with the SEC. They're probably going to be approved soon. When are they coming out, and how much marketing firepower are you going to put behind this?
Well, I can't talk about filings that are with the SEC today, but what I can say is we've been thrilled with the launch of IBIT, our Bitcoin ETF. We've raised over $20 billion in that fund since January of this year. I think what it's highlighted is just tremendous appetite for digital assets in the ETF vehicle. So just like we were talking about active making its way into the ETF vehicle as a vehicle of choice, for digital assets, it's solving being able to buy it in your brokerage account, sitting alongside stocks and bonds. It's making taxes more, simplifying taxes, tremendous liquidity with penny-wide bid-ask spreads. And we're bringing out that education to advisors who previously really haven't had access to these assets before. So I think continuing to invest in our digital asset space is going to be key for us.
I mean, IBIT flows year to date have just been insane. We barely even touched on it, so we'll have to get you back again soon. Our thanks, of course, to Jay Jacobs over at BlackRock. And if you just can't get enough of ETFs, good news, subscribe to my weekly ETF IQ newsletter that covers the industry. But sadly, that does it for Bloomberg ETF IQ. I'm Katie Greifeld, along with Eric Balchunas and Scarlett Fu, and this is Bloomberg.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
with ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Idris Elba works here?
Yeah, he's super nice.
River dolphins are very good ambassadors of the rivers. I'm Fernando Trujillo. I'm the scientific director of Omacha Foundation. I'm a National Geographic explorer, and I work with pink river dolphins in the Amazon. Dolphins are very clear indicator of the health of the river. So we are trying to evaluate their health. Already we have covered 52,000 kilometers of rivers. And we have trained more than 500 people. We can learn about the whole river system from these wonderful mammals. I want to connect all the planet with the Amazon.
The Amazon is a vast and highly interconnected ecosystem. 3 million plant and animal species and 40 million people live within it. A key part to this connectivity lies in the water that travels from the top of the Andes Mountains down to the river mouth at the Atlantic Ocean. To investigate this connectivity further, Rolex and National Geographic have launched the Perpetual Planet Amazon Expedition. I'm joining 7 teams of explorers working throughout the river basin, an area threatened by climate change, deforestation, and biodiversity loss. They'll be gathering data, conducting scientific research, and gaining local insight on this crucial region. Their work is shedding light on how best to protect the river basin so that it continues to sustain life well into the future.
I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Welcome to Bloomberg Markets. I'm Shanali Bassick. Stocks begin the week with renewed volatility as the market rally takes a breather. Let's get a check on these markets. The S&P 500 looking for some direction, still up on the day, about 0.3%. Cannot say the same thing, though, for the NASDAQ 100. Tech-heavy stocks now down about 0.3%. And for the first time in a while, bonds still looking for direction here. Pretty much no bid at all. Barely a bid here. You have a gentle move in the 2-year by just about a basis point, but basically flat on the day at 474. And the 10-year standing flat generally as well at 426 on the day. Some midday movers on the equity side. Nvidia rallying or falling finally for the third day. It has lost roughly $400 billion in market cap since Thursday when it was valued above $3.3 trillion. And Bitcoin is down after the crypto market's second worst week of 2024. Demand has cooled amid uncertainty over monetary policy, and some on Wall Street believe that this is a precursor for a broader stock market downturn. And the bifurcation between the S&P 500 performance and breadth has reached one of the worst levels in 3 decades, and you see it with the cooling of the risk rally here as well. Bringing you Alex Semenova, who joins me, who wrote the story about this lack of breadth. What's going on?
Yeah, so the U.S. stock market is on pace for one of its best first halves of a year ever. The S&P 500 has been hitting record high after record high. But if you look under the hood, there is some reason for concern, at least in the near term. So even as we're getting all these new highs on the S&P 500, the number of stocks participating is actually decreasing. So it's not so much that breadth has become bad at this point, but the gap between S&P performance and breadth is starting to deteriorate. It has hit a level we've only seen 2 other times in the past 30 years, and both those times times in September 2021 and in May 2023, they preceded a period of weakness. So that suggests that we could get some near-term consolidation.
What does this mean for overall market sentiment? We were kind of showing you today just how far Nvidia has fallen over the last couple of days. Even Bitcoin, which saw so much love, you're not seeing the interest rate move downward impact these fast-growing high-tech stocks anymore.
Right, so even though we might get somewhat of a pullback near term, that's the expectation on Wall Street now, there's no sign that it's going to turn into something more nefarious at this point, because we are getting the same, economic data readouts. We are on the same path for interest rates where the next move is likely going to be a cut, whenever that might be. But we are in this period where we aren't getting, we're waiting for the earnings season. We're getting this uncertainty in the economic data, so there's not much of a catalyst at this point to get things going in the market. That's why we've seen the strength in big tech and then some of the rest of the market really lagging. And so that creates concentration risk, where if something happens with tech stocks, then that's really going to weigh heavily on the market.
Right. Reminder that earnings season is really just around the corner, especially those bank earnings. We'll get more about the consumer. What are you preparing for when you look at earnings season ahead, particularly when there's such a lack of a catalyst in the stock market today?
Yeah, so the thing that everyone is waiting for is for the rest of the 493 companies in the S&P 500 to grow their earnings last quarter. In the first quarter, we saw that, the Magnificent Seven still led the way, while the rest of the market's earnings growth was flat. But much of Wall Street is expecting that gap to close by the end of the year or by early next year. So that's going to be one thing to keep an eye out as the earnings season gets underway.
Bloomberg's Alex Semenova, thank you for your time and for your reporting. Very close eye on these markets. And we spoke to Mizuho's head of investment and corporate banking. Michal Katz says 2024 is the year of execution. I spoke with Katz for an exclusive ahead of our Bloomberg Invest conference tomorrow.
As you reported, back in May of 2023, we announced the acquisition of Greenhill, which we subsequently closed around December. And that was a great opportunity for us to acquire a premier M&A and restructuring firm to expand our talent and capabilities in the U.S. in our pursuit of building a full-service platform. As you know, M&A constitutes somewhere around 40% of investment banking fee pool, and that was an area that we were underweight in. We had done what I think has been a great job over the last decade or so, building out beyond our lending capabilities, built a formidable capital markets platform in investment grade, equity capital markets, and added on to our leverage finance. But in M&A, when deal activity was actually down over the last 2 years since the high water mark of 2021, we saw an opportunity to lean in and acquire Greenhill. From our perspective, it was what I'd say opportunistic. But what was more unique for us is that it was incredibly aligned with our culture as well as our strategy. Greenhill historically had focused on public companies, more complex transactions. It also had some hidden gem in terms of having a restructuring practice and a private capital advisory in the secondary side, which complemented our primary fundraising business, which we acquired back in July of 2022 through the acquisition of Capstone. And I would say Greenhill was also a global business. As you know, Mizuho is a global bank. Our home market is in Japan, but we have offices worldwide. And Greenhill has 15 offices worldwide. And so there was an opportunity for us to add on to talent, add on to capabilities on a global basis. And what's interesting is that Mizuho had power alleys in the power, energy, and infrastructure space, as well as TMT. And Greenhill had great capabilities in healthcare, industrials, and consumer. So putting it all together has been, at least at first blush, incredibly interesting. And then 6 months in, as we're working together, we're already beginning to see some of the fruits of those, I would say, assumptions and expectations.
So more than 6 months in, how do you think about the expansion opportunity ahead? Are you looking to add more talent in the investment banking ranks of Mizuho?
So for starters, I would say this is a year of execution for us, which is executing on the strategy that we have laid out, and our ambitions has been to be squarely positioned as a top 10 investment and corporate bank in the U.S. market. We have been, I would say, more strategically adding on for both kind of the Mizuho platform, such as leverage finance, where we have added on bankers from other bulge bracket platforms, particularly as there is pent-up demand in private equity, and maybe we'll talk about that in a bit. But we've hired in leverage finance. We're also hiring in select industry verticals, notably in in the financial institutions, healthcare, as well as infrastructure, which is a big area of focus for us as a combined platform.
Now, it's interesting. I'm glad you brought up the private equity world, because certainly there has been a resurgence in debt capital markets in 2024. What does that mean for the leveraged finance business? You are just starting to see the excitement come back there.
So I'll start off by saying we've absolutely been seeing rebound across M&A, private equity LBOs, as well as some dribbling into the IPO markets. But activity in 2024 has not panned out as expected. Most of the activity has been highly concentrated. When you think about the M&A side of the world, 40% of M&A activity has been with mega transactions, whether it be in the energy space, TMT, financial institutions. On the LBOs, we've certainly seen some of that. But when you take a look at the broader M&A volumes, private equity has still, I would say, on the sidelines, constituting 25% of overall activity compared to the 35-40% that we've seen in recent years. So certainly a rebound, but there's a lot more pent-up demand. There was a Bain study that came out and said that there are 28,000 portfolio companies sitting in private equity firms, 40% of which are 4 years or older. So there is clearly, I would say, demand to monetize some of those. Also, as we know, private equity had raised massive funds, which they have yet to deploy. So we're beginning to see some early days of activity, but hopefully there'll be more to come as we get through the elections and beyond.
The 28,000 companies there that are ripe for exiting, is that how you look at the potential base of future clients?
Part of the base of future clients. As I mentioned earlier on, we do focus on publicly traded companies, which have been very active participants in deal activity. They're well capitalized, and there is an opportunity for them to achieve synergies in pursuit of growth, innovation, as well as consolidation. That's one area. Second is the private equity world, which we just talked about. But let's not forget that there are also 1,400 unicorns in addition to other cohorts of companies that have been funded by the venture capital community, which are similarly looking for an exit in what has been a rather muted IPO market. And so when we take a look at what is the potential client base, it does span companies all the way from the venture side, or I would say growth venture, to the private equity, as well as publicly traded companies, mid-cap as well as large cap.
Where are the opportunities most ripe for M&A now? You were talking about that potential for publicly traded large cap deals. Do you think that we can see more of them in the next 12 months, and in what industries?
So I would kind of put in a couple of different categories. Certainly, there are opportunities for large cap companies to continue to utilize their strong balance sheet and access to the capital markets to expand, grow, consolidate. But there's also companies that need to transact, that may not have that access to the capital markets, who may be looking for a home. And so, broadly speaking, I would just say that you ask which sectors are we excited about. There are those that are very much supported by strong secular trends, which are going to be multi-year, perhaps multi-decade, whether you're thinking about AI. We had at our tech conference last week, Arvind Krishna, the CEO and chairman of IBM, who talked about AI being the first of a 9-inning game. And so those are multi-year trends that we look at. Secondly, infrastructure. There's going to be enormous amount of demand to build out infrastructure, both in core, whether it be toll roads, airports, ports, as well as core plus, being digital data centers and just driving digital transformation, whether it be in automation, whether it be electrification, and what have you. We've been talking a lot, and you've talked a lot about AI and the build out in data centers and the electricity that would be required to power those. And so there are several different trends that would support a multi-year, multi-decade investments. And then there's those that potentially could be more tactical. And then I'd put the last pool, which is potentially companies that are looking to focus on their core businesses. And so spins, splits, and then those divestitures could also be on our part of M&A activity.
And don't miss our Bloomberg Invest event with leaders in asset management, banking, wealth, and private markets. This week, we will be airing the best moments from our conversations on Bloomberg TV and radio, including those conversations with Boaz Weinstein, Todd Boehly, Katie Koch, Gary Gensler, and many, many more. This is Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. The world has very few experts in C++ and C, but the world has many people who knows how to converse and ask somebody for help. Instead of instruction-driven computing, it's now intention-driven computing.
This AI opportunity is really tremendous. You have an ecosystem of companies coming together along with all these incredible innovations. It's causing a new industrial revolution.
This is a tsunami, Ed. This is a tsunami of change. And only the smart ones are going to recognize I have to plant the flag now.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
This is Bloomberg Markets, and I'm Sonali Basak. It's time now for the stock of the hour. We're watching shares of Target and Shopify after the companies announced a partnership to further expand Target's online marketplace. Bloomberg's Spencer Soper reported on the news. He joins me from Seattle. And, one of the bigger questions here, Spencer, is what does this do for Target in terms of competing at a greater scale with the likes of Walmart and Amazon online?
Yeah, Target desperately needs to catch up. They've been really flat-footed when it comes to selling things online. And initially, they kind of said, we'll have an online marketplace, but it's going to be much more curated and less cluttered. And they just didn't really have much inventory. When you think about, sites like Walmart and Amazon that have hundreds of millions of products, they just can't compete with that. And so by linking up with Shopify, they can kind of latch on to millions of merchants right away and just offer more diversity in their online marketplace.
Now, what does this mean for the people that have options to shop online and they're curious about how to pay for the goods that they're getting? When you think about Shopify, you think about, for example, their relationship with Affirm and buy now, pay later. Amazon has also been trying to widen their payment plans as well. Is there an opportunity here to really just tap into more flexible forms of payment?
Yeah, I think everyone's trying to do that, especially now with consumers tightening their belts a little bit. If you can do anything to make that purchase price seem more palatable, either by spreading the payments out and maybe not just putting it on a credit card, even though it's pretty much the same thing, you're committing to payments down the line. But yeah, they're all just trying to dial up that conversion rate a bit. So certainly you'll see those kind of options. Retailers are going to be offering them more and more as consumers pinch their pennies.
Bloomberg's Spencer Soper, thank you so much for following this story for us. Of course, an interesting one in the world of stocks and in the world of e-commerce. Now, coming up, we're going to talk to Santander, out with a new survey on the financial state of middle-income Americans. We're going to get the exclusive details with Tim Wennes, CEO of Santander US. That's up next. This is Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture. That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Bloomberg.
This is Bloomberg Markets, and I'm Sonali Basak, and it's time now for our Wall Street Beat. Santander is out with a new survey on how inflation, interest rates, and housing costs are impacting its 750,000 middle-income banking customers. That's defined as households making between $50,000 and $148,000 a year. Joining us now with the exclusive details is Tim Wennes, the CEO of Santander US. And a lot of people are out there thinking a lot about how higher interest rates are impacting the consumer. Where is the consumer starting to break? What does the data show you?
First, I'd say, Sonali, that consumers remain optimistic and resilient. Right? You still have 3 in 4 Americans who feel like they're on the right path to financial prosperity. And we've seen a lower percentage of people, about 20%, who are feeling insecure about their financial future. But 90% of consumers are cutting back on expenditures to handle unexpected things and higher prices driven by inflation.
Well, what was staggering about this survey as well is even if you have some optimism baked in there, you have more and more Americans that are looking for that second job to really be able to pay their bills at this form in time. There's a lot of people saying inflation is abating, but your survey still shows strains.
3 in 4 of the consumers we surveyed this quarter said they saw prices continuing to increase, particularly focused in key areas, groceries, at the gas pump, and utilities. And 90% are cutting back on expenditures. So that's still substantive. And we also saw the majority saying that they're planning to spend less on vacations and travel and leisure this summer.
What does this all say to you as somebody who runs a massive U.S. bank on how the consumer may look to the credit markets in the future?
I do think that the consumer they're making the adjustments to higher inflation. The thing that was most surprising to me is over 40% of middle-income Americans surveyed said they took a second job in the last 12 months, either with the gig economy or something, to help pay their bills. So it tells us that with high prices, we should continue to see the economy slow. We had 28% of those surveyed say that they've put off purchasing a new home in the last 12 months because of affordability issues, and 55% have put off purchasing a new car. So there is some pent-up demand, but people are struggling with respect to being able to acquire the things that they need or want for their financial prosperity.
How do you think about that last part of the equation? You're a major auto lender as well, and if people are putting off the ability to buy cars, how do you think about how their behavior may look moving forward?
I think people are working hard to stay in their cars. And so while we've seen a normalization in terms of delinquency rates, we're at pre-pandemic levels in our auto business. We're seeing lower loss rates as people may fall 30 days behind, but then they're juggling payments. They're finding a way to make that payment because they need that car in order to preserve the job and in order to get to work on a daily basis. That being said, I also think we're going to see used car prices be relatively resilient because with half the people saying they've put off purchasing a car, 45% say they intend to purchase a car in the next 12 months.
Tim, how do you see the housing part of the equation working out? If you have so many of your customers telling you that they can't afford a home, at what point do they figure out how to make that part of their equation? Do they start to let go of that American dream?
One of the other surprising factors for me in the survey this quarter was that the majority, more than 50%, said that they did not believe home ownership was required for their financial prosperity. That's a big change from conventional wisdom and conventional thinking here in the past 5, 10, 15, 20 years.
It's a massive change. And if that's the truth, then where else are they spending their money instead?
Yeah, well, we've also seen rents rise, but also we've seen a pretty healthy savings rate. There's been a lot of discussion around people spending down those pandemic savings. And our survey said that people are still continuing to add incrementally to their savings and are feeling relatively stable about that. My only other comment there is we still had a survey that 20% of consumers they weren't aware of the rate that they were earning on their interest rate. And one of the benefits of higher inflation is higher interest rates and higher interest that you can earn on your savings. And so more people could be taking advantage of that. We still have seen 60% of the people haven't taken advantage of moving their money to a higher rate savings account or certificate of deposit.
Well, it's pretty incredible. Do you think that many Americans might miss that opportunity?
I think that this would say that 60% are. And those who do know their rate, 50% were earning less than 3%, which, right, if they looked around, they could find a certificate of deposit or high yield savings account that could yield more than that.
How do you think about this also back to how you run your bank? You're getting all of this information about where people are moving money. We're in the precipice of a potential interest rate cut later this year. How do you take the information you're getting in and positioning so that you're meeting the new needs of these consumers?
We do this in terms of us trying to make sure that we're making our consumers aware of the higher rates of interest that they can earn on this savings that they've worked so hard for. Yeah, in terms of certificates of deposit or high yield savings. And then also just being really thoughtful in terms of the lending side and making sure that we've got options out there for as many consumers as possible.
Where do you worry the most, Tim? Do you think that one potential rate cut can start to ease a lot of these strains that consumers are feeling on the credit side?
I think it can. I worry on the geopolitical front that there could be some other surprise or something else that impacts the economy in some way that's unexpected today.
Tim, we thank you so much. That is Tim Wenis, the U.S. CEO of Santander, of course, on a highly watched corner of the market. I'm Sonali Basak. That does it for Bloomberg Markets. Of course, you have a very mixed day in the markets, and as we let you go, taking a check on those markets, of course, those bonds roughly flat on the day still, and the S&P still up, but only about 0.2%. The NASDAQ 100 widening its losses on the day, about 0.5% lower. Keep an eye on these markets through the close. Balance of power up next. Of course, massive weeks in politics with that debate just around the corner and volatility inching under the surface of these markets. This is Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
By 2030, over half of passenger cars sold in the U.S. will be electric. But for EV adoption to increase further, costs need to come down a lot. Today's connected factories can play a similar role in making EVs more affordable. With the Next Level network from AT&T Business, manufacturing leaders are using reliable and secure connectivity to create the assembly line of tomorrow, so we can all drive toward a sustainable future.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture. That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Israel says intense fighting in Gaza will soon end, even as Benjamin Netanyahu at last rejects the idea of a permanent ceasefire with Hamas. Welcome to the fastest show in politics. I'm Joe Matthew, alongside Kaylee Lines today in Washington. And Kaylee, we're now 1 month away from Netanyahu's visit to Washington.
And the tenor of that visit and his remarks to a joint session of Congress will probably be colored by what happens over the course of the next 4 weeks and whether or not that actually includes an opening of a new front in this war, no longer just fighting with Hamas in Gaza, but potentially fighting with Hezbollah more directly on the northern border with Lebanon.
Yeah, that northern border has been a bit of a war zone since October 7th. But the question, and we've been asking it every day here, Kaylee, for a couple of weeks now, will Israel essentially declare war against Hezbollah? And that's something we're going to talk about coming up with Nick Wadhams in an interesting conversation here that we'll be having as well with General McKenzie, now a retired General Kenneth McKenzie, and his view on the future of the Middle East.
And of course, we'll be talking about how that foreign policy challenge, one of the many foreign policy challenges the U.S. is facing, is going to factor into the CNN presidential debate coming up on Thursday, and how both candidates are polling ahead of that event. So a lot is coming up this hour. First, though, as always, let's kick it off with a check on the markets from Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. And here's what's going on. We have got the Dow, the S&P, they're both higher. NASDAQ in the red. S&P 500 holding on to its gains even as Nvidia falls. Nvidia right now down 5.2%. S&P up 8, up 0.1%. The Dow up 305, up 0.8%, while NASDAQ is slumping 89 points, down by about 0.5%. 10-year at 4.26%. The 2-year 4.74%. Gold up $10 the ounce to $23.31, up 0.4%. While West Texas Intermediate crude oil is up 1.1%. WTI 81.60. $1.65 a barrel right now. Alnylam Pharmaceutical shares are soaring 34% after its drug succeeded in treating a progressive and deadly form of heart disease, potentially opening up a new avenue for the company's top-selling product. Again, we've got Alnylam up now by 34%. And just getting word that Paramount Global is raising the price of its streaming service, all part of a push by the TV and film giant to stem losses in its online business. Paramount right now up by 0.9%. So again, recapping, a down day for Nvidia as it moves into correction territory, down 5.2%. S&P now holding on to a 7-point gain, up 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York, thank you so much. I am Kaylee alongside Joe here in Washington, where we're trying to dissect the messaging we're getting out of Israeli Prime Minister Benjamin Netanyahu. It was over this weekend, Joe, that he gave an interview to Israeli media in which he seemed to just reject the prospect of the ceasefire deal with Hamas that was laid out by President Biden at the end of May. Right. To the Knesset today, though, it seems that he has made an attempt to try to walk it back, telling them in part, we are committed to the Israeli proposal that President Biden welcomed. Our position has not changed.
Okay. We've heard that before, though, as well, and their position being not until the end of Hamas, and it's pretty difficult to tell when, if ever, that will happen in Gaza. We saw a lot more fighting in Gaza City over the weekend, and you're right, every time Benjamin Netanyahu does an interview, the ground seems to shift under the Biden administration here.
Yeah, and it raises the question of what is being targeted perhaps in an Israeli audience. Again, this was Israeli media versus, say, the English video he put out on social media last week talking about American weapons shipments to Israel. He does seem to be targeting these messages, and maybe that is one of the reasons why these messages could be read as a bit inconsistent. Yeah,
we turn to Nick Wadhams for some clarity here. Of course, runs our national security coverage in Washington, and with us at the table. Nick, it's great to have you back in the mix. What do you make of this? To Kaylee's point, it was May, that Friday in May, that Joe Biden rolled out the ceasefire proposal that had apparently been approved by Benjamin Netanyahu. It is now officially off the table. He said in this interview that he would only go for a temporary ceasefire and partial hostage release. Was there ever an actual deal?
I think that the answer to that is almost certainly no. There was never a deal. What you saw there, according to the sources we've been speaking to for the last several weeks, is this was essentially a gamble by the Biden administration where they laid out the terms of a deal where the devil was always going to be in the details. You had phase one, which was this temporary ceasefire, and then the possibility of a limited hostage release, moving to a phase two, which would be a more permanent ceasefire, and then phase three. And the question was always, how do you get from phase one to phase two? And there was never any agreement on that because, and this is just the central tension that has been in this all along, is you have Israel saying they are not going to stop until Hamas is eradicated, Hamas saying they are not going to agree to a ceasefire unless they are left in power in Gaza. How do you reconcile those two things? You cannot. So I think you're really seeing an administration here that is finally perhaps coming to terms with the fact that this is a rock and a hard place. There is no solution here. Do they look for other means of leverage on Prime Minister Benjamin Netanyahu? But for the time being, this ceasefire proposal is pretty much not going anywhere.
Okay, so if a ceasefire is going nowhere, if a solution to Israel's Hamas issue is yet to be found, can Israel realistically be fighting a war simultaneously against Hamas and also with Hezbollah? How do they do both at the same time? Are they really going to?
Well, and that is something that the Biden administration has really been pressing the Israelis not to do for a long time. A lot of their diplomacy in the last several months has been against opening that second front precisely for that reason, both obviously the military pressure that it would put on Israel, but opening up this whole other conversation and source of tension with the rest of the region and then provoking the possibility of a much wider regional war, which would just create even more instability. I mean, it was notable that Prime Minister Netanyahu and his government said, listen, the campaign against Hamas is winding down. It's almost sort of saying we see the end is in sight. Now we're turning to this issue of Hezbollah. So the Israelis seem implicitly to be recognizing that they can't do both at once, and they want to turn their attention to Hezbollah. I mean, this is a huge concern for the Biden administration right now. They really do not want this. They have a special envoy, Amos Hochstein, who has been dispatched to the region essentially to keep this from going on. But the question, as always, what leverage does Biden have over Prime Minister Netanyahu? It seems like a lot less.
Israel's defense minister is here now having this conversation with the White House, right? This video from Hezbollah Saturday night, pretty scary stuff, showing coordinates, displaying coordinates near a central Israeli airport, 2 power plants, a nuclear research center, a cargo port, and a gas field, implying they will bomb all of these installations if Israel declares war on Hezbollah. Is this confrontation seen as inevitable?
I don't. The administration does not think it is inevitable, and feels that they can do what they did over the last couple months, which was head it off. And they also argue, you saw what Israel did in the face of that drone and missile barrage from Iran a few weeks ago, and maybe they would be able to do the same against Hezbollah. Very different situation, though, given how well supplied Hezbollah is. I mean, I think what you're seeing there almost is a messaging a game of chicken by Hezbollah, essentially saying, if you decide to do this, here's what you could see, which understandably is provoking a lot of concern, because for all of the opprobrium and the isolation that Israel has faced over its handling of the war in Gaza, in the region, a war against Hezbollah is going to make that go up exponentially, so they're going to have a real problem on their hands.
All right, Nick Wadhams, who leads Bloomberg's national security coverage here in Washington. Thank you so much. And of course, Joe, as Nick speaks to the idea that the Biden administration obviously has been dogged by this, pushing for a ceasefire, as this is a big political problem for the president. It also is influencing races down the ballot, including an important race that's happening in New York tomorrow, the primary against the incumbent Congressman Jamal Bowman up against George Latimer. And it's their policies toward Israel and Gaza that are really seeming to define this race.
Yep, big contrast. Bowman considered part of the squad, as we call it here, and I think we all know how the squad feels about Joe Biden's policies in Israel and in New York. It's a very interesting test. This is going to be one of several races we're watching on another primary day tomorrow.
Yeah, and we want to get more into it now with Spencer Kimball, who is joining us. He's executive director of the Emerson College Polling Center. They have been looking at this Democratic primary race in New York and found back on June 11th that Jamal Bowman is losing by 17 points to his challenger, George Latimer, 48-31. So, Spencer, welcome to Balance of Power. Thank you so much for being with us. Is all of this really going to come down to the Israel question?
Well, to some extent, Kaylee, because we asked the question about Israel, and it seemed like the district broke in the same manner as it did in the ballot test, with about a plus 20 in favor of more support with the Israelis. But it's a pressing question in the district. And as we know in primaries, it's all about turnout. So we'll see if Bowman's able to get out maybe more of the vote than what we expect.
Well, what does it look like here? Is this could be a difficult night for him? What does your polling show?
Yeah, we have Latimer up by 17 points. He was up about 48%. This was done a couple of weeks ago. There was about 21% that were undecided. So technically, you can see there's a range that Bowman could pick up some late support. You saw some rallies over the weekend. I think Bernie Sanders, Senator Sanders was there, AOC. They did some back-to-back rallies. We'll see if that turns out a big turnout. But the early vote, the numbers we were looking at this morning, seems to be favoring Latimer a little bit as far as where that vote is coming from those, first couple of days.
Well, when we consider where the vote is coming from, it's also a question of the age of the voter, right? Spencer, I noticed in your polling, voters over 40 tend to break to Latimer, but Bowman is leading voters under 40. So does this really come down to that youth vote, if you will, and whether or not they show up tomorrow?
It will. And in this district, that youth vote is not as strong as in other parts of the country, even in other parts of New York City. So this is not going to be, we're not expecting an overwhelming youth turnout. If he's able to get one, we'll see if he can narrow that lead, particularly in the Bronx. But there's also going to be a very strong older vote. And that's what we normally see in these primaries. And that's where he struggles. He's trailing 2 to 1, 3 to 1 in that older vote. And, it looks like about 10,000 people voted early as well. We'll see how that vote breaks, because those will be some of those early numbers we see tomorrow night.
Well, Spencer, we want your take on the big debate this week from your perch at Emerson College Polling Center. I can only imagine the watch party in the little building on Thursday night. But based on history, should we expect to see a bump for one candidate or the other here? There's been a lot of talk about how it could be different this time as well, because a lot of folks won't hear anything about it till they go on Twitter the next day.
Well, we'll see. Traditionally, the first debate does not go well for the incumbent president. We've seen this historically with Ronald Reagan back in 1984. We see it with George Bush in 2004. So that even Barack Obama didn't have a good first debate. In fact, some people would say that it was Vice President Biden that helped him out in 2012 against Ryan. So that first debate's tough for the incumbent. It'll be interesting to see how President Biden handles that, if he's able to kind of buck the trend of that incumbency and is able to have a strong debate, considering how early this debate is in the cycle. Generally, these don't come out till September. And having this now in June puts a lot of pressure on both candidates because neither is technically their party's nominee. So it'll be interesting to see if there's any fallout from the debate.
Yeah, just presumptives sharing a stage on Thursday evening. It certainly is an interesting moment in history, Spencer. What will also be interesting is where they go after for the debate spin, the post-debate spin, rather. Despite all of our conversation that we have on this program and others like it across all of the networks about the swing states ultimately being the deciding factors, Donald Trump is going to spend Friday in Virginia, and Joe Biden's going to New York and New Jersey. Should we be expanding our swing state list?
Well, I do think we need to be looking at some other states that traditionally have voted mostly Democrat. For example, Minnesota. We've done a couple of polls out in Minnesota where we've had it very close to tied. And that's a state that we're keeping an eye on. We have not polled Virginia yet, but we have seen other polls out there that have that race close to tied as well. New York, I think, is an interesting example. We have it at 7 points. Our friends over at Siena have it at 8 points. That's a state where Biden wins by 23 points. And we'll see if those numbers hold, or if Biden's able to get his base and be able to put that coalition back together.
So if you're standing at the corner of Boylston and Tremont, pulling people aside today, Spencer, and asking them about the guilty verdict, what are they going to tell you? And is this going to come up on Thursday night?
Well, Joe, at Boylston and Tremont, the guilty is, there's a big party here. This is one of Biden's strongest, probably, corners of the country. But outside in the rest of the country, they're pretty much split on it. A plurality of voters, it didn't impact their vote. I think overall for that independent vote, and that's a key vote here because Biden's losing independents right now in these swing states, and he won them back in 2020, is that they find it less likely that they're going to support Trump because of it. It's a slight number there. It's about 3 to 1, and it's, again, a small percentage. But in a race that could come down to the margins, that issue overall seems to not be a benefit. But we'll see how far it goes, honestly, in the debate as well, how far Biden's pushing that message moving forward.
Well, does the polling suggest, Spencer, that there's another message he should be pushing that is more effective when we talk about those independent voters, the ultimately ones who will decide the outcome of this election? What message do they need to be targeted with?
Well, independents fall more with Republicans in that the economy is their top issue. For Democrats, there's more of a splattering of issues. Economy's up there, but so is healthcare and education and a couple of, the environment would be a higher issue on the Democratic side. So talking about the economy will be important, but I think he's got an overarching message that he needs to get back to from 2020, which was his concept of a return to normalcy. And that's where the country, I think, is looking at and is a little weary at the moment. You see it in his approval numbers and when we ask if we're headed in the right or wrong direction. So looking at that vision of where the future is going to be over the next 4 years, if he was to be reelected, I think will be important for him to lay out. And to address the economy. The economy is a tough issue for him because more people see Trump as better on that topic. So he'll have to try to frame it in a way that he's at least able to compete with Trump because, as I mentioned, that is the top issue for those independent voters.
Sort of off-the-wall question for you, Spencer, before you leave us. We hear so much about how people like lying to pollsters now, that it's very difficult to get a quality sample because of so much distortion when you're picking up the phone and talking to people. What can you do as a pollster? What do you do to keep your respondents, to keep your survey honest?
Yeah, no, it's a challenge that we face in all these different modes of data collection. One thing that we try to avoid is having that, that interpersonal interaction where I'm calling someone. So we're text messaging. Okay. We're using emails and voice over, where your touch tone on your keypads. Mm-hmm. So you don't actually have to talk to a person, and you can take the surveys at your convenience, generally within 24 to 36 hours of receiving the message. So that is an issue that we look at within the industry, and something we'll continue to challenge.
A little peek behind the curtain there with Spencer Kimball. Absolutely. It's great to see you back here, Spencer, from Emerson College Polling, where he's the executive director. I'm Joe Matthew, alongside Kaylee Lyons. We'll assemble our panel next. Rick and Jeannie are with us, the Monday edition of Balance of Power on Bloomberg TV and radio.
At AbbVie, we're driven by people, passion, possibilities. We care about delivering what you need because your best life is our life's work. That's why we create medicines and solutions that put impact first, and why we find answers that make lives better. Relentlessly helping over 60 million people, and counting, to live their best lives. People, passion, possibilities. AbbVie.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
On Bloomberg Television.
Morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index now trading little changed, up by just 1 point. A couple of minutes ago, it was in the red. S&P, though, up now by less than 0.1%. We've got the Dow up 273, up 0.7%. NASDAQ down 114, a drop there of 0.6%. The big stock story today, Nvidia. Nvidia selling off again, down another 5.4%. 10-year, 4.25%, with a 2-year now yielding 4.73%. Gold up $9 the ounce, $23.31 on spot gold, up by about 0.4%, while West Texas Intermediate crude up 1.1%, $81.62 for a barrel of WTI. Apple's antitrust feud with the European Union over allegedly illegal practices on the App Store is intensifying as watchdogs issue a fresh warning that could lead to more fines just months after they slapped the iPhone maker with a $1.9 billion penalty for thwarting music streaming rivals. Apple up today by 1.3%. Recapping, S&P little change right now. S&P 500 index up by 0.5 point. Balance of power continues now. Back we go to Washington. And once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York with a look at today's Monday trading. Thank you so much. Of course, today, not just any Monday. It's the Monday that marks 2 years since the overturning of Roe v. Wade. The Dobbs decision came down 2 years today from the Supreme Court, in which the constitutional right to an abortion was overturned. Of course, many states have seen abortion bans go into place after that ruling. Others have 6-week bans in place. And this is becoming a campaign issue, especially so for the incumbent President Joe Biden, who is trying to point to abortion policy in a video today that he made to mark this 2-year mark.
Decades of progress shattered just because the last guy got 4 years in the White House. We know what will happen if he gets another 4. For MAGA Republicans, Roe is just the beginning. They're going to try to ban the right to choose nationwide. They're coming for IVF and birth control next. We're up against extremism. Send me back to the White House and I'll fight like hell to restore Roe v. Wade and protect American freedom.
Referring to the last guy, Joe Biden there, just a couple of days out, 4 days out from the presidential debate. As we assemble our panel for their take on all of this, Jeannie Shanzano and Rick Davis are together, our signature panel here. Jeannie is Senior Democracy Fellow at the Center for the Study of the Presidency and Congress, along with Bloomberg Politics contributor Rick Davis, partner at Stone Court Capital. Jeannie, this is surely going to come up in the debate on Thursday. I just wonder, as you look at this as a political scientist and a pollster 2 years later, if we can actually quantify the impact that abortion as an issue will have in this presidential campaign.
We've already seen an impact in elections since the Dobbs decision, and those have mostly favored those who are pro-choice. We haven't had a presidential election since Dobbs, so this is going to be a defining moment for all of us and everybody who cares about women's health care. But you look at the polls, you look at the turnout that has come about as a result, and you can have that quantification. And Donald Trump himself has said, GOP has not handled this well. It has been a losing issue for them for the most part. He knows this is not something that he wants to spend a lot of time on Thursday. He'd much rather talk about immigration and the economy, issues where in the polls, at least, he is doing much better. So you can quantify it in those ways. Of course, I will just tell you, I go into the classroom every day, and there's very few Supreme Court cases you can call out by name and students respond to. But the idea that in 2 short years you can say Dobbs and everybody knows what you're talking about, I think just tells you how much that this is infiltrated, if you will, the popular conscience.
Well, and to Jeannie's point on how Donald Trump has been messaging around this, Rick, he has said, leave it to the states, that's essentially what the court, what the justices he appointed has done, give the power back to the states. He stands by whatever states ultimately are going to decide. Is that a message that is going to work in his favor, or is that just not a strong enough point to be making when so many voters say they're prioritizing abortion rights?
Well, it certainly works in his favor in the red states, right? And the country is almost evenly divided by states. So the first thing that happened was 14 states actually passed very restrictive laws. And then you got into all these other states that are now I think 7 states have already passed initiatives extending abortion rights. And we have now 9 on this ballot, 2024, that are going to attempt the same thing. So it's created a sort of political working class for abortion referendums since Dobbs. And in that regard, I would say it's a much more tenable position for Donald Trump to take, saying, hey, leave it up to the states, than what many of his fellow Republicans in Washington have been saying, which is now that we've got this wind at our back on abortion, we should be trying to get a national abortion ban. In fact, he rolls into the convention in July, just a month away, with a plank in the platform left over from 2016 that calls for a constitutional amendment to ban abortion. So one of the things I'm watching is, will that be changed to let the states decide? Because that would certainly be more consistent with Trump, but also inflame the right to life community within the Republican Party.
Hard to believe we'll be in Milwaukee in just 3 weeks. Is that right? Wow. As we spend time with our panel, I want to get into some of the rhetoric that we heard over the weekend from Donald Trump specifically. He was in Philadelphia Saturday afternoon speaking to a group of Christian conservatives when he floated an idea. And I bring this up as part of kind of a composite of the wackier rhetoric that we've been hearing. We talked about Hannibal Lecter last week. In this case, the former president has a new idea on what to do with migrants who cross the border illegally. Let's listen together.
I have an idea for you to make a lot of money. You're going to go and start a new migrant fight league. Migrants, only migrants. And then at the end of the year, the champion migrant is going to fight your champion. And I hate to tell you, Dana, I think the migrant might win. That's how tough they are. This is not a normal situation.
Okay, this really happened. He's referring to Dana. That's Dana White, president of the Ultimate Fighting Championship, the UFC, who was contacted and said that, in fact, they did have this conversation at a post-fight news conference in Saudi Arabia. White confirmed Trump made the comments, but said they were a joke. Rick, are we beyond this kind of thing mattering?
You know, I think we've been inoculated, right, to the point where it doesn't matter how crazy it is that we kind of just say, oh, well, you know, that's just another Trump slogan. But I do think it plays against Trump in an electoral sense, which is it reminds everybody just how crazy that first administration he had was. The fatigue that people had at the end of it helped elect Joe Biden. And Biden's kind of lost that mojo. You know, he's not the stable guy anymore. I mean, I don't think anybody thinks that they traded up in that regard. But Donald Trump's trying to remind them of just how crazy it can get. And I think this plays against him. I think he's got to get more on a mainstream track if he thinks that these independent voters especially are going to set aside their concerns about his craziness and, you know, vote on their economic self-interest.
Well, and as we consider how this messaging from Trump is actually reaching voters, if it is at all, Jeannie, we had to go cut that sound from a rally that took place in Pennsylvania, re-air it on this program. There's probably a lot of people out there who weren't paying attention to that one rally or the many others that have come before it in which we've questioned things like sharks and boats and what have you. If there's more people tuning into a debate, though, is Thursday night a moment at which that could change and what Donald Trump is saying off the cuff becomes much more embedded in the American conversation?
It can. I mean, a lot of that's going to depend on the size of the audience. And then to your point, how much gets cut and put out there and what resonates with people. But, I thought that this remark over the weekend, he was talking, first of all, to a Christian group, and then he's in Philadelphia, and he is talking about human beings that are distressed and in some of the worst conditions you can ever imagine. And Dana White and Donald Trump suggested this is a joke. This is not a joke. These are people's lives. And what is Christian about this is nothing. And so to me, this comment, he talked about Hannibal Lecter again. He talked about water, all kinds of things, sharks. But to describe human beings in this way, like you're going to put them into a cockfight, is so beyond the pale that I do hope people pay attention to what he's saying. And I would say, when you compare what he said this weekend on this to what Joe Biden has said, we have traded up, and many people think that, because this is unbecoming of any leader or any person, quite frankly. This is ugly, and it's distressing, and it's not funny.
Yeah, it does seem to cut through a little more than some of the other stuff, because we'll get tweets about Trump derangement syndrome and so forth because we brought this up. But the Steve Chung, the communications director for the Trump campaign, Rick, responded to some of the Democrat outrage. Quote, "These elitists are the same people who stupidly think combat sports is human cockfighting," to Jeannie's reference there, "showing their ignorance to the sweet science of mixed martial arts." Is that the right way to respond?
Well, first of all, I'd remind him that the sweet science is boxing that has actually been detrimentally affected by mixed martial arts. So he ought to get his slogan straight. But look, I mean, this is a popular, mixed martial arts is very popular in the United States. It's a huge billion-dollar industry, billions of dollars in industry, and it isn't illegal. It's supported by a lot of people, and frankly, this is one of the things that has been an advantage for Donald Trump is the kind of nose turned up attitude that many people have toward what many people consider a sport at home. And Lee Atwater used to describe professional wrestling as the only sport that isn't rigged because, of course, it is rigged. And so, I mean, but it's fun for people to see. And so I do think this falls into the category, be careful what you say. It's kind of flyover communities that Hillary Clinton, spoke so disparagingly about in the 2016 race that lost her the election.
All right, Rick Davis and Jeannie Shanzano, our signature political panel, thank you so much for joining us on this Monday as we look forward to the events of Thursday evening. Now let's get a check on world and national news. Amy Morris has that for us in the 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. The Supreme Court is stepping into the fight over transgender rights, agreeing to hear appeals from the Biden administration and families seeking to block state bans on gender-affirming care. Emory University law professor Fred Smith says that's unusual because the U.S. government has decided to intervene in family lawsuits against a state.
It's the United States that has asked the Supreme Court to intervene, and that's not particularly common. And so it really does suggest that from the perspective of the federal government, that they view this as an issue where it's important to have a clear resolution.
Emory University law professor Fred Smith. The court will hear arguments in the case this fall. The Biden administration is announcing new steps to increase access to affordable housing as high interest rates have dramatically pushed up the cost of living in post-pandemic years. Treasury Secretary Janet Yellen is promoting these new investments while on a trip to Minneapolis. Now, these investments include providing $100 million through a new fund over the next 3 years to support affordable housing financing, boosting the federal financing bank's financing of affordable housing, and other measures. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships. And you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time. Hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Airbus has cut its annual delivery target to 770 jets from a previous goal of 800 jets, citing persistent supply chain issues. The European playmaker now expects adjusted earnings before interest and tax of 5.5 billion euros this year. That's down from a previous goal of as much as 7 billion euros. ADRs of Airbus down now by 4.5%. 1.5%. S&P 500 index, we'll call it flat on the day. Right now, little change. Was in the red just a couple of minutes ago. Right now, we've got the S&P flat. The Dow up 264, up 0.7. NASDAQ down 121, a decline there of 0.6%. Nvidia very much in the red today, down again, down for a third day, dropping 5.4%. 10-year yield 5.25%. The 2-year 4.73%. Gold up $10 the ounce, up 0.5%. And West Texas Intermediate crude up 1.1%, 81.66 a barrel. Another tough day for auto dealers across the country. At least 4 publicly traded auto dealers have warned the SEC in recent days of possible financial impact from that cyber attack that stalled service at car dealerships across the U.S. and Canada. Shares of Sonic Automotive, they're up 2%. Group 1 Automotive up 1.75%. Shares of AutoNation down 0.6%. Lithium Motors, among the publicly traded auto retailers, trading higher by 1.3%. So again, recapping here, S&P little changed, right now down by about 0.5 point. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you, and thanks for joining us here on the Monday edition of Balance of Power on Bloomberg Radio and television, as well YouTube, where you can always find us by searching Bloomberg Global News. Nice to be back with you, Kaylee Lyons, on a Monday here with some pretty important headlines coming out of Israel over the weekend. Israel to ease off Gaza fighting as focus moves to Hezbollah. One headline on the terminal. But also, the question of a ceasefire right now, Kaylee, is very much up in the air. And it does feel like the 3-phase plan that Joe Biden rolled out several weeks back on a Friday in May is officially dead. The statement in an interview from Benjamin Netanyahu makes that pretty clear. Quote, if there is an agreement, it will be on our terms, and that will not mean ending the war, unquote.
Although it seems that he did try to walk that back some when speaking to the Knesset today. He said, we are committed to the Israeli proposal that President Biden welcomed. Our position has not changed. So it remains unclear what exactly the Israeli government's position is on forward progress on a ceasefire deal with Hamas. But to your point, Joe, we also have questions about what Israeli policy and tactic is going to be going after another Iranian proxy in Hezbollah to the north. Of course, there's already been a lot of activity on that border with Lebanon since October 7th. But what we're talking about here potentially is not just activity, but another front in this war.
That's true. And everyone we have asked on this program about this for the last couple of weeks here, and some pretty smart political and military minds, all have not only allowed for this possibility, but suggested to us that it is more likely than not to happen.
Well, we want to add another military mind to the voices we've asked about this. And welcome now General Kenneth McKenzie, former commander of U.S. Central Command, now executive director of the Global and National Security Institute at the University of South Florida, and author of a new book, The Melting Point, High Command and War in the 21st Century. General, welcome back to Balance of Power. It's great to have you. As we consider what we understand to be Israel's shifting focus toward Hezbollah and Lebanon, does Israel have the capacity to fight a two-front war? And does a two-front war very quickly turn into a regional one?
Well, first of all, it's great to be with you here today. Always enjoy coming on your program. Israel does have the capacity to fight a two-front war, but it would be a war fought at a much higher level of risk, and there would be far greater damage to Israel if they enter this war. It's important to understand what hasn't happened so far is a massive LH, Lebanese Hezbollah attack into Israel. There have been tit for tats across the border, and many tens of thousands of Israelis have had to move south to be out of the range of Hezbollah. But Hezbollah has not chosen to strike south with the very lethal, very highly capable weapons that they've received from Iran. We'll know when that happens. That would be a major turning point. That has not happened to this point. But over the last 30 days, like many other people, my assessment is now there's an increased possibility of a war in the north.
That means you do not think it's inevitable, General. Is that right?
I don't think it's inevitable. I think Lebanese Hezbollah recognizes what would happen if they chose to fight Israel. I think Israel possesses the resources and the ability to damage Lebanese Hezbollah very badly. And LH and their leader Nasrallah is in a weaker state than they were the last time they decided to fight Israel. The last time they went to war with Israel in 2007, in that time frame, and a little bit after that as well, they were well ensconced in Lebanon. They had a more aggressive political support. The economy was doing not great, but okay. Today, the economy is in the tank in Lebanon. The political situation is fragmented and gridlocked. And there's a lot of blame for LH for those two situations because they've been the shadow behind the throne for so many years. It is inevitable that they're going to be blamed for the terrible condition that the average citizen of Lebanon finds them in. So as LH calculates going to war with Israel, they have to be aware that their political posture in Lebanon is weaker than it has been in the past. So they will think long and hard, I think, before deciding to fight Israel.
Well, as we consider the decision, not just on the part of Hezbollah, but also in Israel, and whether or not to engage more directly in this fight, if we were to see this second front open up, General, how much more difficult would that make normalization with other Arab countries like Saudi Arabia?
Yeah, a great question. Not sure it would necessarily impact it directly. The nations of the Gulf see Iran as their principal threat, and that is the greatest existential threat that they face. They need support from the United States to face Iran. They would like to have coordination with Israel to face Iran. So I think as they look at what's happening, as they have looked at what's happening in Gaza, and if they have to look at what might happen up in Lebanon, I think it will certainly be a factor. I don't know it would be a factor that would derail that process of normalization that is proceeding.
With all of that said then, General, what role, if any, would the U.S. play in a war with Hezbollah? Right now, the U.S. is giving money, it's giving weapons, it's doing everything but fight the battle with Hamas for the IDF. What would a war to the north look like?
A war to the north would be the most complex and demanding of all situations for the IDF, the Israeli Defense Force. Now you're looking at a two-axis war, as you noted, a war from the north. And Hezbollah is the largest non-state military entity in the world. They have tens of thousands of highly precise ballistic missiles and shorter-range rockets that can hit population centers really virtually in all of Israel. A very different threat from those missiles than what was posed by Hamas, which was not a negligible threat either. But this would give Israel a two-front problem. And here's the other thing, and I think General Brown, the chairman of the Joint Chiefs, earlier today or yesterday, was very accurate when he said the physics of that problem, the geometry of that problem would make it harder for us to help Israel just because of the alignment of, if you look at the map, you've got a north-south alignment there, harder to get between them, harder to actually provide assistance. We can continue to provide assistance, but it's going to be material assistance. We are committed to the defense of Israel. This would probably require us to exercise that defense of Israel should a significant war begin with Lebanese Hezbollah in the north.
So as we consider the ability of the U.S. to provide assistance on that front, there, of course, is the ongoing question of U.S. assistance provided as Israel conducts its ongoing operations in Gaza in the absence of any kind of temporary or permanent ceasefire agreement. General, given everything that we have seen, the competing messaging, it seems, from this administration, from the Netanyahu government in Israel, do you think there's a real prospect of a ceasefire?
I think there's possibly the prospect of a limited ceasefire. But, all of our attention has been focused on Israel because whatever you can think about the Israeli government, nonetheless, it's pretty much an open and transparent process. We don't know anything at all about what Hamas is thinking because they're a terrorist organization. And I don't believe actually their maximalist demands have changed from day one. So a lot of attention is focused on machinations inside an open society in Israel, but we're really not looking at the Hamas part of this equation. Hamas has no interest in this war ending. It is very much to their advantage to draw it out in time, to increase the rate of civilian casualties, to cast Israel in as unfavorable light as possible. And Hamas achieves this by embedding in the population of Gaza, placing Israeli commanders on the horns of a dilemma anytime they seek to strike a target, because Hamas has very cleverly drawn the civilians around them. So it's not in their interest, actually, their interest being Hamas. It is not in Hamas's interest to have a ceasefire.
General, you write in your book, The Melting Point, about the critical role that you played in the U.S. withdrawal from Afghanistan. It's something that we talked about briefly last time you were with us. These days were fraught with risk, and what you and your troops went through is quite remarkable. We're going to see a presidential debate this week in which I suspect that withdrawal is going to come up. This is one of the great criticisms that the Biden administration has faced from a military perspective politically here since that happened. Does the president deserve that criticism?
Well, I think the end game in Afghanistan and what happened in August of 2021 was the direct result of two presidential administrations as unalike as any two in American history, and two presidents as unalike as any two in American history, who nonetheless shared one area of policy continuity. They both wanted to exit Afghanistan regardless of the consequences. So the plan was prepared under the Trump administration. The Biden administration did not execute the plan in detail, but they philosophically executed the same plan, which brought us to the situation that occurred in August and all the tragedy that occurred that month.
So, General, essentially you're saying that fault could be placed on both, but should greater fault be placed with the person or the administration that drafted the plan initially, or the one who decided to pursue it, to not change it, to not alter the end date?
The plan that was signed in Doha in 2020, February 2020, was a flawed plan. It was not a good plan, but it was a plan that had the conditionality, the requirements for both sides to act. Had it actually been vigorously pursued by both administrations, not just one, but by both administrations, it is possible we could have gotten to a different place in Afghanistan. Neither administration elected to impose conditionality on the Taliban. Instead, we executed the tasks that we said we would execute. We did that faithfully. With one exception, which is to stop attacks on us, the Taliban did not execute those conditions that were placed on them. Additionally, the act of cutting the Afghan government out of the negotiating process undercut them with severe morale effect on Afghans seeking to defend their country. So I would place blame across both administrations.
Well, you know, of course, that's what so many of the questions are geared toward. It's where we started this part of our conversation, is about where the blame should be, General. I'm curious about what you learned, though, going through this. You're writing about it in the book. The lessons that you learned about the civilian-military relationship and your duty to carry out orders from a civilian commander-in-chief.
So I think one of the most sacred principles of our republic is that the U.S. military, the joint force as we call it, needs to be completely apolitical. And key decisions, need to be made by constitutionally selected civilian leaders. And that civilian leader, he or she, has the right to make that decision. They have the right to make a wrong decision. And unless the order is illegal, they have every right and expectation that the United States military will execute those orders. That's important. You never want to get into a situation where a 4-star general says, I don't agree with this and I'm quitting. That is a political act. And the U.S. military does not ever need to get into the political business. That would be bad for the long-term health of the republic. And I would argue that that single action of choosing to resign or choosing to protest is more important than the goodness or badness of the decision that the political leader made, because it will echo through future years in U.S. history as a precedent. We don't need that kind of precedent. What we need is a U.S. military that will execute the orders of our elected leadership, unless the order is illegal. When I was at Central Command, I had a squad of lawyers who could tell me what an illegal order was. But I knew what an illegal order was. I never received an illegal order. That's an important principle, and I think that's why I spent a little bit of time in the book talking about it. It's very important.
That's fascinating. He never received an illegal order. General Kenneth McKenzie, the book is called The Melting Point, High Command and War in the 21st Century. General, it's good to see you again. Thanks for coming back to talk to us here on Bloomberg TV and radio. Some thoughts that we should all have in our minds when we watch that debate Thursday night, Kaylee.
Absolutely, especially if criticism or blame is being traded by both the former and current president. The general says that both kind of have that blame to share.
That's exactly right. Pretty remarkable conversation as we wrap things here on the fastest show in politics, getting ready to send the baton to New York. It's time almost for Bloomberg Business Week, and we'll meet you back here at 5 o'clock p.m. Washington time for the late edition of Balance of Power. It's Carol and Tim time. Good to see you guys.
Yeah, hey. Good to see you too, Joe and Kaylee.
We're going to talk about narratives when it comes to high rates for longer, and also get into the Nvidia narrative, which seems to be changing, Tim.
Also, Mark Gurman on the latest with the Apple Vision Pro and all those challenges too in the EU.
All right.
Coming up next
on Bloomberg TV. And
what's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
The world needs ways to reduce carbon emissions.
ExxonMobil can help. We're working on solutions for our business
that can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week on this Monday, June 24th. Carol Masser along with Tim Stenivek. Tim, we are getting ready to wrap up, a trading day, but more importantly, importantly, we're talking about wrapping up a month by the end of this week, a quarter, and the first half of 2024.
Yeah, I'm already looking ahead to the third quarter of the year, and of course, the 4th of July holiday next week. But a lot happens before we see that. We're going to talk a little bit about the market churn that's continuing. A round of records on Wall Street as we get ready to wrap up everything for the quarter this week, as we mentioned. High U.S. rates for longer or forever. It's kind of this narrative that's emerging. We got to get roundtable on that in just a few.
Yeah, we've been talking about that. Very important to the market setup and really backdrop longer term. Plus the Nvidia narrative as it really enters correction territory. We'll get into that one. Keep in mind, it's like 6.5% of the S&P 500 and almost 8% of the NASDAQ 100. So that kind of explains a lot, if you will, of the trade today.
Also, we got Apple's fresh warnings from the European Union and also the big plans that it's got for the Vision Pro. You have your Vision Pro yet, Carol?
No, I do not.
Not yet. Neither do I.
Tick, 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 tick. Hey, also, we're going to get into the Libertarian billionaire who heads up one of Wall Street's most powerful trading firms and his ties to Tik Tok and to Donald Trump. We'll get into that. It's among our most read stories on the Bloomberg today.
And one more thing, the Wall Street shoeshiners that turn to cleaning sneakers to survive. All that and more over the next hour. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Thank you very much. Got one word for you, Nvidia. The stock right now dropping by 5.6%. We're on the story. We got you covered right through the day here on Bloomberg Television and Radio. The Dow higher, holding on to a gain of 0.6%, but the S&P down now by 5, a drop there of 0.1%. NASDAQ now down 139 points for the NASDAQ Composite Index, a drop now of 0.8%. 10-year 4.25% with a 2-year 4.73%. Spot gold up $10 the ounce, $23.32, a gain of 0.5%. And West Texas Nvidia crude up 1.2%, $81.73 for a barrel of WTI. Alnylam Pharmaceuticals soaring after its drug succeeded in treating a progressive and deadly form of heart disease, potentially opening up a new avenue for the company's top-selling product. Alnylam, based in Cambridge, Massachusetts, seeing its shares surge right now by 36.5%. Again, recapping, S&P in the red, down 0.1%. Nvidia cannot ignore this stock again today, down another 5.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're going to stay with Nvidia. Charlie's setting us up really well. It is down about 3 days in a row. Not about, it is down 3 days in a row.
That is confirmed.
Done. And it's a drop of about 12%. So putting it past that 10% threshold that represents a correction, on track to wipe out about $400 billion, pushing its market cap below $3 trillion. I was thinking about our weekend last week, how we said largest market cap, most valuable company. Then it went back. So it was kind of that back and forth, if you will.
Okay, but for context here, it still is up 144% so far this year. The most expensive stock in the S&P 500, its shares trading for roughly 23 times the company's projected sales over the next 12 months, Carol.
Right, but as our team writes, Tim, there's a problem with the valuation. In the age of the AI boom, no one can really figure out what the chip makers' revenues are actually going to be, not the Wall Street analysts covering Nvidia or Nvidia execs themselves. Again, our Bloomberg team reporting that out. So how are investors supposed to calculate whether or not the shares are expensive or not? So here to help us tackle that question and really get, once again, to the fundamental story that is Nvidia is Bloomberg Intelligence Senior Semiconductor Analyst Kujan Subani. He is with us from San Francisco. Kujan, it's good to have you here. We do talk with you a lot about Nvidia and the fundamental story. Remind us of that and how you see it fundamentally. What is Nvidia and the outlook for this company?
Yeah, and I want to bring back to sort of the numbers, right? Like whenever we are deviating, whether it's a hype or not, look at the numbers. Going back to sort of end of 2022, early 2023, when ChatGPT really came alive in the world. If you look at Nvidia's numbers, right, it had about per quarter revenue of about $7 billion, approximately 10 cents of earnings. This is when the first time they started to see their data center revenue, from which is all the AI, really jump. Fast forward to right now, most recent, the revenues have increased 4x. EPS has increased about 7.5x. And as of today, the market cap from that point, which was 500 billion, sort of 6x. So if you look at the numbers, it was really a fundamental driven story. So that at least should help sort of clarify some of these hype versus reality and fundamentals, whether it justifies or not.
Okay, well, speaking of justification, a lot of people talk about the idea of Nvidia having this moat. Nobody else is doing what it's able to do when it comes to building the hardware that all these companies need to train their AI models on, Kunjan. So I'm wondering about when you think about projecting revenues from a Bloomberg Intelligence analyst perspective here, how are you projecting revenues out over the next few quarters, over the next few years? How are you thinking about that?
Yeah, I mean, similar to most sell-side analysts, we have also struggled to, get to the right number every quarter for them, and they keep on beating and raising. There's a few factors here. One, as you must have heard this so many times, they continue to remain supply constrained. So that's difficult for us to know, right? Like how much supply will come up and how much they can execute. And second, we keep looking at the spending pattern of their largest customers. I mean, look, in 2024, their largest hyperscale and cloud customers have already publicly announced that they are going to increase their capex by 40% year over year. And now there's even more than that. There's the tier 2 cloud providers, the AI cloud providers, and enterprise spending coming on. So we try to keep a close eye to see if there is any signs of demand slowing, which we don't see at this point.
What's the replacement cycle for chips from Nvidia? Like, how long do they last? How long will they upgrade? You know, Nvidia talks about kind of the upgrade cycle being a pretty quick one. So I'm curious, are these companies that are the big spenders and that are building it out, are they going to have to replace their Nvidia chips, I don't know, every 6 months, 12 months, 2 years? I don't know.
Yeah, that would be a good answer if you are in a normalized cycle for any chip, like you are in CPUs or for handsets. The challenge right now is all of their customers are just rushing to get most powerful chips they can get their hands on and continue building. So we have to wait and reach a digestion phase where they sort of reach a normalized spending period and they start thinking about, okay, now I'm going to refresh my older AI chips. So right now, I think the replacement cycle is really short, even if you want to call it a replacement cycle. As they come out with the newer Blackwell chips, their newer Grace Hopper 200 series, customers are just picking them up and trying to put in as fast as possible, because the biggest gating factor right now in upgrading these AI servers is power. So every new chip brings a lot more TCO, a lot more power per performance efficiencies.
Kunjan, we can't let you go without asking you about potential competition here in the space. It's something we ask Ian King a lot about. Who else out there is doing something, at least on the development side, that could get close to Nvidia? What's your perspective there?
I mean, on the merchant silicon, it's the only other name viable contender there is AMD, which we have talked about multiple times. Again, they are also but look, the system software mode that Nvidia has, even with a good GPU solution, it's very hard to beat that. On the other end, there's the competition from the ASIC providers like the Broadcoms, not competing directly with Nvidia's GPU right now, but I think in the long term, it is going to eat into the wallet share and the dollar spend that its customers would be spending on Nvidia GPUs versus their own ASICs.
All right, Kunjan, I know you don't recommend stocks and so on and so forth, but this 3-day rout that we've seen that has wiped off about 10%, more than 10% off Nvidia, it's, in your view, not because the fundamental story is coming undone. Maybe it's, for who knows what reason, but it's not because fundamentally Nvidia is falling apart.
Definitely not. We don't see any fundamental flags right now, especially over the last week.
All right, well said. Bloomberg Intelligence Senior Semiconductor Analyst Kunjan Subani joining us from San Francisco.
Well, from the Nvidia narrative to one about the U.S. rate environment and to another one of the most read stories on the Bloomberg today, it's about how just as optimism is growing among investors that a rally in U.S. Treasuries is about to take off, one key indicator in the bond market is flashing a worrying sign for anyone thinking about piling in.
Yep, let's get into it with Bloomberg News economics editor Molly Smith in studio. Also with us is Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey. Ira's out there at BI headquarters in Princeton, New Jersey. I feel like I keep thinking of Lost in Space. Warning, warning, warning. And if you're too young to understand, Google it. All right, Treasuries on the cusp.
I know what you're talking about. Don't look at me.
You're not that young. No, I'm just kidding.
Not that one. Yeah,
all right, so Treasuries on the cusp of erasing their losses for the year, guys. Signs finally emerging that inflation and the labor market are both truly cooling. Ira, let me start with you. Traders betting that may be enough for the Fed to start cutting interest rates as soon as September. Is that what we're seeing right now?
Well, that is what the market's pricing. I actually suspect that the Fed will wind up waiting until sometime after the election to start its cutting cycle, but that's certainly why you've seen this rally. It's not because of supply, right? We actually get quite a lot of supply the next couple of days, but the fundamentals will still matter to the risk appetite for Treasury securities. They're still the most liquid, safest asset in the world. So when you have people who think that the economy is going to be slipping, and people want to just find a safe haven, they're still going to find treasuries.
Okay, so let's talk a little bit about this idea that's raised in this article by our own Liz McCormick, the growing view that markets and that the economy's so-called neutral rate, the theoretical level of borrowing costs that neither stimulates nor slows growth, is actually much higher than policymakers are currently projecting. The idea that we are going to be high for longer or high for forever. Ira, what are you seeing when it comes to that front?
Yeah, this has been something that people in the market have been talking about for years, basically since 2022 and the inflation scare. It's, if the neutral rate used to be, say, 1%, it's probably meaningfully higher than that today because we have, significant shifts in the fundamentals of the economy, not to mention the fact that we do have additional, pressures on trade flows and the like. You no longer have the globalization helping to keep prices low for certain items. So the general consensus among almost every market participant is that it is higher than what it was for the last decade. The question is how high, right? Is it at 2.5% more or less where the Fed thinks, or is it more like 3.5%? There are a lot of people who believe that that's the case. Now, I actually think my view is that it is closer to 2.5% than it is to 3.5 or 4. But the fact that a large part of the market and many market participants think that it might be somewhat higher, and maybe the Fed can only cut interest rates by 150 or 200 basis points to get to neutral will matter, and that is in a lot of people's market narrative.
Molly, come on in.
Yeah, I mean, there are definitely Fed officials, too, for what it's worth, who will say that the longer-term neutral rate, or what we call an economic circle, R-star, if you want to get a little wonky with the jargon there, is that they will even say themselves that they probably think that rate is higher than what it used to be. But, I mean, Ira, just want to clarify this with you too, that R-star is not necessarily the terminal rate here, right? I mean, those could be two different numbers of where the Fed cuts to in this cycle versus the longer neutral rate over time.
Yeah, that's right, Molly. So if you think about where, no one really knows where R-star is, right? You can't know it ex ante because the fact is that the economy moves. There's a lot of changes that will happen over the next 2, 3, 5 years for determining, where is R-star. So if let's say that R-star is 3%, right, just as a number, then presumably in a weak economic scenario, the Federal Reserve will cut to below that number in order to try to stimulate the economy. But again, no one really knows exactly where R-star is. R-star in the 1980s was much different than R-star in the 1960s or 1950s. And that we can empirically know because we have economic evidence of where both short-term interest rates were and long-term interest rates. The other thing that I think is missed by a lot of these discussions about R-star is that the financial system and the way that we fund is meaningfully different now than it even was 10 years ago or even 20 years ago. No corporation funds with short-term debt anymore. Just doesn't happen, right? So is R-star, where the Fed funds rate, that's going to have a much different effect on a corporate business and CapEx and the like today than it did 25 years ago when 25 or 30% of industrial debt was short-term debt that was going to be affected almost immediately by what the Fed did.
That's a really good point.
Just to build on that a bit, I believe it was Adriana Kugler, Fed governor, who was speaking last week there. She was kind of alluding to this as well in saying that, R-star is not what dictates monetary policy. To Ira's point, this is just I don't want to say imaginative, but it's really just more of a concept in theory rather than in practice. And what's more useful for policymakers is how to understand how restrictive policy is right now in the short term rather than estimating the neutral rate of interest in the long term.
Well, to that, I mean, the Fed has aggressively raised rates in the last year. We know that, right, before stopping. The U.S. growth has not fallen off a cliff. U.S. jobs market, I know there's a little bit of a debate out there, but it still seems tight, which makes one wonder, Molly, if the Fed policy is not restrictive enough right now and suggests that the neutral rate needs to be higher.
And then you also have the camp, though, who's arguing that monetary policy acts with long and variable lags. Just to throw that out there. But no, we all want to know. But no, that's exactly it, though, right? And that's exactly why, like, you're also wondering, too, just like of the efficacy of policy in general and like the transmission method. And like, do we have an economy that's just structurally more resistant to higher interest rates now than we did in past tightening cycles? That's also a possibility. And you look at like the percentage of homes that are mortgage free and, you know, people who maybe are not relying as much on credit cards and like these ways that would actually like affect consumers more directly. And it's clearly not showing up in more clear signs of stress in those parts of the economy.
What happened to the neutral rate during the Volcker era?
Well, so the neutral rate was probably much higher, right? It was probably more like 6 or 7%. But part of that was that there was much structurally higher inflation. And to one of Molly's points, you know, how those long and variable lags of monetary policy are going to affect things goes back to what I was saying earlier about who has the debt, what sectors are doing well. If you look at inflation today, inflation right now is driven almost 100% by services, which is two factors. Right, it's housing services and then non-housing services, right? But the non-housing service part of the economy is not affected by debt. Most people don't borrow money to start services businesses or to expand services businesses. They use cash on hand. So the thing is that you're not going to see a significant slowdown. Now it's much different than the 1970s or 1980s when companies were levering themselves and borrowed a lot of money in order to make to invest in their businesses and expand. That's just not the case today, right? So the fact is that we've shifted a significant amount of the way that the economy functions, where interest rates are more, at least in my opinion, are much more of a sentiment kind of indicator as opposed to having real effects on the economy just because of the structural shifts in how we do business today versus previous generations.
Okay, so on this, Molly, I'm curious about the reads we get later this week when it comes to the Fed's preferred gauge of underlying inflation. What's expected here and how could this sort of change the outlook?
Yeah, so it's probably going to be another favorable inflation print. I think most economists are penciling in just a 1/10 increase in the core PCE inflation gauge. So that would be, I think, the smallest since November and pretty consistent with what we saw from the CPI and PPI reports a couple weeks ago. So, and I mean, look, I think like I know we talked about this last time too. I still find it just amazing how quickly the narrative has changed in terms of how we're thinking about inflation here. That we had the three horrible prints at the beginning of the year. We had 1 month that came in as expected, and now 1 month that's better than expected, and all of a sudden inflation has resumed its downward trend. I'm not saying I necessarily disagree with that, but it's just amazing how we have really just kind of gone back to being fully optimistic that inflation is pretty much going down again.
Yeah, it's pretty fascinating, something we've talked about. Listen, both of you, thank you so much, really setting the right tone in terms of this week and what we are focusing on. Bloomberg News economics editor Molly Smith and Bloomberg Intelligence chief U.S. interest rate strategist Ira Jersey.
Hey, still ahead, the Libertarian and head of a trading firm burrowed deep in machinery of modern finance. Also, Tik Tok, it seems, one presidential candidate, all coming together. Also, Redhead crossing the Bloomberg terminal. Novo Nordisk planning to invest $4.1 billion in another U.S. factory, plowing more money into its biggest market and rising discontent there over the cost.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories and bring your truck to life. Real truck.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. We are looking at a very mixed market right now. Dow Industrials pushing higher. S&P, NASDAQ, both in the red right now. S&P lower, little change, down less than 0.1%. S&P at 54.59, down 4 points, down just about 0.1% now. We've got the Dow up 271, up 0.7. NASDAQ down 149, a decline of 0.8%. 10-year yield 4.24% with a 2-year yielding 4.73%. Gold up $11.50 the ounce to $23.33, up 0.5%, while West Texas Intermediate crude oil up 1.1%, $81.65 a barrel. RXO has agreed to buy United Parcel Services freight brokerage business, Coyote Logistics, for more than $1 billion. This deal will make RXO the third largest provider of brokered transportation in North America. RXO shares, they're surging now by 23%. UPS up 1.3%. FedEx, which reports tomorrow, up now by just about 0.9%. Again, recapping, stocks trading mixed. Dow Industrials trading higher by 0.7%. S&P down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Monday. Well, Jeff Yass, not a household name, a libertarian, a billionaire, a Wall Street veteran, obsessive poker player, big investor in the parent of TikTok as well, Tim.
Yeah, we're talking about the company called ByteDance. He's a former Never Trumper who's recently become an okay, fine, might as well be Trumper. So writes Bloomberg's Annie Massa in a story that is among our most read on the Bloomberg Terminal. It is today's big take on the Bloomberg Terminal and at Bloomberg.com/big take. Annie Massa is Bloomberg News wealth reporter. She joins us here in the studio. Jeff Yass, okay, so he oversees Susquehanna International. As you write, it's a trading firm burrowed deep in the machinery of modern finance. He's a poker player. He wrote about options for his thesis in college. Why are we talking about him right now, though?
The reason he's in the news so much recently is he's a huge political donor. There are two things. He's a huge political donor. He kind of soared to the top of the list of biggest individual donors for much of this year in the 2024 election cycle. And then the second thing is that he is a major investor in an app that most of us have heard of, TikTok, or the parent company
app,
ByteDance, which might be familiar to a lot of listeners. So for those two reasons, this kind of stealthy, veil of secrecy that he's spent his entire career enjoying has been blown up in the past year.
What's more important, his political aspect or the TikTok? Or is it just that it's both of those things combined?
They're a bit wrapped together. So he is a major libertarian. And one of the things that I wrote about in the story is his kind of conversion when he was younger to like libertarianism, and how at various points in his life he called on Milton Friedman personally for advice, and has kind of built his whole career and reputation that way. So he's always been a big donor to libertarian causes. But as far as politics go, and as far as TikTok and Trump go, this perfect storm happened in the past year where he came on people's radars for having been such an investor in TikTok, and then this flip-flop that Trump did in terms of TikTok and banning TikTok also kind of pinged people's radars. Like, why is he doing this?
We'll have the two had a conversation.
That's right. So there was this moment where they had a conversation at a big Club for Growth event in
Not at Mar-a-Lago.
Florida. Not at Mar-a-Lago. It was at the Breakers Hotel.
The other.
Maybe more stately, cousin, but 10 minutes away. And so this conversation happened, and Jeff Yass's camp says that they did not discuss TikTok, but subsequently Trump has come out in favor of keeping TikTok on the phones of all Americans. And subsequently, Jeff has come out and said he will not donate money to Trump directly, but he supports him in the 2024 election.
A big flip-flop for the former president who, during his administration, tried to get TikTok to divest its American assets back in 2020. We'll get to more of that, but I want to talk about your reporting process for this, Annie. Who did you speak to? Who did you not speak to? And talk a little bit about how you reported out this piece.
Sure. Without going through the entire list of names,
was it a long one?
Of people I spoke to, I did kind of try and get into people who've worked at Susquehanna or worked there, friends of Jeff's. He has now gathered so much attention that there are activist groups that are organizing local campaigns in Pennsylvania where they're showing up and, protesting outside the office or events. So I talked to those people. So I just tried to canvass locally in Pennsylvania because he is the richest man in Pennsylvania, and donates a lot to politics at the local level as well as the Wall Street component.
Does he, when he donates to politics, is it both sides of the aisle?
No, it's really to conservative causes. He will donate in some cases, but his most major spending is for Republican
I think
causes.
What's interesting about this story, and you write this, a billionaire flip-flopping for Donald Trump is nothing new, right? We are increasingly seeing that as we get closer to the November election. So no judge. But why single out Jeff Yass? And what did you want to know in all these conversations that you had that you really paint an incredible picture of this guy from kind of being a little kid to where he is now?
Yeah, I wanted to know, basically my unifying question was, this is someone who focuses a lot at a professional level on decision making, which might sound a little bit basic, but he kind of built this whole company, as you said earlier, on poker and rational decision making in poker. So I was trying to really suss out, okay, so if this is the moment in which he's, going publicly on record and saying that he supports Trump over Biden, these purposes this year, I was trying to get inside his head as much as I could without talking to him about why he's making that decision now. And so
like the bet he's making, essentially, right?
The bet he's making, exactly, and what matters to him. So of course TikTok matters a great deal to him. He's worth $47 billion, but about a third of that comes from this early stake that his company took in Tik Tok. So that's a piece of it. But there are other dimensions to it. He's a huge supporter of this kind of controversial program of school vouchers. So we get into that quite a bit in the story. And that is something that's very much in line with Trump's former education secretary, Betsy DeVos, is a major supporter of school voucher programs.
One thing that I really liked about the story was the history of Susquehanna and how the firm came to be. And you write in the piece, Annie, that even though it's a financial firm and a lot of financial, it's essentially considered part of the financial elite. This is not something that's on Wall Street. This is not a guy who has homes right outside of New York City and commutes into New York City. This is Pennsylvania that we're talking about here. Talk a little bit about the location of the firm and who he's had in his inner circle, what they've gone and done since they joined the firm and have left the firm, and sort of what you learned there.
Yeah, so Susquehanna is based in a kind of unusual place for a big Wall Street firm. It's based in Bala Cynwyd, Pennsylvania, which is a suburb of Philadelphia. And the reason that they were in Philadelphia to begin with, he got started trading options. Options are what kind of built the foundation of this entire company in Philly. But as I write in the story, he not a huge fan of taxes, so he's always optimizing for tax purposes, and by moving from Philadelphia,
hates taxes. Like, it's pretty clear.
That is something. That's how people describe him.
Look, I think it's fair to say a libertarian doesn't necessarily love taxes.
The Club for Growth, right? Yeah. This group that he supports, as you say, it's an anti-tax political advocacy group, right?
Could accurately be described as an anti-tax.
Some would say he really hates taxes.
Yeah, I mean, all sorts of people would tell you that. I'm sure Jeff would tell you that too. But anyway, so he moved the company from Philadelphia to Bala Cynwyd. Even that marginal little move, saved money, was savings on taxes. So you're tucked away.
He's allowed, right?
Yeah. Absolutely. But you're tucked away outside of the kind of fray of Wall Street. And they started with options, but they've expanded to all sorts of different stuff. Anything you can think of, really. Stocks, bonds, crypto.
Taylor Swift.
Yeah, they all, event contracts. All of this. And lottery insurance kind of policies, all sorts of those things. So that is something particular to the firm. And they have this culture where they train you using poker techniques and playing poker in Texas Hold'em.
This is fascinating, right? When he hires someone, right, they actually are playing this.
Yeah, because they want to see how you make decisions. How do you go about deciding when you're playing a hand, whether to bet, check, or fold? And it actually doesn't matter as much, do you win or lose that hand, because luck can factor in. But did you make the right decision based on the probabilities and the players around the table, and they want to know how you made those decisions. So and so to your question, a lot of proprietary trading firms that are now kind of giants on Wall Street, the people who run those firms are often from Susquehanna.
Like a Jane Street, for example.
Jane Street is the perfect example, yeah.
But people want to know, these people who are kind of protesting against him, they want the public at large want to kind of say who he is, right? They want to get it out. They just got about 30 seconds left here, though.
They want people to know his name more, and they are trying to work to combat what they consider outsized influence in their state.
Right. Which is we talk about follow the money with everything and anything, and he's not alone, right, in terms of big political donors.
Exactly.
Incredible story, so much detail. Another incredible piece of reporting, Annie. Thank you so much. Annie Massa, she's wealth reporter at Bloomberg News. As we said, this is among our most read stories on the Bloomberg terminal as we speak. It's also the Bloomberg Big Take, which you can find on the Bloomberg terminal at bloomberg.com/Big Take. So definitely check it out.
Hey, mixed market right now. The NASDAQ down close to 1 full percentage point. The S&P 500 down 0.1%. The Dow up 0.7%. Speaking of company shares moving higher, Apple higher amid headlines on a rift with the EU. What you need to know on the other side. First up, though, a check on the day's trade and the latest world of national news, I should say, with Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. The Supreme Court signaled it's taking the unusual step of extending its term into July. It's finishing up work on about a dozen cases. That includes Donald Trump's bid for immunity from prosecution for attempting to overturn his 2020 election loss. And the Supreme Court is stepping into the fight over transgender rights, agreeing to hear appeals from the Biden administration and families seeking to block state bans on gender-affirming care. Emory University law professor Fred Smith says it's unusual because the U.S. government has decided to intervene in family lawsuits against a state.
It's the United States that has asked the Supreme Court to intervene, and that's not particularly common. And so it really does suggest that from the perspective of the federal government, that they view this as an issue where it's important to have a clear resolution.
Emory University law professor Fred Smith. The court will hear arguments in this fall. A high-ranking banker on Wall Street has resigned after this incident went viral.
Oh my God.
A 10-second clip on X showing a man throwing a punch at a woman in Brooklyn's Park Slope neighborhood. A police report shows the man is Jonathan Kay, the head of the global business services franchise at Moelis & Company. Media reports say it happened during a fight over Israel's actions in Gaza. A Moelis spokesman says Kay has resigned. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Is your elbow working?
Yeah, he's super nice.
At AbbVie, our science never rests. Because breakthroughs don't just happen. They take commitment. From cancer to chronic diseases, we treat over 75 different conditions. People, passion, possibilities. AbbVie.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories and bring your truck to life. Real truck.
I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal.
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Wow.
This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company, but I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with or what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are losing traction. There's an almost $400 billion plunge in Nvidia. Raises speculation that the rally in the industry that has powered the bull market is due for a breather. Right now, we got the S&P in the red, down 4 right now, dropped there of just about 0.1%. The Dow is holding on to a gain of 269 points, up 0.7%, while NASDAQ is down 147, a decline of 0.8%. 10-year yield 4.24%, with a 2-year that's now yielding 4.73%. Spot gold up $11 the ounce, up 0.5%, and West Texas Intermediate crude is up 1.1%, 81.65 a barrel. Nvidia now down 5.9%. Nvidia shares lower, with the AI-focused chipmaker entering correction territory as it extends a sharp recent sell-off. Again, Nvidia right now down 5.9%. Recapping the Dow higher, S&P lower by 4 points, little change, down less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. Hey, one name that we're keeping a watch on today, Aapl, stock at its highs up about 2.5%. Right now, just up about 0.7%. There's kind of a slew of stories that are out there. Among them, our own Mark Gurman reporting on Apple's plans to turn Vision Pro into broader business. But before we get to that, there's also some fresh warnings from the EU when it comes to Aapl over in that region of the world.
Yeah, the EU, the European Commission said that the U.S. company must allow developers in the App Store to steer users to cheaper deals and offer outside of the App Store. This in order to comply with the bloc's landmark Digital Markets Act. It lays out a raft of do's and don'ts, Carol, for some of the world's largest tech platforms.
All right, so let's get to it. Mark is back with us from Los Angeles. Mark Gurman, we mentioned out with a story on Vision Pro and Aapl specifically. Mark, by the way, Bloomberg News Chief Technology Correspondent, joining us once again here. And Mark, we mentioned Apple shares just a little bit higher today. We do want to talk about your story on Vision Pro, but before we get to that, the EU rift that has widened, how are you thinking about that, this latest round of a dispute for Apple and the EU's antitrust regulators? I mean, is it time for Apple to kind of come to terms that none of this is going away in Europe and kind of rethink its approach to business there?
I think Apple has been doing everything they can to thread the needle, making the changes that the European Union is asking for in a way that they're not going to lose any revenue. Of course, as a public company and as a business, they believe that they have a fiduciary duty to do that. Long story short, the European Union is not happy with Apple's commissions, and so what they wanted is for Apple to open up iOS so users can download apps from websites and external app stores. And so what Apple's done is they've allowed that, but they're still asking developers to pay what's known as a core technology fee to reimburse them for every installation over a certain threshold. EU is not happy about that. So they are charging Apple with violating the Digital Markets Act, in part because of Apple still going after that revenue. And obviously, Apple has to be careful here. It is a slippery slope. They start opening up the App Store completely in one place. Other countries are going to want the same. Developers in other regions are going to push for that as well. And you could be talking about major risks to a $20 billion per year business. Now, Apple makes the vast majority of its services revenue from the App Store, and the vast majority, almost all App Store revenue, actually comes from in-app purchases. And Apple allows third-party payment services now for in-app purchase in the European Union, but they collect a percentage off of that as well. DMA, European Union, the bloc, they're not very happy about that.
So, Mark, one thing that we tend to see with companies in the tech space is they sort of make changes to satisfy a common variable or common denominator. USB-C, for example, I think it's fair to say we can look to what happened in Europe and a ruling there as to why USB-C is now available instead of the Lightning cable on Apple's newest pieces of hardware. Do we start to see changes that are made in Europe come to the United States?
I think eventually you're going to see U.S. regulators try to break up components of Apple, try to change some of Apple's policies regarding the App Store. The USB-C thing you mentioned is interesting, right? Apple fought tooth and nail over the USB shift. Now they embrace it. If you go to Apple's homepage, they tout USB-C on the iPhone. USB-C, there are benefits there. Right? Now you have interoperability with more cables, more ecosystems, and now you can use the same charger on your iPad, iPhone, Mac, speakers, peripherals, all for the first time now that USB-C is on the iPhone. So there was a benefit there. What Apple pushed back against is, again, that slippery slope. They want USB-C today. What are they going to want tomorrow? What are they going to want the next day, right? If you give them a mouse a cookie, they're going to want a glass of milk type of thing. And I think that's what you're seeing with the App Store, that the more they move towards giving the European Union what they want, the more they're going to be asked to do.
If You Give a Mouse a Cookie is one of my favorite kids' books, and there's some other ones. So we'll talk about that later. Hey, speaking of markets, you've got a great story out about Vision Pro. You're right. It's gotten off to a bit of a slow start. Is that making Apple, Mark, rethink some of its expectations or its approach here?
I think what Apple sees for now is that the Vision Pro remains a very niche product. You go into an Apple store, maybe you see one or two a day, maybe one a week in some locations get purchased. A big test is going to be how the device fares in China, Hong Kong, Singapore, eventually places like Japan, Australia, UK, Germany, France. And that's going to show Apple if there's more demand for this product internationally, where maybe people are more willing to spend $3,500 US equivalent or more on a device that's essentially just a super-powered TV for your eyes, right? And so they're going to have to see how that goes. But eventually, the real holy grail is going to be augmented reality glasses, getting something into the price of an iPhone that can replace an iPhone, that's lightweight, has the computational power and battery. That's going to take a really long time to pull off. That could be 5-7 years away from now to get something of that ilk. Now, in between now and then, what Apple needs to do is lower the price of the Vision Pro. Like I said, $3,500. They need to get it down to $1,500. But here's the problem. The Meta Quest 3 costs $500, $600. If Apple lowers the specifications of the Vision Pro in order to get it to a $1,500 price point, they may end up with a product that is actually worse than the Meta Quest 3, but it also is still 3 times the price. And so then you have to ask yourself, if you're a consumer, why would you buy that product? And so that's definitely what Apple's dealing with right now.
Okay, the price notwithstanding, Mark, what does the product roadmap look like for the next 5 to 7 years as Apple does work to get that Vision Pro into a pair of glasses? What can we expect from Apple?
Well, there's the cheaper one, right? Then there's the Vision Pro 2, faster processor, better hand tracking, better body tracking, camera improvements, trying to make the device a little bit more comfortable and lighter, new strap mechanism. The cheaper one, like I mentioned, iterating on that down the road. And then obviously the augmented reality glasses. The company has also been exploring smart glasses, similar to the Ray-Ban glasses with Meta, that would not include augmented reality. I don't necessarily think they would ever release that product. There's also AirPods with camera functionality being explored. That idea being to pair with augmented reality glasses or being able to substitute cameras that would normally come in augmented reality glasses. And then there's other things that Apple is cooking up that have little to do with the Vision Pro, but I think they're still interesting on a forward-looking scale, would be home robotics devices. Anything from a tabletop iPad that can be on a robotic arm that moves to mimic head movements. You could be nodding your head, and the robot you have on your table at home could nod to show you that I'm nodding my head on a remote FaceTime call. And even the idea of humanoid robots.
I gotta
One
say,
day that
go ahead.
clean your dishes.
Finally, thank you.
Now you're talking my language. Hey, real quickly, there's another story out from Wall Street Journal. Meta having talks with Apple about integrating the Facebook parents' Gen AI model into the iPhone maker's AI system, Apple Intelligence. What do we need to know about that, or what are you hearing, if anything? Just got about 30 seconds.
So one, Apple Intelligence, there's three components. There's Apple's in-house on-device AI models. There's Apple's in-house cloud models. And then there's an API call-out, which means that any chatbot maker can tap into that. So they're integrating OpenAI, they're integrating Google Gemini, and they're going to integrate any third-party provider, just like you can set any search engine as your search engine on a web browser. You'll be able to set your chatbot to any chatbot provider on your iPhone and iPad and Mac. And so Meta is obviously one of the providers of that. And so, of course, they'll be available down the road.
All right. Around the world of Apple we go. Mark Gurman, thank you so much. Bloomberg News Chief Technology Correspondent. Hey, coming up next, one more thing on Bloomberg Business Week has to do with a centuries-old trade. That's next.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks. Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Saturday mornings, I understand you have off.
Yeah, Saturday is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
Company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Airbus has cut its annual aircraft delivery target to 770 units from a previous goal of 800 jets, citing persistent supply chain issues. The European playmaker now expects adjusted earnings before interest and taxes of 5.5 billion euros this year. That is down from a previous goal of as much as 7 billion euros. ADRs of Airbus, they are trading lower now by 4.7%. RXO has agreed to buy United Parcel Services freight brokerage business Coyote Logistics for more than $1 billion. The deal will make RXO the third largest provider of brokered transportation in North America. RXO shares, they're up by 22.8%. UPS shares up 1.5%. FedEx now up by 1.2%. Alnylam Pharmaceutical shares soaring after its drug succeeded in treating a progressive and deadly form of heart disease, potentially opening up a new avenue for the company's top-selling product. Alnylam shares up right now by 37.1%. Target is partnering with e-commerce specialist Shopify to expand its marketplace for third-party merchants as the big box retailer seeks to catch up with larger competitors Walmart and Amazon. Target up by almost 3%. Industrial and consumer packaging company Sonoco Products has agreed to buy Iviosis, that is a maker of cans and other packaging, from KPS Capital Partners for about $3.9 billion. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Supreme Court is expected to take an unusual step to extend its term into July as it finishes work on about a dozen cases, including Donald Trump's bid for immunity from prosecution. The court has already scheduled Wednesday, Thursday, and Friday as opinion days this week. The U.S. Supreme Court is also taking up the controversial issue of gender-affirming care, agreeing to review a lower court decision that upheld laws in Tennessee and Kentucky that banned transition surgery and treatments for children and young people experiencing gender dysmorphia. Emory University law professor Fred Smith says the issues include gender discrimination and whether a state can override a doctor's best judgment for a patient.
So you have kind of an equal protection question here because it implicates gender discrimination. And then you have a privacy issue here to the extent that it's interfering with really deeply personal medical decisions.
Emory University law professor Fred Smith. The Biden administration is announcing new steps to increase access to affordable housing as still high prices on groceries and other necessities and high interest rates have pushed up the cost of living in the post-pandemic years. Investments include providing $100 million through a new fund over the next 3 years to support affordable housing financing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, Amy Morris, thank you so much. Amy Morris there with World and National News out there in our D.C. bureau. All right, folks, one story that definitely caught our attention. It has to do with something that is kind of, I feel like it's been a given on Wall Street for decades, and that is the art of getting your shoes shined. I've done it. I've done it at a shoe shine that's been around here in New York for decades. You kind of go up and you sit and you get your shoes or your boots or whatever shined. But the pandemic has changed a lot of this.
Yeah, here's the problem, because people aren't wearing as formal shoes today, and now a lot of people are wearing sneakers. Even Jamie Dimon wears sneakers to work sometimes. They don't need their shoes shined. So a lot of these shoe shiners are turning to other things like sneaker repair, cleaning sneakers, anything they can do to survive when the business is down.
Yeah, exactly. And what's really interesting is just looking at this story by Ignacia Gonzalez, sneaker cleaning services, we're seeing the search for that go up about 181% since January of 2021. And you see things like an Allbirds, or you even see Nike, suggest suggesting, okay, here's an alternative. I've got a pair of Allbirds, right? They're really comfortable.
Of course those companies want you not to wear formal shoes because they sell not formal shoes, right?
But you see it. We see with some of the executives or individuals around certainly our headquarters, but it's interesting to hear Jamie Dimon, right? Iconic CEO on Wall Street and wearing some sneakers. Specifically, what does he wear? He wears Black Common Projects.
Okay, I got to check those out. I don't have those. What I will say is it gets into some stories about cobblers who've been around for years, and there's nothing like finding a good cobbler in New York City or anywhere you live for that matter. What they can do to a pair of shoes that looks like it's beyond all repair,
redo them,
completely remake them, and make those pair of boots that are incredibly comfortable that have a completely worn sole, good as new.
Sounds like someone who knows.
Oh.
Having said that,
everybody has that pair of boots that's like going to last forever. Just take it to a cobbler, get them completely redone. They're good as new.
What we will say, though, we talk about the higher prices for things or inflation hitting so many things. Rising costs have hit shoe shiners. The price of a shine rose $10 this year from $5 at Anthony's Shoe Repair, which is one of kind of the legendary, iconic ones here in New York City. All right, folks, that's going to do it for this hour of Bloomberg Business Week. Coming up now on television, the close for us, we're going to look into the U.S. presidential race's biggest crapshoot.
Also, why Amazon CEO Andy Jassy has been donning a hard hat.
And then we're going to check in with the head of consumer banking over at Citizens Financial on the void in private banking. Do not go anywhere. This is Bloomberg Business Week.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Who needs Nvidia when you got everything else? Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. Happy Monday.
Happy Monday. Is it happy
you're sad?
Monday? Well, I don't know. We had a bit of a rally in our hands, but I don't know. They're kind of struggling right now at the waterline.
It is. If you're long Nvidia, it's not that happy for you. All right, let's get to a check-in here on where markets are. The S&P is going nowhere fast, so put that aside for just a second, because underneath it is really quite interesting. The SOX index led lower by Nvidia, for example, Supermicro, AMD, that down by over 2%. So that's really weighing on the overall index. On the flip side, though, the energy sector very much outperforming because you have crude finally outperforming, getting a bid up by about 1%. And just to check in here on that dollar yen, we were looking at 160 despite the top currency official talking about how they would have to step in and maybe intervene at any time when you get to that 160, but that didn't really wind up helping any. Nevertheless, worthy to pay attention of that dollar yen Romaine.
Interesting price action on the S&P and really shows you the power of Nvidia because right now, despite the S&P being flatline, about 400 of the S&P 500 stocks are actually in the green. That's potentially setting us up for the broadest advance since March 27th when about 91% of the index rose. The S&P Equal Weight Index today outperforming its cap-weighted big brother for 4 straight sessions now, a tinge of optimism that the rally can go on even without Nvidia. Here's Keith Lerner at Truist.
Well, all year long, people have been waiting for a broadening theme. I think there might be some more convergence, meaning if tech's going to consolidate a bit, maybe some of these other areas start to do a little bit better.
And that might actually be the true test of the market's rally. That one stock, as we know it, is responsible for 30% of this year's S&P gains. That one stock, Nvidia, though, has slid more than 11% since its last record high on June 18th. And that includes a 4% drop today, one of only 2 days this year that Nvidia has underperformed the broader market to such an extreme. Now, another trade out there that we're keeping an eye on that's lost a lot of steam is crypto. Bitcoin coming off 2 straight weeks of losses with a potential test of support around that 60,000 mark. The failure to set new highs after that halving back in April are really pushing outflows from Bitcoin investment products up and out. $1.2 billion over 2 weeks, the most since the U.S. ETF approvals in January, Alex.
All right, let's get back to those two first stories, right? The overall market as well as Nvidia. And this is a chart that kind of sets you up. So first you have this green line, which is Nvidia's share price, and the white line, which is the ratio of the S&P equal weighted index versus the S&P. So the higher it goes, the better the equal weighted index is doing versus the S&P. The lower it goes, the more the S&P is outperforming. And this is what we're seeing right now. You have Nvidia falling, therefore the S&P winds up giving up some of its gains, but the equal weighted index giving an opportunity here to move higher. And so the question becomes, is life without Nvidia actually that bad? Does that money kind of go out of stocks and do other areas of the market within the S&P, or does it just leave the S&P altogether? Or, Romaine, is this all just end of quarter rebalancing? Let's just wait till next Monday when things pick up.
Yeah, that's a big question here as we kick you off to the close here on this Monday afternoon. Jason Pry joining us live on set right now. He's the Chief of Investment Strategy and Research over at Glenmead. And Jason, you've probably been busy over the last few weeks, as I'm sure all those questions Alex was asking me, I'm sure your clients have been asking you. Do you have an answer?
When are we not busy? I mean, in reality, this is a pretty robust market environment that we've been through and remain. This question comes up quite often from our investors, right? These stocks have gotten to be a very large portion of the market, and people wonder what should they do with that environment. Should they actually own more of them? Should they own less? Our approach has been remain diligent in rebalancing your portfolio. When these particular stocks are up a lot and the rest of the market is not, there is another 493 stocks in the S&P 500 that you should own a good portion of. Rebalance back into those, take the winnings, push into the ones that have been lagging behind, and know that market naturally rebalances over time. Doesn't mean sell it all, but rebalancing can actually be a very good investment discipline.
Do you think we're going to see, though, that type of conviction? I mean, you understand the fear on the market, right? I mean, what works is what everyone chases after, and what's worked so far has been Nvidia and big tech. It's going to take a lot for people to say, okay, let me dip my toe into the water of all those other 400 plus names.
I agree, but I disagree. Right? Every market has these situations where investors want to chase the winners. That's a natural tendency in markets. At the same time, there is a lot of opportunity that exists on the other side, and investors will eventually look at it. And an example of every economic cycle and innovation cycle we've been through shows that we have often seen periods of hype, followed by rounds of disappointment, followed by eventual rounds of actually meeting those previous expectations, often on a delayed pattern relative to what was originally expected, which provides opportunity for investors. Investors will see at some point in time those excess valuations as being an opportunity to shift that money into lower valuation items that will then participate longer term.
Where?
Look, the rest of the 493 stocks actually is a really interesting starting point, even just a broad basket of them. When we've had past technological cycles, we have found that those other companies actually feed off of and implement the technology, creating efficiencies in their business and actually driving the overall market and economy higher. It's interesting to see that following the internet bubble, if you actually look at from before the run-up, the best performance or almost equal performance actually came from the other sectors in the economy, other than the technology, for about a 10-year cycle, which is fascinating and provides a lot of opportunity.
So it begs the question, is that a small cap thing or a large cap thing? Mike Wilson said that any rotation will be limited because we're going to start focusing on growth rather than inflation, and that means it's still going to be high quality and large cap, not the riskier small cap and value names. What do you think?
I agree that we always focus on growth, but growth can exist in different pockets of the marketplace. We've been focusing on, again, that other 493 stocks within the S&P 500, not getting rid of the 7, just making sure we diversify. Number 2, owning smaller capitalization securities. That valuation sits considerably more reasonable. We think the back half of this year, if you look at the projections, analysts are actually expecting small cap earnings to catch up with the S&P 500, which is kind of an interesting phenomenon we haven't seen for about 2 years. And then internationally, I think there's some interesting opportunities. Behind the scenes, Japan has been generating just as much earnings growth as the S&P 500. On the whole, Japan is considerably more discounted in valuation and has just as much growth opportunity and actually just as much attachment to artificial intelligence as we do.
We've heard that from other guests here. For those folks who want exposure to Japan, do you recommend more of, just a broad basket approach to it or something more strategic?
Broad basket works. Strategic can also work as well. We'd say that it's very important to use a diversified investment manager in that space and one that is actually in tune with Japan. If you don't have the right manager to use, I can tell you, I'm not a Japanese stock picker. Broad market exposure will do the job for you.
So it gets to a broader question, though, too, as we start to see a lot of U.S.-based investors look to other parts of the world for value. It's not always easy to do that, to invest directly in those companies. Obviously, you have ETF products here in the U.S. that allow those types of vehicles, or if you're a high net worth individual, obviously you have access to more strategic funds. Give me a sense here of where those people should go or what they should look at if they want that exposure, or do they just look to U.S. stocks that maybe have a large presence in those countries countries.
So we don't think that a U.S. stock portfolio is the only thing that an investor should be doing. We think a portion of the allocation should be generally in international stocks. We've actually found that between 20 to 30% of a total portfolio for a U.S. dollar-based investor should be invested internationally. And you might think about that and say, well, wait a second, isn't like 45% of the broad international, global market international? Why are you actually down from that? Well, if you're a U.S. dollar-based investor, majority of your obligations are in U.S. dollars. You're exposing yourself to currency risk. But doing that up to a degree makes sense because it diversifies you. Over a certain line actually over-diversifies you, and you're taking currency risk that you shouldn't otherwise take.
Before we let you go, the other top story today is what's happening in Bitcoin and crypto. Is this part of, you laugh, but is this part of your portfolio at all in alternative assets?
At this point in time, Bitcoin and crypto is not a portion of our portfolio. We continue to think that that asset class is just too volatile when you mix it in with other asset classes. It doesn't make sense. Anytime I've tried to look at something like that as part of a portfolio, it has too much volatility for the return that it adds to a portfolio.
Yeah, all right, great stuff, Jason. And we should point out, Bitcoin actually did breach that 60,000 level here today, a line in the sand for a lot of traders. A broader look at the markets with Jason Pride, Chief of Investment Strategy and Research over at Nvda, as we count you down to the closing bells. In just a second, we're going to sit down with Ruchir Sharma, the chairman of Rockefeller International and founder and CIO over at Breakout Capital. His thoughts on the future of capitalism and how the U.S. elections could impact the markets.
Plus, in our top calls, green on the big screen, shares of movie theater operator Cinemark rally after an upgrade from Roth MKM. We're going to talk to the analyst behind that call.
It's that time of the year to go to the movies, time of the year to start traveling as well, but airfares remaining sky high as we head towards the July 4th holiday. Discussion with Clint Henderson over at the Point Sky. All that and more coming up in just a bit. This is The Close on Bloomberg.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Idris Elba works here?
Yeah, he's super nice.
Trains. Trains that use the power of Dell AI and Intel, clearing the way so you arrive exactly where you belong.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
BN Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, some breaking news that just crossed the Bloomberg terminal. The U.S. Federal Reserve has recommended potential changes that could walk back key provisions of the Biden administration's landmark bank capital proposal. Katanga Johnson is in our Bloomberg's Washington office with more details on this. Walk us through this, Katanga. What exactly is the proposal?
The state of play right now includes what's known as a term sheet, a document that the Fed has circulated to other regulators who have to vote on the plan to say what potential changes could be across various aspects, but particularly the component of the proposal that relates to market risk. We know that it also will address potential changes to operational risk, which was a key part of the pushback that a large swath of banks had said that they wanted to see undone. And generally, while there aren't any specific targets that the Fed has made, sources that we've spoken to say that if all the changes in this term sheet were to take effect, we could see a hike of at least or as low as 5% as opposed to the 16% across the board.
Katanga, if we look at the individual bank stocks, I'm just looking at the big banks, they were already all up at Citi, Goldman Sachs, Morgan Stanley, all kind of moving materially higher. Do we know what the difference would be for them, how much more money they could keep or lend, etc.?
It's very interesting. Those banks are key to this particular market risk component. Again, there are other changes, but we're told that banks with large trading desks are likely to see changes to the aspects of the proposal tied to how they evaluate risk, particularly around their internal modeling. But we don't know exactly what the hike would be for the largest banks, which I think it was 16% across the board, but as high as 19% was the proposal for the biggest banks. That's yet to be seen. There haven't been any agreements among the three agencies. In fact, there is consternation among them about how far is too far. But broadly, these are changes that they are hoping they can get across the finish line if they were to complete this plan by the end of the year.
All right, Katanga, thanks a lot. Really appreciate Bloomberg's Katanga Johnson joining us there on that breaking news. And there was also big news today in the world of hedge funds. Bobby Jane has gathered $5.3 billion in commitments for his new multi-strategy fund called Jane Global. It is the biggest fundraising debut since 2018. It's expected to start trading July 1st. Bloomberg's Hema Pamar has been covering this story and joins us now with the details. Tell us about the environment with which this is going down. And is any of this surprising to you?
Yes, it is a very difficult fundraising environment, and there's a few things that are building together that has made it more challenging. You're looking at interest rates that are higher, which means that the bar for hedge funds to impress investors is a lot higher too. You have to beat the risk-free rate. You're seeing private equity distributions be slower, so investors have fewer dollars to put to work. They're a lot more mindful of where they put every single dollar. You're looking at competition amongst the big multi-strategy funds. You're looking at competition from private credit. So all of these dynamics making it harder to gather each dollar. Yeah. So $5.3 billion is a sizable launch in this environment.
Yeah, and he had originally wanted to raise more than that, but still
Correct.
Pretty decent. I want to talk about this chart, though, on the screen, which kind of breaks down the strategy. I thought this multi-strategy model was kind of struggling. Well, I mean, why is he going to get this right, I guess, when others are getting it all wrong?
Yeah, no, that's a very good question. Multi-strategy is when you invest in all these strategies at once, at the same time. What he's trying to do is really launch a fund that does all of this at the same time.
Yeah.
And that requires building out credit and equity and quant. That requires, he's focusing a lot on arbitrage, which is when you bet on the spread between different things. So like SRTs, index rebalancing, fixed income relative value, these kinds of trades. So I think, investors are going to be watching for performance very closely as this fund gets gearing up.
Does he have the staff to do that, though? I mean, that's a lot of tactical stuff. I mean, that goes beyond just his own brain power. He's got to have the people behind him to execute all those
Absolutely.
trades.
It's definitely a big feat. And I think, he's hired hundreds of people already.
Okay.
He's got about 40 portfolio managers sort of hired and on the team. But they've been building out this complex firm, and it's going to be expensive. It is time consuming. Some of these strategies may take a little bit longer to fully be built out and be put to work. So really this first year will be what investors are watching closely.
Who are the investors, by the way?
Yes, so some sizable investors. ADIA, the Abu Dhabi Sovereign Wealth Fund,
That's
is an
a good
investor.
one.
It's a big investor. You're looking at some of the bank wealth platforms like Goldman Sachs, Morgan Stanley. So really some sizable institutional names when we look at this fund launch. And keep in mind that Bobby Jane was the former co-CIO over at Millennium Management. So there's been a lot of attention given he was working closely with Izzy as to what he's doing.
A great pedigree, and no surprise that he was able to raise the billions that he did. And I guess if it was a different market environment, he probably would have raised more. Hema Pammar's been all over this story for us. Bobby Jane raising $5.3 billion for his new multi-strategy hedge fund. Alex, I am concerned, though, about the market performance, right? Because we've had Hema on so many times. He talks about these other multi-strategy multi-strat managers that are kind of struggling. And I know Bobby Jane's, in theory, kind of cut from a different cloth, so maybe he'll get this right where everyone else got it wrong.
I mean, it also just depends on the macro environment too, right?
Yeah.
Like how you time it and getting lucky in that way. I don't know, but I thought the same thing. I thought multi-strat was dead.
Yeah, well, yeah, except for him, I guess.
Struggling.
Maybe he'll prove us wrong here. I thought the movies were dead too, but apparently people are still going.
Did you see Inside Out 2 yet?
I have not seen it yet. Thankfully, my child is past that stage of their life where I have to go see every animated movie, but it is still the hottest ticket in town. And it's not just the movies, it's Cinemark itself. That's the view according to Roth MKM. It's part of our top calls, and it's coming up next. This is The Close on Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
Recipes. Recipes written by hand and lost to time are now being analyzed and restored using the power of Dell AI. Recipes. Recipes that are more than their ingredients. Recipes written by hand and lost to time can now be analyzed and restored using the power of Dell AI, preserving memories and helping to write new ones.
What's inside your ETF? With EVHY, you know. Inside, you'll find thoughtful bond selection from fixed income specialists. EVHY, the symbol of high yield done right.
Emerging, practice within the industry, and one that is evolving very quickly. So it's also going to present risks that, other companies, how they use it and how they use large language models, and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
All right, let's get a view from the sell side with our top calls. These are the big movers on the back of analyst recommendations, and we start off with the firm. Goldman Sachs analyst Will Nance assuming coverage of the fintech company with a buy rating and a $42 target. Nance citing the company's differentiated underwriting and vast distribution network, which he says can support sustainable 15% plus growth merchandise volume growth. The shares higher by about 13.5% on the day. Next up, let's take a look at Carrier, the HVAC company, upgraded to buy over at Citi amid a transfer of analyst coverage. The new analyst saying Carrier has been morphing into a better business by leaning into high growth areas. That includes heat pumps that use electricity rather than oil and gas. He says this transition should be wrapped up heading into next year, leaving room for further upside in core markets. Those shares having a decent day, higher by about 3%. And finally, let's take a look at SiriusXM, raised to in line over at Evercore ISI. The view that the satellite radio company's in-car subscriber base can stabilize in 2025. The analyst sees improving fundamentals driven by a recovery in used car sales and fresh distribution deals with EV makers. Investors, though, not really liking it today, down about 7% on the shares, 273 and change right now on Sirius. Those are some of our top calls as we stick in the consumer space right now and take a closer look at movies and the box office. A net positive for movie theater operator Cinemark. That's according to Roth MKM. It upgraded the stock to buy from neutral. The man behind that call joining us right now, Eric Handler, media and entertainment analyst over at Roth MKM. Eric, we've all know the movie theaters have been struggling a bit even prior to the pandemic. The pandemic looked like it was going to kill them off, but we've had some big releases this year already, including Inside Out 2 a couple weeks ago. That seems to show there's still an appetite for folks to get back into the theater. Is there going to be something there for them to see?
I think the worst of Hollywood's impact from last year's strike is over. We're going to start seeing a bigger slate of films starting in the second half of the year. We're getting a really good start right now with Inside Out 2, but we'll start next third quarter with Despicable Me 4, then go to Twisters, then go to Deadpool and Wolverine, and then we look into the fourth quarter, and fourth quarter is loaded with a Joker sequel, Venom sequel, Moana 2, Mufasa. There's a lot there, and then that sets the stage for what should be a very strong 2-year content cycle in 25 and 26.
Well, a question on that. I hear a lot of sequels in there, and I know this is kind of the Hollywood formula right now, is that once they find something that works, just milk it and milk it. But it also raises a question, Eric, as to why should I go the first weekend or the second weekend to go see this movie instead of waiting, I don't know, a month or so to when it's going to come out on the streaming services? Is there enough incentive to go out and do that?
Movies can still create a lot of water cooler buzz. And so for that reason, people do. There's excitement around these movies, and there's good advertising around them. People want to be there for opening weekend and then talk about them on social media and the water cooler. And, it creates a lot of excitement. So, people still, you can't Netflix and chill 52 weekends a year. And people want to get out of the house. And movies is still a very relatively low-cost form of entertainment.
Yeah, you haven't met my uncle, Eric. He's been Netflixing and chilling for like the last, 52 years, but that's a whole nother conversation.
I will definitely be calling out sick when Deadpool Wolverine comes out. Let's just be clear and put that out there altogether. But, Eric, is it just Cinemark that's going to benefit? Are you going to upgrade all its peers? Like, are there the good and the bad movie chains?
Well, I still like IMAX a lot. IMAX is very different. They're not a theater chain. They're an entertainment technology platform, and it's a global play on the blockbuster movies. I do have a sell on AMC, but that's really more of a balance sheet, lack of cash flow issue. Mm-hmm. So you're a bit limited in your options right now. So Cinemark and IMAX, I think, are the best ways to play the box office.
Do you feel like we're really going to start to see the stocks move like next year or the end of this year? Like when's that turning point going to be, considering all the movies that are coming out?
I think investors have these stocks on their radar screens now, and they tend to move ahead of the actual box office moves, and people are positioning themselves now. And both Cinemark and IMAX I view as very inexpensive names. Cinemark, I pointed out today, is trading at less than 6 times next year's adjusted EBITDA. Historically, these stocks trade anywhere from 5.5 to 9 times. So still on the lower half of the range. And it's more for Cinemark, it's more than just the box office too. Next year, there's going to be a deleveraging play. They're going to pay off their convertible note in cash. That'll take their leverage, their total debt back down to pre-pandemic levels, and net leverage to about 2 times. And from there, I think they reinstate capital returns, bring back a dividend, maybe even have share buybacks.
All right, Eric, thanks a lot. We appreciate it. Eric Handler over at Roth MKM. So I guess, Romain, you won't be participating in the movie move.
No, I mean, look, I get. I mean, you're a parent, so sometimes you get dragged to things that you don't necessarily want to go to. But I don't know. It's a lot of sequels, and I guess I kind of like more original stuff. And I get it. Everyone loves Deadpool 2 and whatever else. I forgot all the other Twister. They're making another Twister.
Deadpool 3. Okay, it's Deadpool.
Oh my gosh, she's gonna kill me.
It's Deadpool. Deadpool 2. And then Deadpool Wolverine.
Deadpool Wolverine. And now, are they fighting each other or are they friends? How is it?
They're frenemies. They went back and they cleaned up the timeline at the end of Deadpool 2, and now they're going to be frenemies.
So now they're kind of working together, but just like begrudgingly or something like that?
Yeah, I mean, there'll be some violence between the two of them, and then they'll come together. I mean, we know this, right, people? All right, coming up, Rashir Sharma is chairman of Rockefeller International and founder and CIO of Breakout Capital. His insights on the U.S. elections, should they affect the markets? And how do you think about that headed into the debate this week? This is The Close on Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That could also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know the areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. Taking a look at the markets, it's going to be an interesting wrap-up of the second quarter. It feels like volume's light, the NASDAQ getting hit, but other than that,
Yeah.
I'm a nothing burger, except Nvidia, obviously.
A little bit. I mean, maybe we are starting to get a little bit of that rotation that everybody says we should have gotten a while ago. They're broadening out of their rally, leaving Nvidia behind with, basically to nurse its, still 150% gain on the year. But, this is, I think, what a lot of people thought could be healthy for the market. And the problem, though, is when you look out forward over the next, 6 months, there are a lot of potential catalysts that could actually knock this rally off its
Exactly. And one of them could actually be this week. And the U.S. election obviously heating up. One of the main events in politics this week is President Joe Biden and Donald Trump debating on Thursday. The first debate attracted in 2020 about 73.1 million viewers, making the third most watched presidential debate in television history. Do you watch this time? Are you going to watch this time?
Every time these come up, I always say, no, I'm not going to watch. And then I always do.
And then you do. And then you're like, I got to do it for work. And then you do. And then you get sucked in. Well, Ruchir Sharma is chairman of Rockefeller International and founder and CIO of Breakout Capital. He also has a new book out called What Is Wrong? What Went Wrong with Capitalism? Ruchir, it's good to see you. Thank you for joining us.
Thanks, Alex, for having me back.
So can you just help me understand how markets should be looking at the U.S. presidential election?
Well, the markets are broadly ignoring it, I think, for two reasons. One, that they know pretty much what Biden's going to do. And two, as far as Trump is concerned, it is so unpredictable that the market's almost not focusing on it. And I think for possibly the right reason, because one of the themes that I argue in my book as well is the fact that if you look at Trump's previous track record, on some of the key issues in terms of what he said and what he did, was so different. Like, you know, one of the big issues I have with capitalism today is the amount of regulation that this country faces. Trump promised that when he'd come to power, he'd bring down the regulatory state. Said for every two regulations, for every regulation that I put into place, 2 regulations would go out. What was the track record? The track record was that in his 4 years, he put in as many regulations as Obama or Clinton before him, which is basically an average of 3,000 new regulations a year. So I think that is one of the fundamental problems of America today. The regulatory state has grown so much, such a complex tax code we have got. For every new regulation that you put in, you get thousands of pages of further clarification. And the other issue for America today, obviously, is the debt and deficits. Now, both these leaders don't have any plan to address that. And you have their key supporters who are telling them on both sides that debt and deficits don't really matter. People have been crying wolf on this for such a long period of time. We've had the clocks go up on Times Square. These things don't matter.
Well, that's the thing, is it feels like no matter who wins, 2 things might be the same. The fiscal deficit is going to continue to grow.
Yes.
And there's going to be harsh policies against China.
Yes.
Is that fair? Like, those are like constants no matter who's in the White House?
Yes, but I think that the deeper problem, as I said, is the fact that no one is addressing what the core issues are. That capitalism somewhere has gone off the rails. This is not the system that they had in mind. So, but you're completely correct that in terms of that, for people to get more economic freedom, to deal with the issues of inequality, I don't think any of this is going to be fundamentally addressed by either of the leaders, even though there's a lot of talk about it. Someone wants to put a billionaire tax. Someone wants to, do that. None of this is really practical. So I think that that's why the markets have been so oblivious almost of the political debate in America.
But it's just getting this sort of winding the knot even tighter. We talk about the rise of Trump back in 2015, 2016. He rode that wave of discontent with capitalism, or at least the current state of democracy and the way it was structured. Now, he may have not offered a solution for that, but people saw a solution in him. We saw a similar thing overseas in the UK and Brexit. Now we have another election coming up there next week. We saw a similar thing going on in Western Europe, and now we have another election happening in 2 weeks over there that are ostensibly not just about the men currently in office, but it's essentially about the previous 30, 40, 50 years of post-World War economic policies.
Absolutely. So that's correct. And I've traced that in the book, as you know, which is the fact that in the last 30 to 40 years, you've seen a secular decline in the approval ratings of leaders around the world, in the Western world in particular. So people are unhappy, and each leader who comes to office gets more and more unpopular, and the probability of the incumbent winning a re-election keeps going down. Like in places like America or much of the Western world, if you were the incumbent or the leader in office, the probability of you winning the next election was pretty high. I mean, at times 70, 80%. That probability has now come below 50%. So it's almost being in office is a disadvantage. And I think that that's why we're seeing so many leaders around the world be unpopular and so many of them lose election. And even that's why today, even though so many people say, oh, under Biden, the economy is done okay, it's growing at 2 to 3%. But most Americans still feel that the economy is moving in the wrong direction.
But what's the solution? I mean, you have a book saying what went wrong with capitalism, but to kind of quote one of my favorite sports analysts, someone says we need to replace this quarterback or that, the question is always with who. So it's easy to say capitalism might be flawed, maybe even broken. But is there something out there, a system out there that could replace it, that would address some of those issues?
No, but what I say in the book very clearly, Romain, is that capitalism did not fail, it was ruined. And what ruined capitalism over the last 30, 40 years is that it's become socialized risk. The risk has totally been socialized, and the people who are most advantaged by this system are typically the rich, which is that you have this culture of bailouts which has come into this country, where everyone thinks that they deserve a bailout. You have this incredible regulatory hegemony, and that is facilitated a lot in terms of by big businesses. Because when you have regulations that come into place, who benefits? It's the entrenched, it's the big businesses, the big tech companies, they have their lobbyists, so they're the ones who benefit the most from this system.
Has that shown up in the numbers in terms of like new business careers? I've heard this narrative before that the incumbents now are so entrenched that it's actually tamped down new business creation.
Yes, if you look at the number of new startups, last 30 to 40 years in America, it's been declining. Now, after the pandemic, we saw a bit of an increase because there was an artificial closure of some businesses and some new openings. But generally, the trend in new startups in America has been in a 30, 40-year decline. And in America today, the economic and social mobility is at record lows. So there's a feeling out here that there is not an equality of opportunity. See, under capitalism, there was always going to be inequality. But the inequality was supposed to be due to meritocracy. And that was okay by most people. Now there's a feeling that there is an inequality of opportunity because the entrenched and the existing people have such an advantage given the capitalist system being distorted today that new businesses being created, the small and medium-sized businesses, they find it very difficult to thrive in this sort of environment, and the average employee feels suffocated. As a detail in the book, there are so many towns in America today dominated by just one company. And then when it's dominated by one company, then the average person virtually has no bargaining power. And so these are some of the deep fundamental issues. And over the last 100 years, as I said, progressively with each decade, these issues have got exacerbated.
All right, Ruchir, you're going to have to leave it there. Ruchir Sharma, he has a new book out called What Went Wrong with Capitalism, chairman of Rockefeller International and CIO over at Breakout. Yeah, this raises a lot of questions. I don't know, I mean, obviously this isn't going to be solved in our election in November, but it gets to the question, how much longer can we go like this before, I don't know, we just really just go off the rails in terms of who we vote for and why?
I have to feel like writing that book, Ruchir, must have been pretty bumming. That must have been really hard to write a book about how everything was going really wrong.
But as I said, that the first step to a cure is to diagnose the problem.
Sure.
So that's what I've tried to do, and more than anything else, it's an ode to capitalism, saying that if you give people economic freedom, and I have a whole chapter on that, capitalism works in those countries.
Yeah.
If you give people economic freedom, but if you take away their economic freedom, you have a very distorted form of capitalism now.
So at least the acknowledgement is the first step to recovery.
All right, well said. Ruchir Sharma there, helping us count you down to the close, a broader look here, what's going on in the world, a more narrower look coming up after the break, a look at crypto. The losses continuing, Bitcoin dipping below 60,000 for the first time since May. It's part of our Stock of the Hour. Coming up next on The Close on Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
Top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges.
Britain's next. It was going to keep Green World Cup. This is a threat
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
This is Bloomberg.
All right, it's that time. Time now for our stock of the hour, and we're looking at multiple stocks. Watching the digital token stocks having one of their worst weeks so far this year. That includes names like Marathon, Coinbase, and the others here. A lot of cracks right now in the crypto space. Bitcoin dipping below 60,000 for the first time since May. Abigail Doolittle joining us right now to talk a little bit more about this. 59,000 and change here. I don't know. We came off that halving in April, and everybody said we were just going to see, Bitcoin go to the moon, but looks like a lot of that got priced in prior to that.
Yes, I think so. We're also in a range. So the sellers were up there around $70,000, and they did what they have done many times, with not including just this year, but going back, they sold Bitcoin down. So now we're at the bottom of the range. Below 60,000 puts the pressure on 56,500. If below that level, we are very likely to see.
That's the technical level.
That's just the technical level. So if below that level, the sellers are likely to let this thing really drop down to, let's call it 40,000. Now, the reason that's interesting is that's actually the exact level of where an uptrend is for Bitcoin. So when you have two different levels that are coming from separate ways of looking at the chart, it tends to confirm it. You also have the weekly RSI rounding down, telling you that the momentum is not very good. Now, there is an off chance that we'll see Bitcoin go back up into the range, make another try at 70,000. But I would say at some point this year, we're going to see a move down toward that long-term uptrend. Let's call it 40,000. And something that I think is really interesting here is that if Bitcoin doesn't really have big fundamentals outside of the halving, we can look at it as a barometer for risk on, risk off. If the VIX is quote unquote broken, some people have done this. This suggests that we are very uncertain, which is not surprising given the geopolitical situation, the uncertainty around the economy, and also politics and the presidential election.
And also, we have Nvidia down too, and I'm wondering how much of that is going to be end of quarter rebalancing, like winners, you're going to sell some winners, etc. Like, what do you think about that?
It's interesting because the thing that I think about with Nvidia and Bitcoin, a few years ago, Nvidia, its first big climb up was actually on Bitcoin because a lot of those chips were being used for mining, but then that focus went away and the focus went into AI, obviously. But I would say the correlation, the directional correlation is really pretty incredible on these two. They've been in lockstep with each other up until just recently, where Nvidia has continued to go sky high, but Bitcoin has reversed, maybe suggesting that as a risk on, risk off barometer that we're going to see a reconnection, Nvidia follow Bitcoin lower. That is what it looks like to me. So I think that investors are just taking profits in these big rallies. I mean, this year alone, at the beginning of the year, out of the pandemic, we did have Nvidia up 21. So right now, Nvidia out of the pandemic lows up 2,100%. Right. Bitcoin up 1,000%. I think we're going to see that gap narrow based on all of the past history.
All right, Abigail, thanks a lot. Really appreciate Abigail Doolittle joining us there on Bitcoin. What's also interesting, though, Romain, is that if you take a look at, say, Nvidia, you have Micron, though, still up, getting an upgrade. Then you have IBM also. It's sort of like IBM, Big Blue.
Yeah, I think everyone's trying to figure out, like, somebody else has got to benefit from this. And I guess people, I don't know, I feel like this is just kind of throwing, spaghetti at the wall or whatever and seeing what
Or a dart at a board.
Or a dart at a board or something. Remember those old days, like when we would have these bull market runs, and then I wasn't the Journal where they got like a chimp or something to throw like its fifis or something at the Wall Street Journal and the stock. Those are the good old days.
Cool. Okay, on that note, we're going to count you down to the closing bells with Ed Klissel, the Chief U.S. Strategist at Ned Davis Research. This is Bloomberg.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Is your cell phone working?
Yeah, he's super nice.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories, and bring your truck to life. Real truck.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is a pretty robust market environment that we've been through. Our approach has been remain diligent in rebalancing your portfolio. When these particular stocks are up a lot and the rest of the market is not, there is another 493 stocks in the S&P 500 that you should own a good portion of. Rebalance back into those, take the winnings, push into the ones that have been lagging behind, and know that market naturally rebalances over time.
Jason Pride, the Chief of Investment Strategy over at Glenmead, helping to kick us off to the close just about an hour ago. Romain Bosticure alongside Alex Steele. A mixed day here in the market with the S&P and NASDAQ deep in the red, the drag of Nvidia.
Yeah, hence like the rebalancing comment that Jason was talking about. But funnily enough, you have Nvidia getting hit, which is bringing down the tech index. But then like IBM is up 2%, right? Micron getting an upgrade also. Goldman Sachs having a $200 price target now on IBM. So it keeps making me think, is it a rotation underneath the surface or just a one-time rebalancing at the end of the quarter?
Yeah, I mean, I want to believe that this is a real rotation, but I also feel like we had this conversation maybe, 3 or 4 months ago. And then, of course, within like 2 weeks, everyone was right back in Nvidia, Microsoft, and everything else here. Let's pose that question to our next guest as we move closer to the closing bells. Just about 9 minutes to go. Ed Clissold joining us. He's the Chief U.S. Strategist over at Ned Davis Research. And Ed, maybe you can kind of give us some of that research. You're always good at kind of these historic narratives and historic parallels details here. When you look at sort of the market breadth, or I guess maybe still lack of it, as we head towards the end of this quarter, is some of the price action that we've been seeing over the last few days and weeks, is that indicative of a real rotation, or is everyone just kind of getting their books in order, taking their profits, and then once July comes back around or whenever they're ready to invest, it's all back into Nvidia and big tech?
Well, yeah. Hey, Romain. Yeah, the story of this year has been one where these rotations have not lasted all that long. But if you take a step back a little bit further, go back to the start of this bull market that started in the fourth quarter of 2022, you have had a few of these that have lasted a little bit longer. And what it's done from a technical perspective is that it hasn't allowed the market to get too narrow. What a technical analyst would not like to see is these, 5 to 7 stocks dominate for so long that, say, only 40% of stocks are above their 200-day moving averages. That's what happened in 2000. Instead, what we've seen is that most stocks have remained in long-term uptrends. For example, about 64% of stocks right now are above their 200-day moving averages. That's pretty healthy. So to get a period of rotation back and forth that lasts a few weeks is good enough to keep the long-term technicals healthy, and that's what we'd like to see for the bull market to continue.
What's the biggest risk right now that you see out for the rest of the year?
Yeah, so if I were to categorize the risk, I think that really more on the macro front, the Fed is trying to thread the needle. We think they are going to be able to do it. They're going to cut rates once this year, starting in December, and maybe a couple more times next year. But if inflation remains too sticky, they're not going to be able to do that. And on the other side of the coin, they have to make sure that the economy, which is still trying to get through some of those tertiary effects from COVID, doesn't weaken too much. So I think that's top of our list. We have some other concerns, but I'd focus on the macro for the major concerns.
Bringing up the macro, Ed, Morgan Stanley, Mike Wilson was talking about the risk now, and the risk is like focusing on growth versus inflation, and that means you're going to still want high-quality large cap and not the risky small caps. I put that question to Jason Pride. He was like, nope, I like the small guys. What about you?
Yeah, so if you have a little bit of a longer-term view, I'd focus on the larger names, which is where we are. Again, you're going to get rotation here and there. I think the best opportunity for small caps is going to come when they actually start to cut rates. So if you look at what's happened historically, the Russell 2000 has outperformed the Russell 1000, but not until the Fed cuts. And going into it, it's still large caps, especially what we call a slow cycle, when the Fed is cutting about every other meeting or even less often than that, because that means the economy is doing well. The Fed can afford to go slowly. So you get good economic growth, but some lower rates, and that tends to be great for small caps. So that's probably the best window for small cap outperformance, which we think is going to be a few more months down the road.
So then I guess what the underperformance looks like until then, particularly on Friday when we get the rebalancing and you have the guys like Supermicro going into the Russell 1000 and out of the Russell 2000, which some are saying is going to make that gap with the S&P even wider. What kind of underperformance do we see until we get that catalyst you're talking about?
Yeah, I think it can be several percentage points, enough to where if you want to make a tactical allocation move, it's going to be worth it to go ahead and have that large cap balance. And I'd also remind you that it used to be fairly common. By the time we got to June, there were several stocks that were in the Russell 2000 and the S&P 500 because these small companies had grown so much and they graduated. It's just over the past 10, 15 years, that's been rare because companies stay private longer. They come public as a mid cap or a large cap, or they get gobbled up and by a large cap company before they even come public. And so that's the real challenge for small cap indices like the Russell 2000, to a lesser extent the S&P 600, is that there just aren't those great growth companies that are sitting in the small cap world to justify owning those indices over the large caps.
It gets to a question also, Ed, just about kind of the supply of new issuance and the lack thereof here. The idea here is that you've had, at least in terms of the total sort of number of investable names out there, that's kind of been stagnant for a few years. Is that now really starting to sort of assert itself? Is maybe that an explanation for why we do see a little bit more crowding in some of the big names?
Yeah, I really think it is. So if you look at, say, the Russell 2000, I'm sure a lot of people have seen the stats. About 40% of those companies are unprofitable. And the reason is that, say, 25 years ago, there were almost 9,000 publicly traded companies. So the smallest stock in the Russell 2000 was still in the top maybe third of all publicly traded companies. Now there's about 5,000 publicly traded companies, and a lot of them aren't even operating companies. They're SPACs or something like that. And so the bottom half of the Russell 2000 are things that aren't really institutionally investable companies, and that's part of the challenge here. So ironically, I think what may happen, this may take a few years to unfold, but if rates stay high, so if you're a company that's looking to go public, think, well, do I go with debt or do I go with equity? Right now, debt has been a cheaper cost of capital. It may become more attractive at higher rates to just go ahead and go public, and that may be when small caps become more attractive. So it's going to take a while for that to play out. You got the private equity space that is dominating that. So there's a little ways to go, but I think that the unattractiveness of going public is part of small cap problem.
All right, I'm going to have to leave it there. Great stuff. Ed Klissel, Chief U.S. Strategist over at Ned Davis Research, helping us count down to those closing bells. Just about 2.5 minutes until we get there, Alex, with the S&P now and the NASDAQ hitting fresh session lows.
Yep, but the Dow is still outperforming on that level. Mary Daly was talking earlier. Did you see this one that the labor market is nearing an inflection point?
Yeah.
And if kind of things get worse, it could mean higher unemployment. And I wonder if it's the growth story now.
Yeah, it's kind of interesting, too, how this market kind of wants to divorce itself from the economics. But at some point, that's going to converge once again, and I'm not necessarily sure for the better. As we move closer to these closing bells, an eye on the markets, an eye on all assets, full coverage starting right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele to take you through the closing bell. And it's our global simulcast. It begins right now. Scarlet Fu joining us in the TV studio. Carol Massar lost in space along with Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms. Carol Massar here on this Monday afternoon.
Can we do like the debate on Thursday? Can we just shut off your mic? Can we do that?
Oh, Carol. She's coming in hot on this Monday afternoon.
What's wrong with her?
That was mean.
That was mean?
Yeah, he was saying Lost in Space because I think you said Danger Will Robinson earlier.
Oh, is that what you said?
From our
were you actually listening?
Romaine watches.
I used to listen to your show, but after today.
Romaine watches, he listens. Is that what you said, Danger Will Robinson?
I did. Well, I'm really charmed that that was, okay. All right, I take it back. All right, let's talk a little bit about markets. Some outperformance, a little focus here. Banking stocks actually outperforming the broader trade here, up about 1.7%. You guys saw that story about folks in the know saying the Fed has shown some regulators maybe some changes to the bank capital overhaul. So maybe it could be a little bit more positive to banks. But banks have really been up, I think, most of this session here.
Look, I can't go any further without talking about
I'm trying to come back here. That
Nvidia.
Was hard.
It's just down 6.66%, down more than 12% over the last 3 days. Interestingly enough, not dragging down the entire index, although the NASDAQ kind of getting pummeled. But the S&P 500 only down 0.2%.
That may be the case right now, but you wonder what's really going to be the catalyst this week. I mean, we know PCE on Friday, but until then, it feels a little bit like we're just kind of drifting.
As we get the closing bells here in New York, some weird price action here on the day as you're seeing some of the transports, industrials, and cyclical names get a bid while everything else, I don't know, kind of is on the back foot. The Dow Jones Industrial Average higher by about 260 points, roughly 0.7%, right around that 39,400 mark. The S&P 500 is going to close in the red, only down about 0.3%. Obviously, a big drag today coming from Nvidia and a couple of the other big tech companies, including Amazon, Broadcom, and Microsoft. The NASDAQ also feeling the pain from those same names, lower by about 1% on the day. And the Russell 2000, a relatively decent bid here on the day, decent outperformance, up 0.4% here on the day.
All right, Romaine, so let's get to the S&P 500 a little bit more. Most names, surprisingly, actually gaining ground today, 353, 147 to the downside, 3 unchanged, even despite what I would call a meh trade here, Scarlett, on this Monday.
Yeah, I'm looking at the sector performances, and 9 out of 11 groups are in the green. Now, It doesn't look that way on this IMAP because tech, which is the biggest sector in the S&P 500, is down by more than 2%, thanks to weakness in Supermicro, Computer, and Nvidia. On the flip side, the biggest gainers, energy. You have all 22 energy names in the S&P 500 gaining as oil prices rebound. Utilities and consumer staples also doing at least better than 1%.
All right, Scarlett, let's get to some of the individual gainers. Kind of a mixed bag for me. ALNY, Alnylam Pharmaceuticals, really an outperformer in today's session, up about 34%. This is after one of its drugs succeeded in treating a progressive and deadly form of heart disease, potentially opening up a new avenue for the company's top-selling products. So this was certainly a big gainer in today's session. Cocoa prices easing, slumping the lowest in about a month. Some favorable weather in West Africa boosting the supply outlook amid thin trading. So you had names like Hershey up about 2.9% in today's session. You had Mondelez up about 2.9%. So some outperformance in those names. And here's another one we don't necessarily talk a lot about, RXO. This one was up about 23% in today's session. The trucking company agreed to buy UPS's asset-light freight brokerage business, Coyote Logistics, for more than $1 billion in a deal that adds scale, according to analysts. So that was an outperformer in today's session.
Okay, you got the gainers. I got the decliners. I do want to start with shares of Nvidia. They fell 6.7%, closing with the biggest drop in 2 months, down for a third day in a row. Over that 3